President Donald Trump continues to threaten fresh tariffs. Crude prices rise, with Brent rising above $76 a barrel. Apollo Hospital's third quarter revenue meets expectations, but profit beats estimates as margins improve. Gresham delivers a weak third quarter led by lower profitability in the VSF business. Eicher Motors numbers also miss estimates as margin hits a 7-quarter low. U.S. President Donald Trump's top economic advisor, Kevin Hess, criticizes India's tariff, describing them to be enormously high and restrictive to imports. Speaking to CNBC-TV18, he also said that these tariffs will be a major issue to be addressed when Prime Minister Modi and President Donald Trump meet later this week. Prime Minister Narendra Modi meets French President Macron in Paris ahead of chairing a global AI summit. At a state dinner, Prime Minister also meets U.S. Vice President J.D. Vance. Hello, good morning. You've tuned into CNBC TV18. You're watching Power Breakfast with me, Vinny Motiwala. A quick look at what the markets are doing this morning. Now, what we have is the Asian market handover. Seems like it's a bit of a positive start that's coming for the Asian markets. Look at the Taiwan index holding on to gains of 0.7%. Hang Seng is managing to hold on to good gains as well. So overall, we've seen that the Asian markets have managed to open on that positive front, given that US markets also and the European markets managed to close on the positive side. When you're looking at it, ASX 200 is also opened on the positive side. Nikkei is also holding on to gains. Shanghai a bit subdued, but most of the Asian markets opening on the positive front. Nifty implied open as of now is indicating a bit of a green start, 26 points uptick. But will that sustain is something that we're watching out for, because yesterday did open on the higher note and then the markets ended up closing on a subdued note, almost at the day's low. But yes, that's how the Asian markets have opened. Indian markets indicating a bit of a positive start for the markets as of now. US markets, let's look at that as well. Wall Street, that ended higher, with Nasdaq surging almost 1% as traders looked past the US tariff threat from President Donald Trump. We have CNBC's Bertha Coombs, who's getting us a wrap on what happened on Wall Street.
U.S. markets were up across the major indexes Monday as investors seemed to shrug off President Trump's threat of 25% tariffs on all steel and aluminum imports. The Dow added 167 points. The S&P 500 was up 40, while the tech-heavy Nasdaq gained 191. Shares of McDonald's were up about 5%, despite disappointing revenue for its fourth quarter. The fast food giant posted weaker than expected sales at U.S. restaurants after an E. coli outbreak early in the quarter dampened customer traffic. The company says traffic has rebounded, but customers were spending less than usual. There was one bright spot: overseas growth, which came in much stronger than expected. And President Trump says he is ordering the Treasury Department to stop minting new pennies because they cost more to make than they're worth. The U.S. Mint lost $85 million over the past year on the nearly 3.2 billion pennies that it produced. It cost nearly 4 cents to make and distribute each coin, partly due to rising prices of zinc and copper. But it's unclear whether the president actually has the power to eliminate the penny, because the size and metal content of coins is dictated by Congress. That's what's happening here in the U.S. Back to you in Mumbai.
Thanks for that. But staying with the Wall Street, let's in fact listen in to Bob Dole, the CEO and CIO of Crossmark Global Investment, and what he has to say on his investment ideas currently.
Value over growth. I think you have to own some of the mega cap stocks, the Mag 7, but I think you should own less today than you owned a year ago, and do some bargain hunting in areas that have lagged. Look how well healthcare is done. Staples will get a run at some point in time. The energy stocks have done well year to date. So it's not the same game as it was last year or the year before.
Okay, that's all the global market action that we have for you all this morning. But how is all that going to be impacting our Indian markets? We have a team of research joining in with us this morning to set you up for trade, tell you which are the important stocks to watch out for, as well as the FNOQs to watch out for. We have Abhishek as well as Sudarshan joining in with us. Good morning, Abhishek and Sudarshan. Before I come to you all, let me start with what is the trade setup looking like for the markets today. Now, obviously, yesterday we saw that the market was slipped for the fourth straight session, longest losing streak in almost 2 months. Nifty Metal Index, that was a top sectoral loser, 3% fall that came in for the Nifty Metal Index, mainly because of the tariffs that were indicated by President Donald Trump, fresh tariffs on imported steel as well as aluminum, causing a bit of a concern. So Nifty Metal we saw yesterday closing with a decline of almost 2.6%. Mid and small cap, that also saw an underperformance coming in and a sharp fall for the Nifty mid cap as well as the small cap in yesterday's trading session. FIIs continues to sell. They have sold almost 2,464 crores in yesterday's session. What we're watching out for today and going to be key is obviously earnings movers. So keep an eye out on that. We have earnings also coming in from Berger, Lupin as well as Sale, and other important companies are going to be there. No Nifty companies today though. Trump tariff, that continues to be a focus. Anything that comes in from President Donald Trump is key to watch out for on the tariff front. Prime Minister Modi's visit, that's going to be important, in France that we're seeing updates coming in as well as now in the US. So keep an eye out on any updates on that front in terms of trades or any talks on that front is key, as well as FII selling. Is that going to be continuing is a key factor to watch out for. As of now, Nifty implied open is indicating a positive start, but is that going to be sustaining mild positive, like just 17 points up is Nifty implied open? What's going to be the outlook going forward, and will the Nifty manage to go past those levels of 23,400 today is key to watch out for. But yes, that's how the market setup is looking like. But which are the important stocks that you should be keeping on your radar today? We have Abhishek for that. Good morning, Abhishek.
Good morning, Vinny. So, Hindalco will be in focus. Novelis numbers have come down, which is adjusted EBITDA is down about 19% YOY and 20.5% sequentially. Even the rolled product shipments are down about 4.3% sequentially. So, adjusted EBITDA per ton is down 18.5% YOY and 17% sequentially. Eicher Motors numbers have come out. The revenue and PAT is below ARPOL. Apollo Hospitals revenue almost in line with ARPOL. PAT is ahead of ARPOL. ISAF SFB, the annualized slippage ratio continues to remain elevated at about 10.5% for them. So they have, or they are the only lenders to report a net loss in this quarter as well as previous quarter. So net loss momentum continues for them. Grasim revenue is, below ARPOL. However, net loss is also ahead of ARPOL at 169 crore versus 74 crore loss that we were estimating. Ashoka Bilcon, the revenue is down 10%. However, the margins have expanded to 26.8% versus 22.5% on a YOY basis. Force Motor revenue is up 11.7% YOY. However, net profit is up 35% YOY. Nalco revenue is up almost 40%, that is 39.3% on a YOY basis, and the margins have more than doubled to 49.9% versus 23.1% in the same quarter last year. Back to you.
Okay, Abhishek, thank you so much for that. But now over to you, Sudarshan. What is the cues that you're picking up this morning in the world of FNO? What are we watching out for there? Good morning.
Good morning, Vinny. So amidst the weakness in market, we saw Sensex and Nifty falling for fourth straight day, biggest or longest losing streak that we have seen in last 2 months. But major fall was seen in broader markets. We saw small cap index and mid cap index, both these indices falling more than 2% each. Now for today, GIFT Nifty is indicating a flat start or say with minor gains. Talking about the flows, FIs continue to sell. Yesterday, they have sold more than rupees 2,400 crore in the cash market, while DIs have bought more than rupees 1,500 crore. In the index futures too, FIs have sold more than rupees 1,800 crore, and they have reduced long positions by 1,500 contracts and added short positions by 9,500 contracts. In the index option, they have bought, but again in the stock futures, they have sold around rupees 2,000 crore. With this, FI's long exposure now reduced to 15%, and on the client side, long exposure remains healthy at 72%. On the option front, 23,700 call and 23,400 call have seen healthy additions of shares around 32 lakhs to 34 lakhs. And on the put side, 23,100 put has seen addition of nearly 27 lakh shares, and 23,400 put has seen addition of almost 14 lakh shares. Important levels for Nifty, support remains around 23,200, that is intraday low of last week, and resistance is now at 23,750, that is also 50-day moving average. Stocks in focus, one stock is Trent. it's trading a very important level. Remember, in July 2024, after Q2 earnings, stock had jumped and had gained almost 7%. So from the level that it had gained, it's trading around those levels. And second is ONGC. I've taken this stock because overnight there's a sharp move in crude. It was up around 2%. That's the reason I've taken ONGC.
Okay, so Darshan, surely we'll keep an eye out on these two important names, Trent as well as ONGC in the world of FNO. But on that note, we're going to slip into a very short break. And after the break, we'll get to the latest from PM Modi's two-day visit to France. Stay tuned for that.
Gold, does it indicate a renewed search for an alternative international settlement mechanism, de-horse the dollar? That's my question to the Minister.
So the Honourable Member, has he himself mentioned that it is not the core part of the question, but he's still asking, and I would certainly like to give my brief answer on it. India's, as he observed rightly, the demand for gold in India has not come down. On the contrary, it's going up. And I would think it is very typical of India, particularly for households or small businesses, and it is normally said women, but general households also and women also, to invest in gold because they think it's far more secure and far more liquid, and therefore as an asset class, we see that sustained interest in it by the households and small businesses as much as women of India. But beyond that, of course, the Reserve Bank also is buying gold to make sure that it has adequate reserves of gold and not just a basket of currencies. And in that, one of the currency which predominantly has been held by the Reserve Bank has been the US dollar. But we also have the reserve currencies in denominations of different denominations of other currencies as well. But the gold is also kept in the Reserve Bank, and gold is also being bought by Reserve Bank. But beyond that, as regards an international currency or potential currency, there's not much for me to comment at this stage.
Right now. So we thought this would be appropriate. Even bigger than the Super Bowl. This is a big thing.
Welcome back to Power Breakfast on CNBC-TV18. Now getting you some important updates from Prime Minister Narendra Modi's two-day bilateral visit to France. PM Modi met with the French President, Emmanuel Macron, and attended a dinner hosted by him before heading for discussions. In addition to strengthening bilateral relations, PM Modi's visit to France includes an extensive discussion with Macron on strategic cooperation, innovation, and artificial intelligence. The dinner was attended by other world leaders and business people as well. At the event, PM Modi also met with the US Vice President J.D. Vance for the first time. The Prime Minister's visit to France comes ahead of his trip to the United States on the 13th of February. Moving on, US President Donald Trump's top economic advisor, Kevin Hassett, in an interview to CNBC, has criticized India's tariffs, describing them as enormously high as well as restrictive to imports. Listen in to what he had to say on tariffs overall as well as specifically on India.
Talking specifically about tariffs, just recall that almost every trading partner has much higher tariffs than we do. In fact, the only trading partner that's about where we are, and there's Canada and Mexico who are part of the trade deal, but outside of that, the UK has about the same tariff we do. The EU it's 2 to 3% higher. Taiwan it's 10 or 11%, and India, and we're meeting Modi soon, has got a lot to talk about with the president because they have tariffs that I think the trade weighted average is a little bit short of 20. Now I'm running it out of my head, so don't give me a Pinocchio. But they have high rates that are enormously high. They're lockout rates, and so President Trump believes that at the very least everybody should agree that if they're charging us 20, then we should charge them 20, and then if they go down, we'll go down. But that's the idea of reciprocity in the tariff space.
Okay. On that note, we're actually going to slip into a very short break, but don't go anywhere. After the break, we'll get you what's happening in the world of commodities, so stay tuned in.
Almost everybody now has assented to that.
Attention on board. Ladies and gentlemen, if you could please direct your attention out the right side of the aircraft. Air Force One is currently in international waters, for the first time in history, flying over the recently renamed Gulf of America. Please enjoy the flight, and we are now about to head westbound to Super Bowl 59.
Thanks for staying tuned into Power Breakfast on CNBC TV18. Now let's move on. The centre's interest-free capex loan offers to state has witnessed a muted response in FY25. In a response to a question in the Parliament, the Finance Ministry said that only 27% of the approved 1.11 lakh crore rupees were spent by the state till 31st of January. Sapna Das is joining in with us now to give us those details. Sapna, what are you picking up here?
Absolutely. 1.22 lakh crore actually was the kind of amount that was approved by the Finance Ministry, out of which 1,10,000 odd crores was actually released to the states. And the numbers are right there before you. Under 30,000 crores of that has been utilized up till 31st Jan, which means that this data is as recent as just barely 10 to 11 days back. Now, with just 2 months remaining for the financial year to be over, I think this is going to be one of those years when the offtake in the state capex loans is going to be at its lowest point. In the last 3 to 4 years, we have not seen this kind of data. Having said that, among the states which have done the maximum utilization, for example, it's Uttar Pradesh. 10,000 odd crores were released, out of which over 50% has been utilized by UP. Rest, all the states are really, really lagging behind. The other aspect that we also need to keep in mind is that, the amount is actually larger. 1.22 lakh crore is what the government approved. What was released was 1.10 lakh crore, and what was finally utilized by the states is under 30,000 crores. But actually the pie is 1.50 lakh crore. That number is not really going to be met. Hence, if you look at the revised estimates of the current year's current year's budget, or rather the revised estimates for FY25, a 1 lakh crore cut has come in the overall state capex offtake, the kind of numbers that they're supposed to meet. So this is not a very good sign in the times to come. There are also lots of terms and conditions for the states to utilize a large part of these capex loans. For instance, 95,000 crores is actually tied up, linked to various kinds of reforms that they have to do. Apart from that, utilization certificates have to be given. Then, whatever is the pending interest that has been earned on some of the treasury accounts or other SN accounts, that has to be transferred back into the Consolidated Fund of India. So going forward, you have to wait and watch and see, how this really pans out. It was okay to say that Q1 was very slow in terms of capex because of general elections. That's right. But, these numbers at the state level are telling a different story, which we need to get to the bottom of.
Thank you so much for that, Sapna. But we do have Manisha who's joining with us to tell us what's happening in the world of commodities this morning. Good morning, Manisha.
Good morning, Vinny. And yet another day and another all-time high when it comes to gold prices. Now we are trading above $29, $30 an ounce as well. It was just last 1 month that we were trading at around $26.30. So we've seen $300 of a jump up coming in just about a month. Well, there's a lot of safe haven buying because of, one, easing monetary policy, global tariffs from US on aluminum and steel have taken case. And then the central bank buying has been on the stronger side as well. Also, China has been buying gold quite strongly. January is the third straight month where the central bank has continued to buy gold. It's not just gold. When you look at the silver prices, they are trading at a 4-month highs as well. You had crude prices gaining by 1.5% in the overnight markets as U.S. threatens to sanction individuals and tankers transporting Iran crude to China. And tariffs continue to weigh as well. So when you look at the markets, well, it's slightly jittery and the safe havens absolutely seem to be doing quite well.
Okay, Manisha, thank you so much for that. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Up next, Bazaar Morning Call.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Well, it's a Tuesday morning. Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Markets looking a little better overnight, but that tariff news flow still continues to come in thick and fast. I'm Prashant. With me, my colleagues, Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, folks. Yeah, I guess, apart from flows and earnings and everything else, it's just watching who's putting what tariff on whom and who's calling out what. And now India's in the mix because there were some statements last evening as well about how India has very high tariffs. So, yeah, those are the headlines.
Well, that's right. And in fact, I think tariffs and central bank action is going to be crucial to track from here on. So, hopefully, there is some kind of novelty and, hopefully things stabilize, because otherwise you don't want to wake up to uncertain news on a day-to-day basis. And clearly yesterday, our markets were spooked.
Spooked and how, right? Absolutely a smackdown. So, we'll have to start with tariff, not price action, because a lot of the news in terms of tariffs came after U.S. markets. And this is essentially, I'm starting with the 25% steel and aluminum tariffs, which President Trump, the U.S. President Trump, spoke about over the weekend. That's a reality now. He signed that order. So 25% tariffs on steel and aluminum imports from the 4th of March is what's come through. As we said yesterday, the countries more impacted are Mexico, Brazil, even countries like Korea, etc., but not too much. Nothing. Of course, there is some steel which goes from India as well, but nothing really. The implications not there. Now, meetings over the next 4 weeks, according to a White House official, are also going to be focusing on cars, pharma products, and chips. Not the eating variety, but semiconductor chips, right? Now, that's, of course, in the future. So it kind of leaves the door open. More and more, the realization is that with tariffs and, the Trump administration is not one and done. It's kind of going to be like this rolling thing. That's how the policy will be conducted on tariffs. A steady state of negotiations, some taken back, some put. So that's what we should expect. At least that's what we are seeing right now. Now, this is the comment which I think came this was a comment made to CNBC, our network. Now, Kevin Hassett is Trump's top economic advisor, and he said that India's enormously high tariffs block imports. And we were talking about this during closing bell, that this was older data, and we'll maybe put out some of those numbers as well. The new data, I've not seen new data, but this is older data. If you just look at, the average tariffs on U.S. imports into India and take a look at average tariffs that U.S. imposes on Indian imports, India, of course, stands out, along with a country like Thailand, which also stands out. And that is essentially what I think these comments really refer to. So, and I've been saying for the last few days, this is the reason why that meeting with Prime Minister Modi and President Trump, that's over Wednesday and Thursday, will be very, very important, because I think these things will come up. And of course, a lot of these comments, of course, are also being made ahead of that visit to put pressure that, well, it's a negotiating tactic as well, starting gambit in that sense. And then we'll see what really comes off there. Now, overnight, U.S. equities were higher. NASDAQ was up about 1%. Tech did well. The large cap Tesla, for example, was up about 3.5%. Dollar index absolutely flat, nothing, 108.35. I think the yields 10-year was absolutely unchanged as well. Oil prices went up 2%, $76 a barrel, and gold is what else but hit a new record high once again. This is Ukraine's envoy who said that they will present peace options to Trump in coming weeks. So there's been this Munich Security Conference, and there have been some people who've been saying that maybe a solution will be found there, will be announced this Friday to the Russia-Ukraine conflict. But we've not seen any proposals out there, at least in public, which seem to be acceptable to both sides. So how will this happen? So this comment should be read in that light. Just to tie in the levels here, it's been tough, and the market yesterday sort of came off pretty sharply. Now, the 20-day moving average was defended. We didn't break that, so 23,304 is that number. We left off at 23,381. So that's the first kind of downside level, which the market hopefully will not break. But if it goes a closing below the 20-day, which is 23,300 roughly, will open up downsides to the 23,176 level. That's a 61%, 61.8% retracement of the rise, number we put out yesterday as well, but didn't come into play, hopefully not. On the way up, the resistance is 23,700 to 23,800. This is the broad resistance zone from here, about 400 points away from where we left off. Nifty Bank closed lower yesterday, but relatively outperformed the Nifty. Support comes in at two levels, 49,703 and then 49,569. These are levels on the downside, and then it needs to break the recent high of 50,642 for we to be talking about higher kind of levels. So that's where we are at right now. I think with India, it's not just general tariff noise. There is India in the mix as well ahead. And of course, we've got this visit in the US. I think we'll hear more comments from US officials. I don't know if you hear something from our side, but I think that's going to be top of mind. And that's not just important for equities. It's important for the rupee, the currency as well, which of course did a big U-turn after hitting 88. It just completely reversed and recovered pretty much all the losses. So GIFT Nifty, quickly take a look at where that is at. It's about 16 odd points higher. So absolutely undecided what it wants to do this morning. Surabhi.
And Prashant, as if the tariff noise was not enough, there's Sam Altman and Mr. Musk. They're going at each other saying who's going to go out and buy X and who wants to buy OpenAI. So there's enough entertainment. And by the way, geopolitics, if that's your area of interest, that now there's a deadline on the release of hostages in Gaza. Mr. Trump has said that if it does not happen by Saturday, this Saturday, all hell will break loose. So, we're living in an extremely volatile environment at this point in time. On tariffs, let's get to the Asian market reaction. And the reaction is on the downside. There's a fair amount of caution in markets as we're taking a look around the region. So for the time being, most of the markets have a tinge of red. Hong Kong is down about 0.2% or so. Mainland Chinese markets are down a little more, 0.3% thereabouts. Singapore is also cooling off after its recent surge. Now, on tariffs, just a couple of points that, what are the numbers really saying? The numbers are interesting. It's not like steel imports in the US have surged and gone through the roof. The data that CNBC pulled out over the last decade shows that steel imports are actually lower. They're down about 35% between 2014 and 2024. On aluminum, maybe the concern is a little more real and genuine because aluminum imports have gone up by about 14-15% in that same period in the last one decade. Anyway, they've come through. So the key countries that get hit, again, Canada and Mexico this time around. So the biggest steel exporters to the US are Canada, Mexico, followed by Brazil, the top three. And for aluminum, it's Canada, UAE, and South Korea. So, then we talk about more Asian countries that get impacted. The fact is that, other markets like Vietnam, Japan, along with South Korea, obviously, have been exporting a lot of metals into the US. Now, Vietnam, the argument is always whether it's Vietnam, whether it's sort of Chinese metal being routed through Vietnam or whatnot. But anyway, these are the markets that, have reasons to worry. And that's one of the factors why in the currency markets, while, of course, the Canadian dollar has been quite slammed, the yen, from our Asian context, the yen has weakened a little bit against the dollar, as well as the dollar continues to rise higher. Now, that's the global backdrop. But again, the India-specific question here. This is all today's headline, but the Indian market was underperforming big time yesterday, even when other markets were actually holding their ground. Whether that gives us a bit of a leg up because we had our share of the correction yesterday or not, who knows? But the correction is of a very different nature. Highly valued, richly valued stocks are being sold like there's no tomorrow in the Indian market. There's a lot of unraveling in the mid-cap arena that we saw yesterday as well. And there is no let-up in the FPI selling as well. So we have our own set of issues and problems to go over aside of the tariff headlines. And FPI selling, the numbers are on your screen. Again, 2,460 odd crores of selling that happened from foreign institutions yesterday. Domestic institutions bought but didn't offset the entire number. 1,500 crores of buying coming in. Speaking of domestic institutions, today we will get the mutual fund monthly inflow number. Till now, that number has been that shining ray of hope for our market. Let's see what the numbers say. They'll be out somewhere between 12 and 2 p.m. this afternoon. So we'll keep an eye out on them as well. Lots of stocks in focus as we're in the fag end of earnings season. Just to quickly run through Apollo Hospitals, I thought let's start with the best because, hospitals have done well in this quarter and Apollo is no exception. Margins have gone up, revenues up 14%. Eicher Motors, I think we'll have to go into the details. It's a slightly mixed bag. Margins are under pressure for Eicher Motors year on year. The revenue's fine. Revenue's up 19-20%. Nalco and Hindalco, of course, we'll have Nigel tell us more, but it seems that those aside of what the numbers are doing, It's a lot of this tariff, talk, which perhaps is going to play a role in terms of sentiment. And Bata, consumer, we all know, absolutely flat. Nothing's happened for Bata in the quarter gone by. But there is a margin expansion. They've managed to somehow, boost margins. So let's see how the market will read into this. But I think to begin with, we have to get through, Nigel, this whole tariff talk, dollar, and the fact that our own market is falling under its own weight.
Well, that's right. Yesterday was a particularly disappointing trading session because we had reason to actually at least see a relative outperformance, but we underperformed yesterday. So that was a bit of a problem because we didn't go ahead and conquer the 23,800 mark, which we appear to have, got in our grasp in the last few trading sessions. One positive is the RBI, they are looking at liquidity and they're infusing more liquidity in the system because they have doubled the OMO purchases from around the 20,000 crores or to around 40,000 crores. That's positive. They indicated some measures could be coming, and that's one of them. So I'll keep banks, financial institutions as well on my radar. The next one is the Sensex weekly expiry plays out. So that's going to add some kind of volatility as well. We'll keep an eye out on that one. The FIs, what did they do yesterday? They added close to 10,000 short positions. And now, in fact, they have been taken their short positions to around the 1.7 lakh contracts on the short side. It came down to around 145,000 or thereabouts, and then it's increased yet again. If you pull up a chart, that'll tell you the picture out there. From around 150,000, it's gone back to the highest that we've seen in the recent past. And remember, at these levels, normally you see a bit of a turnaround. So we'll keep an eye out on this factor as well. This is one factor that the bulls will be betting on. The other factor is the PCR has come down to the lower end of the range. So normally at around 0.65, 0.7 is when you see a bit of a bounce in the markets. It's come down to around 0.75 odd because the call writing was very, very aggressive in yesterday's trading session. You had the 23,400 call that saw a big amount of open interest build up. The premium was there around 150 rupees. And the 23,100 put as well, fair bit of open interest build up out there. So going by the options data, on the upside, the 23,550 mark becomes the important resistance level, while on the downside, the 23,000 mark is what you're looking at. However, you don't want this 20 DMA to break. And yesterday's trading session, the one positive was we managed to defend that. So the structure of the market is a little bit weakish, but don't rule out a counter trend rally. Why is that? One is because of the FI net short positions. The PCR has come to the lower end of the range, and you have a crucial support zone as well at around the 20 DMA. The other levels that we are tracking, well, the recent lows are important. So that 49,800 mark becomes important to track on the downside. Otherwise, the risk is that we drift further down. So yesterday's session was a bit disappointing. The bulls will want to bounce back today. And there are some various factors that could support a bit of a bounce if we do move into the red. The 20 DMA, extremely important on the Nifty.
Absolutely. So let's see if we can, maintain some of these levels. Let's get started then. Now we've got the equity call coming in. Venugopal Gare of Bernstein believes that small and mid caps, especially small caps, see several risks that may cause further correction. He says as foreign outflows stop and domestic reallocation is behind, a recovery should emerge in the second half. However, he doesn't see a reason to actively bottom fish in small and mid caps right now. He says this reflected in their decision not to position a separate small and mid cap portfolio this year. He says the selective buy call on large caps stays. He adds that sharp corrections in small and mid caps, however, will likely offer opportunities to resurrect a dedicated strategy later this year. He says their view of macro bottoming and selective buys with positive returns for Nifty stays. He does not expect small and mid caps to outperform large caps.
So basically no hurry, and that's the essential point. So don't be in a hurry, go all in. And keep dry powder because opportunity, it's that kind of an year, at least it's turning out to be that kind of an year. The go-go phase seems to be now firmly behind us, especially in the broader markets. Well, Matt Orton is with us, Chief Market Strategist at Raymond James Investment. Matt, great to have you with us here on CNBC. Good morning. We have top people in the White House complaining about, and I quote, India's enormously high tariffs right before Prime Minister Modi visits the US. Posturing, or you think they will try and cut a deal? There will be pressure on duties, etc. What's your sense? How important is this going to be?
Hey, good morning, Prashant. Always great to join you. And I think this is definitely posturing. Trump has known about Indian tariffs for quite a while, and it's no surprise that Modi is coming to visit. There's a number of different items of discussion. Obviously, Modi is looking for more defensive assistance, to have more parts, more systems to be able to help India further expand its defense. So I fully expect this to be a negotiation. The tariffs, broadly speaking, we have seen it play out as a negotiating tactic. And that's why when I talk to a lot of our clients, it might be hard to look through so much headline noise that's out there with respect to different countries, with respect to what the inflationary implications of this could be. But I think we need to bear in mind that this is a negotiating tactic. Trump has a clear agenda with what he wants to achieve with respect to the U.S. and being able to balance having more competitive industries at home, as well as some geopolitical aims too. And India is a strategic partner within that. So I would fully expect to see a deal, but this too shall pass. We will get through this, and any sort of tariff-induced volatility sell-offs that I see in the market to the tune of 5+%, I've been encouraging clients to think about using that as a buying opportunity, because I do not expect this to have a long-term economic impact, because that wouldn't be good for Trump's legacy. And the last thing anyone wants to see is a reason to have a recession down the road, which I do not think is on the table.
Oh, well, we're really hoping it plays out that way, Matt. Absolutely, that this doesn't go beyond being a bargaining trip here and there. But I think these inflation concerns are getting real. We saw that in the numbers in that University of Michigan report as well, right? 1 year down the line, I think U.S. consumers are worried about how higher inflation would go, whether it's coffee, whether it's steel, aluminum, and a lot of these commodities. Anyway, on India, you've been a big India bull. On India, the thing is, since there's no stopping this foreign selling and all of this bad news keeps coming in, we're seeing a very different kind of selling. I mean, stocks with great growth, highly valued stock, but with good underlying, fundamental business strength, even they're getting sold now. People are just worried. They don't want to own anything which has 80 PE and 90 PE anymore. So the mindset is turning now, because now we're 4 to 5 months down in this correction in India. What would you advise doing here?
Yeah, Surabhi, it is always tough to live through a correction, especially because India has been largely insulated from the rest of the world. India was a shining beacon during the 2022 sell-off that hit the rest of the world. But what hit the world in 22 and into early 23 is now hitting India right now, which is valuation concerns coinciding with the prospect of potentially slower growth and earnings starting to normalize. I think what's encouraging through this earnings season is that you are seeing some companies start to post decent numbers. And that's why I've been telling clients, and we've talked about this in the past, to lean up in quality. You want companies that have earnings stability, and there have been those companies, and those have tended to bounce on a number of the sell-offs. But I think you also want to make sure that you're ready to deploy more capital when the sell-off gets really, really bad. I think we've hit a few of those bottoms in the road. I would expect the Indian market to be trading in probably a range in the near future, because what it's really going to take for the Indian market to turn around is the dollar has to weaken. We have to see the strength in the dollar start to roll over. The RBI is doing what it can. It was encouraging to see the 50 basis point cut in some of the proposals and ideas that they're putting out there. But until the dollar starts to roll over, you're not going to get passive flows into emerging market indices from foreign buyers. And you're also not going to see foreign investors want to move out of the US, which is where you're able to make money without any currency impact. So I'm hoping once we get through some of the saber rattling with respect to tariffs, at which point we might start to see better and improving and accelerating earnings in the Indian market. I think that combination is what's going to allow India to start to outperform again, probably in the back half of this year. But that doesn't mean there aren't opportunities to be selective.
All right. Hi, Matt. Good to hear your thoughts. And you're sounding pretty optimistic about the second half of this year, particularly for the Indian market. So we'll have to keep an eye on that. And the dollar index, that needs to cool down. Very, very important from an emerging market perspective. But since you're looking at some of these dips and you're telling your clients that maybe you could get in, from the Indian markets, what's on your radar? I recall you talking about some large cap names in the banking space, autos. I think Bharti as well was something that you liked.
Yeah, so I think in the auto space, we've talked about Mahindra and Mahindra before, but this is a classic example of buy the dip and a very high quality name that not only has auto exposure, but exposure to the earnings and revenue stream of the broader Mahindra conglomerate. And what I like the most about M&M is the exposure to the farm implement business. That was a headwind over the past year, so it is turning into a tailwind, especially with respect to the support that the budget is giving farmers in more rural areas. And they have a great auto lineup. So that name, I think you buy on dips. ICICI Bank is another one we've talked about. Earnings were very good. You're seeing interest in private banks. I think the rate cut is going to be helpful for a lot of banks. And again, you want the top performing assets and one with a private wealth industry that can capture a growing middle class. That's a good place to be. And another name that I've added more recently towards the end of the year that I press on any sort of weakness, we haven't had too much, is Bharti Airtel. That's a very high quality name, second largest communication carrier in India, but not only is exposed to the Indian market, it's also exposed to Africa and the Middle East, which is a growing area. And on top of that, because there's no 6G to be investing in, their CapEx is actually starting to come down. So you're seeing better free cash flow and better margin growth, which is what you want in a broader market where earnings and margins are more of a concern.
Okay. All right. Got it. Thanks very much. Good to sort of keep the longer term or medium term perspective in mind in times like this. So really appreciate you joining in, Matt. Great to have you on the show. Thanks for joining in. By the way, this flash on our screens, I was just looking at the price of, this is Comex Gold. It hit 2,900 yesterday itself. And indeed, there's been a dip from about 2,965 levels to about 2,949. So yeah, volatility, I guess that's what all markets are dealing with right now. Perhaps nothing beyond that, but otherwise, and gold, what a rally, 10% up so far this year already. So perhaps some sharp profit taking coming through. Let's move on and talk about what the lineup on the show today is looking like. Lots of corporate interactions and voices for you. Coming up at 8:35 a.m., we'll have K. Natarajan of Galaxy Surfactants joining in for their third quarter earnings report card and the outlook ahead. At 9 a.m., we'll be speaking with the management of Kaplan Point Labs, talk about their Q3 performance. At 9:20, Pankaj Murarka of Renaissance Investment Managers joins in. He's a market master of the day, asking about what the portfolio is looking like at this point. At 9:30, you get chatting with the management of Nalco. Great third quarter numbers, but what about these tariff wars? What's lying ahead? We'll have Mr. Singh join in for that. Then we have Mr. Sunita Reddy joining in of Apollo Hospitals. Great third quarter for Apollo. We talk about the outlook and the business environment at around 9:40 a.m. with her. And then 9:50, it's all about Nykaa and the beauty and fashion business. Falguni Nair with the third quarter performance and the business environment. And by the end of the show, in It's the Economy Today, Lata will be in conversation with Ramesh Chand of the Niti Aayog.
Slip into a short break, but we've got a lot of stock-specific action to track for you on the other side. We'll get to that in just a bit in our special top 10 list. For the time being, we'll run you through all the stocks we're looking at. Apollo Hospitals, Patanjali Foods, Nalco, as well as Nykaa. They'll all be reacting to positive news flow, while we'll have Hindalco that will be reacting to negative news flow. Eicher Motors, Grasim, Bata, Escorts, and ESEF Small Finance Bank. We'll get into further details on all of these names on the other side.
Okay, so these tariff pressures are showing up a bit now on Asian screens. The Hang Seng's down about 0.5%. Mainland Chinese markets are also not feeling that great, 0.4% lower thereabouts. Singapore is also lower. Japan's absolutely flat. So let's see, let's get the implied open up on the screen. The question is whether we have kind of already digested a little bit of this with our big fall yesterday or not. Right now, the implied open is suggesting that we'll maybe start positive. Now, what about individual stocks? As always, we have our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Nigel, first up, let's talk about Hindalco. So much news flow around the company.
Well, that's right. Hindalco's numbers were weak. That is, Novelis's numbers were weak. But this is not something the street didn't know. We had a preliminary sheet that came out close to around a month or so ago. And those numbers, in fact, had indicated that these numbers are going to be soft. On an absolute basis, the adjusted EBITDA number was around $370 million. On a per unit basis or a per ton basis, it was roughly around $406 per ton. The reason that these numbers were disappointing, one is because scrap prices went up, which compressed their spreads, and also the sales mix was a little bit adverse. So that's the reason why these numbers were disappointing. The net debt number as well moved up, but we know that they're incurring a big capex out there. So these numbers were disappointing. The point is that the street was aware that these numbers are going to be weak. And there are three reasons why I expect the stock to recover from the day's low. In fact, see a good recovery intraday at some point of time. One is the stock is already down 23% from the recent peak, from the time when they withdrew their Novelis guidance. The second factor is they're saying that Q4 numbers will be as good as Q2 numbers, which means from around $406 per ton, the EBITDA number goes back closer to around $500 per ton. And the third factor is they're saying that the impact of Trump's tariffs will either be neutral to positive, because they've got exemptions in the past in sourcing raw material from Canada as well as Mexico, and they expect similar trend to play out. So it starts in the red. It's a weak set of numbers, but I'm expecting a recovery on Hindalco.
Okay, interesting. For Novelis, it should be actually good, right? Ultimately, they're a US entity, so all this protectionism maybe
but they're sourcing some part of their raw material from Mexico as well as Canada. In 2018, they got an exemption on that front. So they're optimistic they'll get that exemption. Even if not, they're saying that they'll get the benefit of Midwest premiums, which in fact would be positive for them. So, and as the stock was down yesterday, so that's why I'm saying that I'll see a recovery in trade today.
Okay, so maybe a recovery on Hindalco could be in the cards. Let's move on, talk about some more earnings. Vinny, good morning. How does Apollo Hospitals look?
Good morning, Survi. So Apollo Hospitals, a decent set of numbers, revenue in line. We're seeing a beat coming in on the profit front. They've maintained that steady growth momentum that I've seen in the last few quarters. As of now, this time the revenue growth was around 14% that we saw coming in. Steady growth is what they're sustaining. EBITDA margins, they've continued to see an improvement, 110 basis point improvement on a year-on-year basis. Hospital business, that's seen a very good growth, 13%. Occupancies have improved over there. YOY 68% is the occupancy in Q3 FY25. ARPOB also seeing a very good improvement. Now the ARPOBs are above the 60,000 levels. Is that going to be sustaining is obviously something that we'll watch out for. When you talk about the Apollo Healthco business of the company, they have sustained managing that EBITDA positive for the last 5 quarters. They've sustained that. Let's watch out for that. It's a positive coming in this time as well. And lastly, Apollo Health and Lifestyle side of the business, that's seen a 15% growth. They've seen a reduction coming in terms of losses YOY. So that's surely an improvement, sustained growth. So we're expecting green coming in for Apollo Hospitals today.
Well, in fact, we have the management of Apollo Hospitals later today at around 9:40 a.m. So we'll understand more about these numbers and the way ahead from Ms. Sunita Reddy. Moving to the auto space then, Sudarshan joins us to tell us about Eicher Motors. How are the numbers, sir?
Good morning, Nigel. So if you remember, after Q2 earnings, company had talked about its preference to growth over margin, and that theme seems to be playing out after Q2 earnings. On that commentary, stock had moved almost 10% higher. And also, if you look at the volume numbers for Q3, volumes were up 19% both sequentially and year-on-year. But the question is, fall in the margin, because Q3 margin has come at a 7-quarter low. So what would be the margin levels that company would be comfortable with? For Q2 numbers, revenue has increased 19%, EBITDA was 10% higher, and margin has fallen almost 200 basis points. It has come at 24.2%. versus 26.1% against same quarter last year. Talking about the margin that was impacted because of certain reasons, company says because of product mix. Recently, company had launched Bullet Battalion, which is at the lower range, and that seems to be impacting the margin, and that seems to have helped volumes on monthly basis for the last few months. Company continues to report volumes more than 90,000 units. Also, company has not taken price hikes over the last few months, and these are certain reasons that seems to have impacted margin. And on the basis of Q3 numbers and miss in margin, I'm going with red for Eicher Motors.
Okay, all right, Sudarshan, thanks a lot for that. Well, I'm looking at Grasim, and remember for Grasim, you look at the standalone numbers because you already have Ultratech and the other subsidiaries that it has in the price. Now, these numbers look disappointing. The margins came in at around 3.3%, and they delivered a net loss because the finance cost as well did balloon up. The problem is on the fiber business, because out there the profitability came down both on a year-on-year basis as well as on a year-on-year basis. It came in only at around 330 crores. Though in the chemicals business, there was a bit of a recovery. It recovered by close to around 20% in terms of the EBITDA number. So the problem was on the fiber business. Now you look at the new business, which has the paint as well as the B2B e-commerce business. And out there, the revenues are moving up. So both on paints, we did see a revenue recovery. Even the B2B e-commerce business out there as well, the revenues did increase. The EBITDA loss on a sequential basis has come down a little bit, which is good news, actually. The net debt number has moved up because of the capex, that they're incurring both for their paints business as well as other businesses. But since the core numbers are weak, going with the tinge of red on Grasim.
Okay, all right. So Grasim, maybe a cautious start is what we're expecting. Let's move on and talk about a couple of consumer stocks. There is Patanjali as well as Bata. Manglam, how's the report card looking?
Well, for Patanjali, it's looking good. For Bata, not good this time, but things look better for them. So it's divergent. The reason why I say that is because if you look at Patanjali, the quarter was led by a sharp surge in edible oil prices. Now, most FMCG companies were speaking about how raw input prices or raw material prices were impacting their margins. Patanjali, on the other side, they sell some of these edible oils, so they got, the better end of the cycle. So their overall EBITDA actually increased by 57% and net profit increased by 78%. And that was led by their edible oil business itself. The FMCG business actually underperformed, and that's largely because the consumer sentiment was weak, and also they saw margin compression to the tune of 350 basis points. The stock opens in the green because of good performance in the edible oil business, but from the highs, edible oil prices have come down as well. So whether it sustains those greens or not is the big question. On the other hand, for Bata, the revenue growth was subdued, 1.7% growth itself that came in, but margins were strong. 23% is what we saw versus 20%. The net profit was impacted by just a one-off VRS expense. The company said that they have seen significant volume growth after a long time, and they saw double-digit growth in hush puppies as well. So on the back of subdued revenue numbers, maybe the stock opens in the red, but I suspect it may see some green because of the commentary that came by and some of the internals.
Okay, all right, Manglam, we'll keep an eye out on both those two names. Well, I'm looking at Nalco, and these numbers were very, very good. Very strong set of numbers in Q3. The only question is this the peaking out quarter, which could possibly be the case going by the pricing that we've seen on alumina? First, the numbers. Top line growth of close to around 40%, very good. Around 4 to 5% better than what some brokerages were estimating. The operating profit, brilliant numbers out there. 2,300 crores is what they've delivered, with the margins coming at close to around 50%. So no faulting those numbers. Last quarter was good. And the alumina business has been the big driver. So on a year-on-year basis, you had the profitability that was up by close to around 5 times. And on a sequential basis, it was close to have doubled. Even the aluminium business, well, you did have an improvement both on a year-on-year as well as on a sequential basis. The problem is the alumina prices that moved to around $750 per ton has come down to around $500 per ton. Besides the pricing, they've also got the benefit of some captive coal, because you see the cost of power consumed. That's come down as a percentage of sales to around 18% from around 25%. The company has also given a sweetener. They've declared close to around 4 rupees per share as dividend. It's very, very good set of numbers. The only question is it the peaking out quarter? And in fact, we'll have some answers from the Nalco management at 9:30 a.m. later today. So we'll keep an eye out. In his first ever interview, we'll have the CMD, Mr. Singh, who will be joining in. Let's get on to, other stocks. We have Manglam, who's joining in to tell us about Nykaa. Manglam, you're impressed with the numbers?
Bright pink, if I may, you're giving it a green color. The reason why I say that is because every time you think of consumer slowdown and then you look at Nykaa's numbers, for 2 or 3 quarters in a row, the company has reported top-of-the-line numbers. Beauty business, GMV growing at 32%. When the company listed, the thesis was that beauty will lead the margin expansion and fashion will lead the growth because of higher total addressable market. But because of weak consumer sentiment and high competition, fashion growth has subdued, but beauty continues to actually accelerate. As a result of which, the overall revenue of the company has grown at 27%. The EBITDA has grown at 42%, and you're looking at net profit growth at 51%. This despite all the competition looking at the beauty business itself. And out there, the beauty revenue has grown by 27%, and EBIT margins have actually expanded by about 40 to 50 basis points. Yes, fashion is seeing relatively lesser growth, but upwards of 20%. Fashion itself isn't very bad. The company is investing still out there, so let's see how that goes. For starters, see some green on Nykaa.
Okay, all right. Mangalam, thanks very much for that. You'll hear from the Nykaa management at 9:50 this morning. So Falguni Nair, founder and CEO of Nykaa, talking about the business and the outlook. Well, Escorts Kubota is the next one we want to focus on. Sud is here with DL. So, good morning.
Morning, Prashant. So it was an all-round miss by Escorts Kubota for Q3 FY25, but more than earnings, what is going to be the problematic area is the guidance the company has given for FY25. By first look, guidance looking very weak. Talking about the numbers, revenue growth has come at 9% versus estimate of 35% growth, and margin has slipped below 12%. It has come at 11.4% versus expectation of 12.4%. Now, talking about the guidance, company has given guidance on first volume. It says transition to BS5 standards will lead to increase in construction equipment price, and that in resultant will impact the volume. Second, on margin, it says it will see a gradual improvement, but there is unlikely to be a major jump in the margin. Last is on the on profit. It says mostly FY25 profitability will be almost similar to FY24, so there is no major jump here also companies. Now, yesterday you had seen that M&M had talked about for industry tractor growth is likely to be in the range of 6 to 7% for FY25, and in resultant Q4 growth is likely to be more than 15%. So for industry, the growth is going to be healthy, but the question is how is it going to be turned out for Escorts Kubota? But on the basis of earnings, I'm going with red for Escorts.
Oh, okay. All right. So not looking that good for Escorts Kubota. Sudarshan got it. Let's talk about ESAF Small Finance Bank as well. Abhishek is here with the numbers. Abhishek?
Well, strong disbursements have not turned into AUM growth, which shows that, LTV might have been increased for customers of ESAF SFB. Disbursements are up 42.5% YOY and about 26.6% sequentially. AUM growth is very weak at just 5.5% YOY and a decline of 0.3% sequentially. The net interest income is down 18.5% YOY and about 10% sequentially. It's the only lender to see interest income decline both YOY and quarter on quarter. Net interest margin, hence, as a result, has declined both YOY and quarter on quarter to 7.9%. Provisions have shot up by 197% YOY and about 20.5% sequentially. They are the only lenders to report a net loss for second consecutive quarter. They have reported a net loss of close to 211 crore versus 190 crore in the previous quarter. Now, slippages have been elevated for them. Annualized slippage ratio is at 10.5% versus 10.8% in the previous quarter. The write-offs are high, which means that the asset quality has largely remained stable for them. Back to you.
Okay, all right, got it. Abhishek, thanks for that. Let's quickly recap our list of top stocks to watch. The ones that have positive news flow around them are Apollo Hospitals, Patanjali Foods, Nalco and Nykaa. The stocks that have negative news flow around them, Hindalco, Eicher Motors, Grasim, Bata, Escorts Kubota and ESAF Small Finance Bank. So plenty of ones with the bit of red color around them this morning. Let's also talk commodities. We have Manisha Gupta joining in with the latest. Manisha, never a dull moment with all the tariff talks and the US headlines. But what are you watching out for? By the way, you alerted us earlier, there was this sudden volatility in gold after it surged to all-time highs. But you tell us, what's the latest?
Well, absolutely. So if you look at the gold prices, especially the charts today in Asian markets are nothing short of a surprise. It's a very, very big jump that we've seen into the prices. There's almost $30 to $35 of a gain. So Asian markets, when you see that kind of a gain, tells you that Chinese are buying in some sense, and that's exactly what really seems to be happening. So we started yesterday morning was 28.50 of a high, and currently we're trading at 29.40. So it's been $100 of a jump up that we've seen in last 24 hours coming in. Absolutely, a lot of safe haven buying, easing monetary policies, the global tariffs, especially from the US on aluminum and steel, tell you that the inflation will continue. And of course, the point that the longer this tariff conflicts or trade conflicts continue, it would hurt a lot of other asset classes, but the gold prices continue to shine bright here. Markets also have seen China add more gold for the third straight month in terms of central buying there. Street will watch out for the Powell testimony today as well. But yes, gold is the place to watch out for. $100 of a jump up, huge amount of Asian buying, China buying for its insurance companies as well, with an expectation that $3,000 announced perhaps is a possibility in the month of Feb itself.
Okay, all right. Traditional rush for safe haven buying, and it's indeed proving to be exactly that. Manisha, thank you very much for the details over there. We do have to take a very quick break at this point in time. We'll come back on the other side. We'll have, of course, the fundamental conversation going. Gurmeet Chadha will join in with some stock ideas. And then, of course, we move on to technicals in a bit.
I do believe we're making progress. We want to stop the Ukraine-Russia war, and I want to stop it just because I hate to see all these young people being killed. The soldiers are being killed by the hundreds of thousands. And I expect to have many more conversations. We have to get that war ended. It's going to end, and we have to get it ended. And we have to get it ended soon. Should have never happened, would have never happened if I was president.
Okay, welcome back. The big sort of macro story, of course, remains Prime Minister Modi's visit to the US to meet President Trump. And, the backdrop, of course, is all tariffs and a lot of posturing. This is the White House, one of the top economic advisors to President Trump, complaining about high tariffs in India. Listen in.
Talking specifically about tariffs, just recall that almost every trading partner has much higher tariffs than we do. In fact, the only trading partner that's about where we are, and there's Canada and Mexico who are part of the trade deal, but outside of that, the UK has about the same tariff we do. The EU it's 2 to 3% higher. Taiwan it's 10 or 11%, and India, and we're meeting Modi soon, has got a lot to talk about with the president because they have tariffs that I think the trade weighted average is a little bit short of 20. Now I'm running it out of my head, so don't give me a Pinocchio. But they have high rates that are enormously high. They're lockout rates, and so President Trump believes that at the very least everybody should agree that if they're charging us 20, then we should charge them 20, and then if they go down, we'll go down. But that's the idea of reciprocity in the tariff space.
Gurmeet Chadha is with us, managing partner and CIO at Complete Circle. Gurmeet, good morning. Good to have you with us here. How important an issue will this be? Because if you go by line, there's not that much trade exposure to the US, right? But Neelkant was with us yesterday. He said that if reciprocal tariffs are imposed, it reduces India's exports by about $7 to $8 billion. That is his estimate. And he said that number will also be lower now because the budget has done some stuff already. So how should one look at this? Because that's the dominant news driver, at least right now.
So, Prashant, good morning. If you look at steel and aluminium, steel, it's about little less than 2 billion. Aluminium, actually, I think would be 300 or 400 billion. So, in terms of quantum, isn't much. But it's just the sentiment, right? And, the incremental uncertainty around it, and market hates uncertainty. Once you quantify the impact, I think that's when probably market realize the fears are more than what it is warranted. And I think the bigger issue for the market, other than these tariffs and obviously strong dollar, which has led to outflows across emerging markets. If you see, Taiwan, you see Korea, you see most markets, there has been an outflow. I think is this earning downgrade cycle in India, and I think that combination is what led to very sharp volatility rather than just the dollars or the tariff issue, because other markets were actually up yesterday, if you see. So my sense is once the market gets sense that the earning down cycle is done, and we are now looking at a slightly uptick in economic activity in terms of better macro indicators like some PMI numbers, better GST collections, slightly better earnings. I think that's when I think probably market will stabilize. So I think the key to here is to watch what is in our control, which is the earnings we track, the companies we invest in, and I think this week is critical with Prime Minister visiting US. As you rightly said, my sense is that overall number of 30-40 billion with some dominance of service exports, I think India should be able to handle versus countries who have 300, 400, 500 billion dollars deficit.
Yeah, no, Gurmeet, it's entirely, I think what we're seeing out is a classic play of emotions in the Indian market. I remember earnings seasons where horrible numbers were coming and we would say, I mean, the market would say that look through it, this was a bad quarter, next quarter is better. So buy up the stock, bid up the stock. And now the reverse is happening, right? Because you're suddenly concerned about valuations, suddenly concerned about, a lot of other things beyond the immediate growth. All right, Gurmeet, stay on. We have lots of stocks to discuss with you, but let's quickly get into a management call. Galaxy Surfactants came out with numbers just yesterday, and it was a slightly weak quarter for the company. Revenue was in line. EBITDA margins and net profit missed estimates. We have Mr. K. Natarajan, Managing Director at Galaxy Surfactants, joining in for a quick chat. Mr. Natarajan, great to have you on. I'm just looking at the overall numbers. So 11% up on the top line, but the EBITDA has fallen by 6%. Margins have also come down. And, actually, I want to start with the margin question because this is not just a Q3 phenomena. If we see the last 2-3 quarters, your margins have been consistently coming down. So can you just tell us what the issues are at play? Is there pressure on pricing? And, how much did you do in terms of volume this quarter?
Yeah, thank you. Thank you for having me on the show. If you see the revenues have gone up, but the volume is what we guide the market to. The volumes actually have been down by almost 1% globally. The major reason for that has been a 7% dip in volumes we saw in India, which has been the first time that we have seen such a huge dip. It actually got balanced by the rest of the world growing by almost 10% and Africa and Middle East keeping almost flat. We do see this as a one-off situation given the commentary that we hear from all our customers. And with what the government has announced in the budget, we do see consumption picking up. The margin essentially has been lower because as we've been guiding the market earlier is in terms of how the premium specialty volumes pick up. And that's something is not happening the way that we had anticipated in the rest of the world market. Even in India, we do see that the direct-to-consumer brands that were earlier very bullish, given the current sentiment, they are also going slow. So we do see this quarter as a one-off quarter, and we look to the coming quarters with a lot of positivity.
Sir, so you're saying, okay, that sort of helps us understand it. Overall volumes are down by 1%. India volumes have fallen more. Is your full year volume guidance at risk? You had guided for 6 to 8% volume growth in FY25. Is that at risk?
Yeah, so up to 9 months, we had 4%. So with this sort of dip that we have had in India volumes this quarter, yes, that is at risk. So we probably should be at the close to almost 4% volume growth is what we expect.
Okay, all right. Hi, Mr. Natarajan. Good morning and thanks a lot for waiting by. Well, so 4% for this year in terms of volumes. What about FY26? Are you seeing recovery on ground that you can guide for better volume growth in FY26? And also EBITDA per ton, could you help us out? What was it for the past quarter? And earlier, I think you were talking about 20 to 21,000 rupees per ton. Is that on course?
Yeah, so our EBITDA per metric ton essentially is close to about 19,300. So we have been lower there as well. As regards the margin guidance for the and the volume guidance for next year, I think we probably would wait till we meet again once we announce the full year results. By that time, we'll have good clarity in terms of how India is getting better. And with regard to our EBITDA per metric ton going up, we do see that coming back to the guidance range that we have guided the market to, based on the positive signs we see as far as the projection pipeline that's happening on the premium specialties with the rest of the world customers. So yes, we would wait to have a review of the guidance, in the next earnings call that we'll be having.
So, Mr. Natarajan, given what you're saying, that it all depends on pickup in demand here in India and what this budget does. But the way things stack up right now, I mean, you've come down to about, at the EBITDA margin level now, I'm saying, you've come down to about 10%. So do you see yourselves ending at around 10% in FY25, or could there be a pickup back again? Because you used to be above 12% till a couple of quarters back.
Margins, we guide for EBITDA per metric ton.
Correct.
And if you see EBITDA per metric ton has gone down by almost about 6%. Okay, and we do expect that we'll end the year around 19,500 rupees per metric ton, which is obviously lower than the guidance that we have indicated.
Got it. All right. So 19,500 versus the guidance, earlier guidance, which was going up to the higher end of it was 21,000.
Correct.
500. Got that point, sir. Just on, on your inputs, while obviously, the volumes are what they are, on the input side, what is the outlook on fatty alcohol prices? I mean, are they still surging, or have they kind of eased out?
They have surged quite a bit. So they're probably almost close to double than what it was at the same time last year. And we do expect it is stabilized now, but we do expect it to start correcting in the coming months, given the sort of supply side bullishness that is there in terms of the production going up. We probably will have to wait till next quarter to understand this, but as of now, it has gone up and stabilized. But then the point here is that it's almost double than what it was the previous year, which also is leading to some amount of sluggishness in demand because our customers are unwilling to take long positions given the high raw material prices.
Okay, all right. We'll leave it there for now. Good luck. Thank you very much for joining us and running us through what you're making of things right now. We'll take a quick commercial break here. Galaxy, of course, I mean, has been an underperformer for the last few years, but we'll see how things go from here. Sudarshan Sukhani and Mitesh Thakkar will be with us with some technical trading ideas. That's coming up in just a bit. Stay tuned.
Welcome back. We'll start getting the pre-open rates in the next 4 to 5 minutes. Before that, let's discuss some stocks with Gurmeet. Gurmeet, I don't know if you managed to hear or catch a bit of this conversation with Galaxy just a while back. So sluggish, right? I mean, it's just been a washout year for many of these companies. Galaxy in particular, they're dependent on domestic demand picking up. I don't know if you have a view on this one or anything else in chemicals. Some of the companies, like SRF, for instance, I remember, some of them reported some green shoots this quarter. But anything that you like?
Yeah, so we actually a couple of them. And chemicals have been battered now for more, I think, couple of years. So you got to pick them when they are at their cyclical lows. Also, I think China was sensing tariffs coming, so they've been also dumping a lot. Which obviously would lead to getting reflected in terms of inventories, prices, margin. What we saw in Galaxy commentary also. I think one space we like in this is bit of chemicals and bit of recycling is. Something like, for example, JG Chemicals, which got listed last year, they are into zinc oxide, and that basically goes into tires. And then they are also trying to get into electronics and ceramics and more end users like pharma. So it's a bit of a consumption play, and tire basically again being a discretionary play. They were doing 30-40 crores back. In H1, they have already done 33 crores as we speak. And they're doing a lot of different grades of zinc. They are recycling as well. So it's a bit of a more zinc recycling play. Cash on the balance sheet, almost 130-140 crores. And we are looking at some more names, here where, that the end use could be consumer discretionary and some a bit of recycling things which actually are solving a problem. So, solving an issue like, for example, water not being clean, desalination. You're solving an issue like air purification. You're solving issues like plastic recycling. So I think that space looks very, very interesting. Valuations have become very reasonable. And when you don't expect anything is the time, the sector tends to do well.
Okay, all right. Hi, Gurmeet. Good morning. Good to see you. When, our Prime Minister is going to be meeting the US President. There's plenty of optimism out there that there's going to be some kind of, some kind of good news that could come out from them. Defense companies could be in focus. Anything you like from that space?
So Nigel, if you see, when Defense Secretary interacted with the CNBC team and sharing last week, he spoke about doubling the defense orders to more than 2 lakh crores. Last year was 1.2 lakh crores. So, something obviously is coming there. So I think energy and defense would be in focus because that's something, India would focus on. And, we also reduced some of the duties during the budget. Which included, commodities, steel, etc., and the battery and EV ecosystem and electronics as well. So my sense is something may come related to fighter jets, and HAL could be in focus. Also, the availability of engines has dented that, and 60% of the revenue actually comes from maintenance and servicing, which gives a bit of a more stability to HAL versus some of the other names where businesses are very lumpy. You may not have too many deliveries of ships, let's say next quarter, but in that case, there'll be some continuity. Also I think France visit is important. Something may come up on Pinaka rockets. They've shown interest in the past. Pinaka rockets, especially the guided one, the cost of procurement for France is 1/3 of the existing, artillery they use. And the nature of warfare has changed. So I'll be very keen on looking at some of the names like Solar Industries, HAL, and also a lot of correction, Nigel, in these stocks. Look at Zen Technology. Look at some of the main names which were, very, very liked by the market. So that those could be, in focus.
Nigel's talking about good news coming from the US President and, the Indian Prime Minister's meeting. I'm just hoping there's no bad news. These days, if there's no bad news, it's good news. As long as they don't come back, absolutely locked in a heated debate and battle and because there's a lot at stake. There's a lot at stake, right? When the India indigenization program has been going so strong, and so that's what I'm saying. My expectations are lower. Prashant was telling us this about, I think, 2 weeks back. Lower your expectations, lower your expectations. Mine are fully lowered now, I can
Secret to happiness.
All right, okay,
Gurmeet, thank you very much for joining us. Appreciate your time here on CNBC-TV18. I'll talk to you soon again. Take a quick break. I think the pre-open is with us in about a minute. We have Mitesh and Sudarshan with their technical trading ideas. Of course, we also have the management of Capital Point joining us on business outlook and, of course, the numbers they reported. Stay with us.
As far as delisting, etc., is concerned, at this point of time, no, I think we continue to be as is. We continue to run our businesses. We've given commitments to our business partners, our customers at large, that we take responsibility as a responsible company for whatever we do in the country. Our focus is continuing to under the sort of conditions that you're seeing, and you explained earlier when you opened across the businesses, making sure we deliver strong growth and profitability.
Welcome back. In a few minutes, we'll get the pre-open rates. For the time being, let's welcome Mitesh Thakur on the show. Hi, Mitesh. Good morning. Good to see you, Ben. Mitesh, you were playing for that rebound, but yesterday, the screen didn't look very, very good. And I think that's why you're light in some of those long positions. The good news is we defended the 23,300 mark. How would you approach trade today?
Good morning, Daniel. So, yesterday our long trade got cancelled out, stopped out. And despite that, we haven't turned bearish purely because of the fact that, the setup is not looking bearish. The indicators and all are not, looking negative. So what could be a possible outcome is that, one, while we have failed on the upside, we don't have a reason to decline on the downside, and therefore, a likely outcome could be that markets will chop around in some kind of a range. That's my understanding of the current situation. Having said that, I think very broadly it's possible that this consolidation could be choppy and volatile, and that's the way to go forward possibly. So we will look for some kind of a consolidation which is slightly on the choppy on the this side. I think on the volatile side.
Mitesh, hi, morning. The mid and small cap indices price action structure yesterday, 2.5% cuts.
So that's where I think the slight bigger worry is that one is that it's been underperforming area. I think the Nifty mid cap, if you look at it, has really underperformed, and we still haven't got a bigger sign of reversal. But my idea is that the large cap space is showing good resilience. If you look at the charts of Bajaj Finance, Kotak Bank, HDFC Bank, I don't see big declines happening over there. In fact, on the contrary, if this consolidation doesn't do much of damage, I'm looking at a continuation of this pullback rally on the upside. So we'll wait for a few days, see if the the large cap space is turning down. Otherwise, mid caps I'll totally avoid for the time being.
Your trades, Mitesh?
Morning, Prashant. I have a mix of buys and sells. A buy on Bharti, with a stop at about 1675 for targets of 1730. Sell on ACC if it breaks 1955. Take a stop at 1980. Look for targets of 1900. Crompton is a sell with a stop at 355 for targets of 336. And RBL Bank is on the buying side. Keep a stop below 165.5. Look for targets of 175.
Okay, all right. Mitesh, talk to you soon again. Thank you very much for those trades. For now, rupees opened stronger, by the way, 87.35 compared to 87.48, which was the close yesterday. And of course, the low yesterday, we were at about 88 to the dollar on the currency. Kaplan Point Labs is the next company on our radar. Reported a good set of numbers. Double-digit growth continues. Margins have sustained at 33% levels. Let's have Vivek Parthiban, COO at Kaplan Point, now join us to talk to us about the numbers and the outlook. Vivek, good morning. Good to have you with us here. Thank you for joining us. Prashant this side. So new launches, some manufacturing efficiencies. Could you give us a sense of what the outlook is for this quarter, Jan to March, and then FY26 as well? Because if I look at revenue growth, it's come off to about just under 14%. This used to be 16 to 18% earlier. So just give us a sense of what growth will look like from here.
Yeah, so I think for us, consistency has always been key. We're also coming off a larger base compared to a few years ago. As we've always guided in the past, I think the next couple of years is going to be a stabilization period for us. So I think the current numbers that you see will likely continue at least for another 12 to 18 months. But we have some good levers of growth that are at early stages right now, such as our US front-end presence, our oncology business, and also our impending entry into Brazil and Mexico. But yeah, post 18 to 24 months, I think we can start to see a fairly nice uptick in these numbers. But I think for till then, what we are focused on has always been cash flow and bottom line consistency. And I think even on top line, I think we've been fairly consistent.
All right.
For FY26, Vivek, can you give us a sense what will be top line growth at?
Yeah, I think we can start to see similar kind of numbers. See, it also sort of goes back to why our company has been so focused on the private market, where there is a large amount of predictability that comes into play as well, right? So I think that will certainly continue in 2026 and beyond. I think hopefully by 27 and beyond, I think you can start to see some of these early stage opportunities start to fructify a little.
So 13-14% type of top line growth in 26.
I would probably assume so, yes.
Okay.
Okay, all right. And Vivek, what about margins? Since you'll be looking at profitability as well as cash flows, you have been in the vicinity of around 32 to around 34%. Should it hold at these levels?
Yes, we think so. I think we're comfortable with where the margins are right now. And as you can imagine, our API business, which is going to come into play shortly, our oncology piece is all in very nascent stages. So they're not really profitable at the moment. So once that starts to kick on, you will start to see our bottom line slowly inching up a little bit. But I think at current levels of 35, 36% EBITDA, I think we are almost benchmark at this rate, So we are very comfortable where we stand. 2 years hence, I think this can start to even go up from here.
How big can Kaplan One Labs, the oncology business, grow to? I think in the first 9 months, you've done around 35 crores. What kind of a number can you clock this year? And bigger plans, maybe the next 2-3 years, how do you see this business scaling up?
Yeah. So anything with pharmaceuticals, as you all know, there is a long gestation period. There is a period of approvals coming through. There's a period of products that need to be filed in multiple places. So we're definitely very hopeful that the oncology business will start to add to the top and bottom line. But I think numbers-wise, I think we'll be fairly cautious in giving any guidance at this point.
Yeah. So just I have two questions. One, you're dependent in large part on China, right, for supplies, starting ingredients, etc.
At this point, it's only around, at this point, it's only around 28-30% from China. Everything else is made in India.
Okay. So about 30% is dependent on China. I had 45% as a number. You're saying about 30% is there any, is that all going well, or is there any problems at all recently, actually? Not, have they faced any issues?
We've been very bullish on China, to be honest with you. And that's always been sort of Kaplan's mantra as well. When other people are worried about it, we like going into those spaces, So we think there's a lot of green shoots. We think there's a lot of opportunities that we can do out of China, especially when China by itself is sort of slowly looking at, some amount of decoupling from their largest business partners, such as US and stuff, So I think if you identify the right opportunities, especially for people like us that have been there for almost 2 decades right now, you can identify spaces where it could be very synergistic opportunities that you can find. In fact, our insulin range and our early stage biosimilar range, etc., we've been working very closely with the Chinese counterparts who seem to be having a bit of a heads up in that direction for us. So I think we are still very bullish on our second innings at China.
Got that. Any sort of foray into GLP-1 opportunities in any way?
I think most people in the world today are working on that. Of course, we need to identify what our niche is. We're also working on those products in conjunction with the patents that are getting off in the next couple of years. And how are we going to differentiate ourselves from everybody else that is doing it is important as well. We have some unique ideas. I think this will be another 12 to 24 month kind of a play. But for sure, I think we're also in it. Yes.
Okay. All right. You're in it. But what shape and form? you're kind of sort of firming up
We
right
need
now,
to
right?
see, as you know, we have quite a large presence in Latin America, and Latin America is a price-sensitive market, and it's a market where Kaplan has a very strong brand recall. So we would be designing our strategy for these molecules that suits what Latin American customers are able to do over there. So I mean, we don't want to give away too much right now, but I think certainly it's another 12 to 24-month play for us to get into this space.
Okay. All right. Vivek, we'll leave it there. Thank you very much for your time. Good to speak with you and get that detail. Appreciate it very much here on CNBC TV18. I mean, I think the market is absolutely flat as well. Nothing at all. The Nifty will come up, 2-point change. And maybe we'll have to look at individual names here. So let's actually get that. Mitesh has been waiting by. Mitesh, anything on your screen in the pre-open looking interesting? Any trades?
I think, the market is not showing much of momentum, so more of quietness over here. But what I like is the Nifty names and the financial names. So we'll scout for opportunities over there. As I said, HDFC Bank, Kotak Bank are two stocks, which are showing very good action on the charts. So we'll look at them.
Okay, all right. Got that, Nidesh. Thanks a lot for that. In fact, Kotak Mahindra Bank last couple of trading sessions has been the big outperformer. But let's highlight a couple of stocks for you. Manglam joins us to tell us about Bata as well as Nykaa. Manglam?
Well, if you look at Bata, the reported revenue growth was just about 1.7%, even though there was an EBITDA margin expansion to the tune of almost 250 to 300 basis points. The company says that they saw volume growth, significant volume growth after a very long time. So we expect that stock to see some green after perhaps opening in the red, largely because of the muted revenue growth. The net profit on a reported basis, again, is absolutely flat. That's only because of a 10 crore one-time VRS expense. So we'll keep an eye out on Bata. Nykaa, on the other hand, has been a stellar set that the company has reported. Overall revenues have grown by 27%. Beauty revenue has grown by about 30%. Beauty gross merchandise value itself has grown by about 32%. And that has flown through to the bottom line as well, where the EBITDA margins have expanded by around 50 basis points, and the net profit having surged by 60%. So see some green on Nykaa in today's trading session.
Okay, all right, Manglam, thanks a lot for that. Well, I'm looking at Hindalco, and as we said earlier, yes, the numbers were disappointing. The only good news was that, in fact, the street was well prepared for these set of numbers. So that's why, in fact, the stock is not seeing a big gap down. To run you through the numbers, the adjusted EBITDA, the absolute numbers are around $350 million, which is clearly disappointing. And the EBITDA per ton as well at around $406 per ton. What was the problem? The sales mix was a little bit adverse. That's lower auto, lower space sales as well. And the other factor was that scrap prices have moved up, so the spreads did get compressed. The net debt number has moved up because they're undergoing a capex and you'll have facilities coming on stream from early FY26 itself. However, the reason that the stock is not pulling back big time today is because it's already corrected 23% from the recent peak that we saw in the last quarter of last calendar year. That's after they withdrew their Novelis guidance. The other factors, they're saying that from around $406 per ton that they delivered in the past quarter, it'll recover to the levels that we saw in Q2 and Q4. That means the number should jump to around $480, $490 per ton. And the third factor is they're saying with regard to Trump's tariffs, they're saying that it'll be neutral to mildly positive as well. In the last round, that's in 2018, they got a couple of exemptions with regard to their raw material that was coming from Canada as well as Mexico. Brokerages, well, Citi, they remain their optimistic view on the stock. They believe that most of the risk are priced in at current levels. And they're saying the stock is trading at sub 5 times. Jefferies as well is maintaining the positive stance. But all this together, though the numbers were very, very disappointing, the street was well prepared, and that's why we're not seeing a big drawdown.
All right, absolutely. Mitesh, any thoughts on names like Hindalco? Also coming on, I don't know if you had a call on Trent, was the top Nifty loser yesterday, another 5% down.
So, Trent was a sell actually on Friday, and Friday it gave a pullback, but the structure for the longer term charts and the medium term charts is very weak. And I suspect we are not done with the decline yet. I was looking at a target of 5,000 to begin with, but logically 4650 is where I think the stock can head towards. Similarly, Hindalco with the metal index taking a beating, the Hindalco also was down, but Hindalco, I think a good part of decline is over, and it could just, be doing a range between 570, 560 on the downside to roughly about 615, 620 on the upside.
Look, Tilaknagar Industries was down 20% yesterday in the house it ended in the pre-open. And we'll just see it's absolutely flat, nothing on it. So 292 after that very sharp sell-off that we saw yesterday. Mitesh, thank you very much for joining us, and thank you for running us through the views on a variety of those names. We'll just have the market open come up for you on your screens. We'll do, of course, the indices and the broader start, and then we'll get down to individual names. So it's nothing on the Nifty, about 70-odd points in the Sensex, and that's how we are likely to start. Not very much, at least at the index level, but stock specific, as always, there will be lots of stuff. So a little bit of red straight off the bat, 23,365 and 49,871. Nifty Bank is coming off a little bit more. It was a relative outperformer yesterday, the Nifty Bank to the Nifty, but 0.25% down in the Nifty Bank now. Mid-cap index is flattish, but slightly higher. And I think market breadth is evenly poised, 1:1, advances to decline ratio. And the small cap index is down a little more forceful straight off the bat. I mean, 0.5% down on the small cap index, a quarter down on the Nifty, on the mid cap index. Adani is up 1, Reliance is higher, ITC, Grasim, Nestle, some of the Nifty names. The heat map up on your screen, and it's more down than up, or maybe it's evenly matched at this point. So stocks are opening up, and I think in the broader space there will be more action. Surbhi.
Okay, well, on Hindalco, Nigel's spot on. I mean, it seems the market's looking at some bargains. Stock was beaten down yesterday as well, and the Novelis performance was largely known. So full marks to Nigel on that one. Apart from Hindalco, Adani Enterprises is a second best performing stock on the Nifty. Grasim's numbers are being well received, or okay received by the market, 1.5% up. Bajaj Finance is seeing some gains, some buying on heavyweights like ITC, Infosys, Reliance, and Lever. Because of these four, we're not seeing a wider cut. Some of the banks like SBI are also trying to contribute, at least for the time being. But it is getting a little tough out there. 43 points now lower on the Nifty. Bank Nifty is the one that's down a little more, down about 200 points there. Eicher Motors, the disappointment on the margins is very, very evident. 5% down on that stock. Apollo Hospitals, despite a pretty steady quarter, stocks down 2%. Tata Motors, M&M, these are some of the other names that are losing ground. And the big culprit of the morning, you can say, is HDFC Bank. That's the biggie, which is taking it down. Then there's Kotak Mahindra as well. So, yeah, little all over the place on the Nifty right now. But the bias is negative.
Well, that's right. The bias is negative, and also the advanced decline ratio has moved firmly in favor of the number of stocks declining. You have 1,500 stocks that are declining. To run you through a few names that dispute with regard to the brand name out there. Tilaknagar Industries yesterday down 20%, today down another 5%. We'll wait for some clarification from the management whether or not there is something and what's the way ahead from here on. So that's down 5%. Zaggle Prepaid, second day running, the stock is down, close to around 10%. Big selling is what we're seeing out there. ITC Hotels, yesterday actually it was an outperform, but ended high with a gain of around 3%. Today it's pulling back a little bit. Transrail Lighting, that's the positive reaction that we're getting today. It's up close to around 2.5%. So good move out there. Transrail Lighting should come up for you on the screen. Nalco, we told you the numbers were good. However, is this the peak quarter? That's going to be important. So Nalco, in fact, is up close to around 3% as we speak. We'll get the management in just a while from now. But otherwise, you'll have to see on the Nifty till that 23,300 mark is held out, at least for today's trading session. The bulls will be trying to fight back. We'll have to see how that plays out. But the breadth of the market is a little bit concerning yet again.
3:1, I mean, on the downside. So 3 stocks down for every 1 stock which is higher. And, some of these super performing stocks, look at something like an HBL, erstwhile HBL Power. It's down 8%, 487 on very, very large volumes. It's the third largest traded name on the NSE right now. And otherwise doesn't show. Okay, it's HBL Engines is, I think, the name of the stock. Yeah, 7%, that's the one. So 491 there. Zaggle, of course, Nigel mentioned. Tilaknagar, we highlighted, so 5.5 lower. Escorts is down 5%. Newland is down 6%. Anandraj is down 4%. And EPAC Durables is down about 4%. PNC Infra is down 3%. Sagility is down 4%. And of course, I mean, Eicher is down about 6.5% right now. So a lot more stuff happening on the downside. Dreamfolks, which is the airport's the lounge operator, is down about 6%. Recent listing 319 on Dreamfolks coming in at this point of time. So it's about 4:1 now in terms of the declines to advances ratio. Transrail, which reported numbers, is up 2%, is the second largest volume traded gainer. And of course, Nalco, you'll hear from the management in about 10 minutes from now, is the other one, which we will sort of focus on. But let's welcome in Pankaj Murarka, who's now with us. He's a veteran, seen many cycles, CEO and Chief Investment Officer at Renaissance Investment Managers. Pankaj, good morning. Great to have you with us here. Thank you for your time. Intense debate on at least social media on, what to do with small and mid caps. I'm sure, I don't know if you followed all of it, but I'm sure it's kind of tough to miss. What is your sense? I mean, I think generally everyone is in agreement that maybe things got overdone quite a bit on the upside, and now, of course, many stocks are paying the price, but it's always like that. But what is your sense from here, Pankaj? Because markets look ahead, trying to price in what's coming 3-6 months down the line, not look back. So that's the question to you.
Morning, Prashant. Well, Prashant, we need to acknowledge or concede the fact that we are 5 years into this bull market. After 5 years, you don't get low-hanging fruits. And if you have a ferocious bull market like the one we've had in the last 5 years, obviously there will be pockets of excesses. And this time around, we have had excesses across the board, and largely more than we've had our excesses in mid and small caps. So I think we're going through a process of mean reversion, but which is classical of any market cycle in that sense. I think over the last 8 or 10 weeks, we've seen meaningful, mean reversion or pullbacks in prices, especially in mid and small cap. It's been slightly more amplified in that sense. I think the challenge, if you ask from my point of view, is more on the small cap side than on the mid cap side, because one, valuations are pretty rich there. And more importantly, what concerns me more is there are a lot of companies with, where business models are untested for economic cycles, economic crises. They have fragile business models, and markets have given them valuations which certainly do not tie with their long-term growth prospects. Markets probably are assigning multiples basis currently growth over the next 2 or 4 quarters, and we know that the long-term growth for a lot of these companies will be much lower. And in many cases, the business models, as I said, are untested. And when you markets go to that extreme in terms of giving high multiples or high valuations to those kind of companies, obviously there'll be some pain there. Having said that, I'm not so negative on an aggregate basis if you take a 1-year view, because I still think there what will make money from here on is bottom-up stock picking. So if investors are focused, there are still enough ideas there on a bottom-up basis where one can go out and invest and still make reasonable or healthy returns over a 1 year to 3 year time horizon kind of thing.
By the way, I just want to point out Eicher once again. The pressure is unrelenting on Eicher Motors, almost 6% down. And you would argue what's so wrong, because the top line was more or less in line with estimates. It was not too far off. But the margin fell a little more than what the street had penciled in. The margin year on year is down almost 200 basis points, 190 basis points to be precise for Eicher Motors. And the street just doesn't like that. Plus, there's no price increase either. So it seems that, that's the reason behind the punishment the stock is getting today. Pankaj, great to be speaking with you this morning. Good to have you on the show. So, thinking of Eicher, I was just wondering, how does one play the consumption bonanza that came through in the budget? And I think the consensus that we got was that it will be rather spent on discretionary items than sabun and tel, so to speak, right? What's your thesis around it? So, when you find, whether it's autos or home improvement or even, leisure and hospitality, would these be some pockets that you would look at?
I think consumer durable looks more better place to be benefiting out of the tax rebates that the government has doled out in that sense. And I'm hoping that some part of that will certainly trickle down to staples as well. The fact is that we are in the middle of a sharp consumption slowdown. Rural consumption has been slow or sluggish now for almost 7 quarters. Urban consumption has been slow for almost 4 quarters. A lot of meaning something like apparels, a lot of broad categories have seen negative growth or very modest growth in that sense in the last 4 or 6 quarters. Apparels have had a negative growth, organized apparel, which is pretty surprising because we don't see negative growth in apparel so often. So I think from the overall landscape, probably consumer durable is one segment which looks like, should be a beneficiary of that probably in the second half of this year as we see revival in the consumption. And I also think that we'll see some recovery in staples as well, because the growth or volume growth in staples have been very modest over the last 3 years, but probably now income levels should catch up with the sharp rise in inflation that we have seen in the last 3 years, and we should see some recovery in staples as well.
Just on consumption, a follow-up, what kind of a multiple would you be willing to give to some of these consumer platforms / internet companies, right? With the Swiggies and Zomatos of the world. And I mean, you spoke about retail. I could also ask you about Trent, which was the poster boy. I mean, a consumption stock, a retail stock trading at 90 times, 100 times forward earnings. But so much has changed over there as well. So, any other pockets of discretionary that you would consider where maybe stock prices are coming now more in sync with reality?
Yeah, so on the platform companies or the new age companies, I think the challenge there, valuation is not, they will always be priced richly because markets would look at longer term value because it's a space where winner takes it all. So, and generally in in the internet space, generally the trend is that, the top 2 or 3 companies makes 120 or 150% of industry profits because all the other players lose money. So the nature of the business itself leads it to a oligopoly kind of a structure. The point is with some of these companies that we have seen pullback is we are seeing a much heightened competitive intensity in that sense, whether it's in quick commerce with some of the incumbents trying to make a comeback, or in fashion and beauty, where some of the larger players or omnipresent retailers are heightening the competitive intensity. So I think the issue there is about competitive intensity than about longer term valuations in that sense. Coming back to in terms of profits, as I said, durables at this point of time looks better placed in terms of growth. So we like some of those companies, including likes of Havels or within mid caps, something like a Crompton Consumer. I still think I agree with you that probably we should see a recovery in discretionary. The growth recovery in discretionary should be much better than staples. So we own names like Jubilant Foods, which we think should be a beneficiary as and when consumption revival happens, or United Spirits, which should again benefit from the revival and discretionary consumption in that sense. So we are focused more on urban consumption, and within that urban discretionary consumption, we think that will see a faster recovery versus some of the other categories.
Okay, Jubilant Food and United Spirits. I think we must have contributed to the sales for these two companies at some point, most of us for sure. Nigel.
Well, Pankaj, I wanted your view actually on the top 2 Nifty losers right now. Eicher Motors, that's down close to around 5% as we speak, and Apollo Hospitals as well as reacting to its numbers. I don't know whether, a new entrant into the hospital space, we had the news about the Adani Group making its entry out there, whether that's weighing on to sentiment as well. And that's why that name is now down close to 5%. Any view on either of these two names? Well-run franchises, some kind of softness in their numbers, but in the past they've delivered good numbers. Your take?
Well, as far as Eicher is concerned, I think the numbers are pretty healthy in that sense. So one trend which is becoming visible, Nigel, as we saw in the case of Trent as well, what we were alluding to, is probably while companies are reporting pretty healthy numbers, but probably the growth expectations that's priced into the stock is much higher. So when the Trent stock corrects, even after a 32% EBITDA growth, which essentially reflect that the stock was pricing in much higher growth at about 40% plus. So probably a 32% growth in that sense didn't sound so great to the street in the context of expectation that were priced in. I think the similar case with Eicher or with Apollo in that sense. So obviously, all of these stocks have done phenomenally well over the last year or couple of years in that sense. So I think it's more of a pullback than anything or than poor numbers in that sense.
Pankaj, just very quickly, I remember you liked SBI, right? You still like SBI, I think. Numbers from PSU banks have all been pristine as compared to private sector players. But stocks are, is it the broader market mood or is something wrong here? PSBs.
Well, within the state-owned banks, obviously we own SBI. We've liked it for a very long time now. I still think that the inherent value of the implied value of the franchise is much higher than what market is pricing, and at some point of time, market will take cognizance of that. I think this quarter's numbers have been pretty good for all of these banks, and especially for SBI has been a pretty decent set of numbers. More importantly, valuations are pretty reasonable. and the growth outlook continues to remain reasonably healthy. I think financials within the overall market is one sector, and especially lending-oriented financials, where valuations are far more reasonable as compared to other pockets of the market. The sector, financial sector, is one of those segments of the market which is trading at almost about 25-30% discount to the Nifty index. And the sector has underperformed in the last 3 years. Asset quality is pretty strong. Hopefully, meaning loan growth should pick up going forward from the second half of next year, and that should improve the growth trajectory of these companies. So probably, I think private sector financial should do well, and within that, SBI or some of the other private sector names like HDFC Bank or Kotak Bank, which have been laggard for a while, should certainly catch up.
Okay. All right, Pankaj, got that point. Thank you very much for joining us on the show today. Good to get that perspective and advice from you. By the way, just a quick check on the screen and look at this. This is a repeat of yesterday playing out all over again. Look at the mid-cap market now. Large caps are okay. This is not the problem. Nifty is only down 70 points, which is still fine. The mid-cap market has again started dealing with a fair amount of stress. Over 1% down on the mid-cap index, 1.3% to be precise. And you're again so early in the morning, nearing that level where there are 2,000 stocks declining and less than 400 stocks advancing. So really, really painful on the mid-cap screen. Just some names: Agility, Newland, Varroc is down 6%, KPI Green 5%, Zaggle is down 9%, EPAC Durables, long list out there. So plenty of pain in the broader markets.
Well, that's right. Plenty of pain in the broader markets. And on the headline index, you don't want this mark to break decisively. We've been making this point, 23,250 to around 23,300. Very, very crucial that we defend this mark. It's because the 20-day MA comes in out here. And even in yesterday's trading session, we went down to here. So crucial to defend this, and also keep an eye out on the broader markets because a lot of stocks are seeing quite a bit of selling pressure. Let's see whether some of them get bought into. But let's talk about good things. And one stock that delivered a very, very good set of numbers and probably the best quarterly performance that we have seen from their end is Nalco. The numbers are good. The problem is, what's the way ahead from here on? To help us out with that, we're joined by Mr. Brijender Pratap Singh, the Chairman and Managing Director of the company. Hi, Mr. Singh. Good morning. Thanks a lot for speaking to us here on CNBC-TV18, and we look forward to speaking to you more often. Well, congratulations on a solid showing in the past quarter. However, now the street is a little bit, sketchy. What's going to happen to prices from here on, given that President Trump is putting in some tariffs out there, and even we have seen pricing has pulled back. What is your estimates on alumina as well as aluminium prices from here on?
As far as alumina prices is concerned, alumina prices in October somewhere it rose to around $800. And now it has come down to around $500. That was a seasonal sort of thing because of some production cut in Australia and also New Guinea issues of production from export from New Guinea. Now the production of Australia has started. So the pressure on alumina prices will be there in the coming time. It has dropped down to around $500, $530. And in the coming time, it can further drop. Maybe around same level it can retain also. But as far as aluminium prices are concerned, LME, the forecast for this quarter is around $2,575, and throughout the year it was around the same. And the next year it is around maybe 26 is the forecast. But after this declaration of the tariff, the pressure will be there on the prices because whatever imports which is going into the US market, the surplus of aluminium will be available in the market, which may come to the other markets. There can be another effect also because in US, there are some of the smelters which are not working. Those smelters can start. Otherwise, the price pressure will be there, aluminium price in the US market. So demand can go down in the US. That can be also happen. Or maybe some smelters can start and overall production will start in the US. That will require more and more alumina also. So some requirement of alumina can go up. So it will all depend on what will be the smelter operation in the US and what will be the demand and consumption requirement in the US.
All right. So as things look as of now, you'll be working with the base case for alumina around $500 per ton and aluminium around $2,500 per ton. Should that be fair?
Aluminium will be around maybe 25.70 we are expecting. That should be quarter. In the next year, financial after March, maybe it can drop down by around maybe $20-30. But maybe around 20.70, 25.70 will be that. And alumina will be around maybe 500 plus minus 10-20.
Got it. Okay, so we have got the pricing equation out of the way. The problem is the street is appreciating the past quarter's numbers, but they know because of the fall in alumina prices, well, the profitability will not be as good as what we saw in quarter 3. Let's talk about the cost element then. Captive coal is something that you have been gaining on. So could you tell us what is the captive coal, your benefit that you're seeing in quantity terms as well as in cost savings for FY25? And for FY26, how much higher will that go? Because then you'll have both the blocks that will be on stream, so the coal saving will be higher. Please go ahead, sir.
As far as our captive coal is concerned, our total coal requirement is around 7 million ton, out of which around 3.54 million ton we are taking from the linkage coal, and around 3 million ton was from e-auction coal. The e-auction coal, earlier years, the prices were on the higher side. Now the e-auction coal prices have also gone down. But the difference between the cost of our captive coal and the e-auction coal still remains to be around 400 to 500 rupees per ton. That is the kind of difference we will be having. So that will account for the saving of around maybe in the next year, financial year, our captive coal production, which is this year, it will be around 2.5 to 3 million ton, will increase to 4 million ton next year. So our e-auction will be zero, not taking any e-auction coal, only linkages coal will be taking, and some amount of linkage coal also will be reducing. So we will be saving around 150 to 200 crores on that in the next year.
Okay, 150 to 200 crores additional in FY26 in comparison to FY25?
Not in addition to, if you talk about FY25, that will be around maybe 100 and 120 crores.
Okay, 120 crores. Okay, got it. All right.
2 million ton. Next year we'll be doing around 4 million ton.
Got it. All right. What about if you could tell us the progress on the 1 million ton alumina, the expansion that you were talking about? Does that come on stream in sometime in FY26? Give us a timeline of that. And how much money has been spent and how much more will you spend?
As far as this alumina refinery, fifth stream refinery is concerned, around 70% of the physical progress job is over. Our target is to start in the September, maybe 1 month or 2 months here and there. Maybe we'll be starting in the third quarter of this year. As far as the total project cost is concerned, the total project cost was around 5,700 crores on almost 37 already we have spent in, and the major payments will be coming in this year, around 1,500 to 2,000 crores. So we will be adding around 1 million ton alumina production once it comes. Maybe this financial year we'll be having around maybe 2-3 lakh tons only. And next financial year means FY26 we'll be having around 2 or 3 lakhs because we'll be starting in the third quarter. And in the next financial year, that is FY27, we'll be adding up around 1 million ton extra alumina production.
Okay, all right. Final question, sir, before we let you go. Margins in the past quarter were close to 50%. That's much higher than what you've seen in the past. Going by the cost saving, going by the current prices, what kind of an EBITDA margin should we be looking at?
If this quarter, if you're talking about quarter 4 EBITDA margin, we have already, if we see the jump in the margin, it was around 161% jump in the margin as compared to 9 month if we compare to previous year. And out of that, around 62-63% jump in the EBITDA margin was due to the revenues, and around 99% of the jump in the margin was due to our cost saving and operational expenditures. So our present EBITDA margin, which is around this quarter, was around 44%. It will go down slightly, and maybe we will be ending the year at around maybe 25 to 30%.
Margins are sustainable at 25-30%. Very quickly, what is the current cash in your books?
Cash around 4,000 crores.
4,000 crores. It's been a pleasure talking to you, sir. Thanks a lot for joining in. You've given us a fair estimate about how you see things panning out. We re-invite you in a couple of weeks or a couple of months to, give us an update about how things are progressing on ground. Thanks a lot for speaking to us here on CNBC-TV18. Well, time to slip into a short break. On the other side, we'll have the management of Apollo Hospitals who will be joining in to help us out with their quarter 3 earnings. Stay with us.
Welcome back. We continue with our corporate conversations. Apollo Hospitals is the next company on the radar. Now, Apollo reported a pretty good set of numbers for the third quarter. EBITDA margin improved by about 110 basis points. Revenue was in line with estimates as well. And most of the businesses of the company have grown between the 13 to 15% range. To talk about the way forward, we have with us Ms. Sunita Reddy, Managing Director at Apollo Hospitals. Ms. Reddy, always a pleasure to have you on the program. Thanks so much. It's been another good quarter for Apollo Hospitals. But before we dive into the numbers and the details, I think the buzz on the street is, I can't even say new kid on the block because it's a very large business conglomerate that seems to be getting into healthcare now. The Adani foray, the Adani entry, along with Mayo Clinic at that. What are your thoughts on, whether the market is big enough or not? But what does it typically do when large conglomerates enter the space? Of course, it's good for patients, but what does it mean for business?
Well, I think it's good for business as well, because you see that, first of all, the structural demand that gap is still very large. The second is a validation that these type of hospitals, this format is the right thing to do, which is why people like Adani are entering the business. There's huge potential also for India to attract international patients from across, especially from our neighboring countries. And if you look at Adani's location in Bombay at the airport, I think he's really tapping into the potential of international patients coming to Bombay.
Okay, you're of course, being very, very gracious as you always are. So it will be good for perhaps a lot of the international patients looking at Bombay as a destination. But again, I mean, just to press on that point, does it, in the cities in which we have such a large launch happening, with more beds coming in, and I think they're talking about, 1,000 beds, does it drive down pricing in any way whatsoever, or is the demand way too much for it to make any dent on things like pricing?
So Bombay, as we studied it, is a 70,000 crore market. I am sure there's space for many providers to do well. And, if you look at the way the city is growing, definitely huge opportunity. And 1,000 beds, I have to say that Apollo thinks differently, because we've been cutting down our ALOS almost every year, which shows that even with the 400 bed or 450 bed capacity, we're able to do really good revenues. And if you look at our performance this quarter, with 68% occupancy and a reduction of our loss by 1%, we've actually created additional capacity of 160 beds.
The demand for healthcare, of course, absolutely exploding, and quality healthcare. Ma'am, thanks very much for joining us. Good morning, Prashant here. So let's just talk about the numbers. Revenue growth has been 15% on a year-on-year basis. What was the mix this time that led to a 8% increase in average revenue per occupied bed? It's just under 61,000 rupees. And what is the guidance here going forward? This quarter, Jan to March, and ahead as well.
So the ARPOB really grew because of our Congo mix. There was a 10% increase in volumes for Congo, which is cardiac, oncology, orthopedics, neuro, and gastro. These grew really well, and this resulted in the increased ARPOB. So if you look at total growth of 8% came from ARPOB, and the balance 5 from volumes.
8 from ARPOB and 5 from volumes. That's how it breaks up.
Yes.
Okay. All right. And on the ARPOB side, what can we expect going forward, in your opinion?
We had said earlier that for this year, 8% growth is really good growth, especially because we've calibrated case mix really well. A slight tariff improvement has also added to that.
So ma'am, is the 60,000 mark for ARPOB sustainable? What are the trends that you're seeing so far in the fourth quarter? By the time we exit FY25, will ARPOB, sustainably be above 60,000?
It could be above 60,000 because in metros it's around 70,000, and ours is also present in Tier 2. But clearly, this is a very sustainable ARPOB that can grow at 4%, continue to go even by another 4 to 5% going forward.
Hi, good morning, ma'am. Good to see you in. What about Apollo Healthco? Out there it's shown a good revenue growth, I think of mid-teens, and also margin improvement is what we've seen out there. What's the outlook on this business?
So if you look at Apollo Healthco, revenues came in at 2,352 crores, representing 15% growth. But more importantly, the company turned profitable with 32 crores of profit. And going forward, we're seeing increase by 25%. We have 7.9 lakh users, and that increase in utilization is really driving both revenue and profitability.
Okay, and what about Apollo 24/7? The GMV, I think we were looking at was around 4,000 crores, is what you briefly mentioned. Is that on track?
We're not on track for 4,000, but clearly our GMV at 760 crores represents an 11% increase. But more importantly, I think we need to calibrate growth with profitability. And this is the strategy that Apollo will employ, that growth is important, but profitability is required.
Okay, so you end the year then at what? If not 4,000 crores, should it be in that vicinity of around 3 to 3,500 crores, since you've already done nearly around 800 crores in the past quarter?
Yes, yes.
Ms. Reddy, speaking of profitability, I'm looking at Apollo Health and Lifestyle, and there at the net level, of course, losses have reduced quite a bit from 14 crores. The losses down to about 8 crores. When do you break even at the net level for Apollo Health and Lifestyle?
In next year's first quarter, we should break even. We are really driving the diagnostic business with a 15% margin, and I'm sure that we are ready to scale it. We've set up global reference labs that really has a very high-end test menu, which will give us better margins. With this, we should be able to achieve profitability next year by the second quarter.
Okay, so that's important. Break even by maybe Q1 of FY26, and moving towards sustainable margins of 15% in Apollo Health and Lifestyle. So got that. That's an important headline. On the other one, Apollo Healthco, where the margin right now is 2.4%. What's the scalability there on the margin profile?
I think in 3 years, they should reach 7%. Let's not forget that a large part of the revenue is coming from the offline pharmacy, where the margin is 7.7%. So they do have a huge growth plan to increase the number of pharmacies. Currently, they have 6,320 pharmacies. They've added 120 pharmacies, and there's a strong 7.7% margin. So over a period of 3 years, you can expect to see a consolidated margin for the business of 7%.
Okay. Finally, before we let you go, ma'am, just an update on the corporate merger that's underway, the integration of Kaimed Private Limited. On that whole corporate restructuring piece, where exactly are things now?
We're going according to schedule. And that's why I said, watch out for our third year. Hopefully everything will fall into place. The integration should happen by then.
So that's in year 3, you're saying?
I'm saying it should be completed by year.
Okay. All right, Ms. Reddy, we'll leave it on that note. Thank you very much for joining in and giving us perspective on the business, as well as the entry of a new player in the healthcare space with Adani announcing their plans. Well, with that, just a quick check on the markets once again. Things have kind of stabilized to an extent. The Nifty decline has been arrested for now. The cut is just about 0.2%. And even for mid-caps, at one point in time, it was looking like a deeper gash. But now the mid-cap index is also pulled back a little bit. The cut is about 1%. Okay, 1.4%. Maybe I need to refresh my screen then. All right. It's still a little painful.
No, actually,
for the mid-cap space.
It's lower than that. I think there has been a bit of a recovery. The mid-cap index, that's correct what you're saying. It's
1%.
It's recovered 0.5% from the day's low.
Okay. All right. On that note, let's quickly move on. And Nykaa is the next management on the show. The company reported a stellar set of numbers for the third quarters. Profit jumped by 51%. EBITDA grew by more than 42%. To talk about this, we have Ms. Falguni Nair, founder and CEO of Nykaa, with us. Ms. Nair, thanks so much. It's been a really great quarter and a all-round improvement across parameters in a tough consumer environment where lots of companies are struggling. So you tell us, what are the categories that have led to this outperformance, and do you worry about the so-called urban consumption slowdown?
No, I know. I'm very much aware that overall in the industry, the market has been quite bad and the growth has been quite subdued. But, the entire set of consideration has a lot of businesses which are not digital. And I think if you have to look at it in digital businesses, the growth has been good. So I personally feel that at Nykaa, we have delivered both great growth as well as profitability. And I think that is very unique to Nykaa. So I can't say that it was I think it was a quarter which is seasonally strong quarter. I think Nykaa has a lot of its strength play out in that quarter. And we also have been focused on a lot of new customer acquisition over last 2-3 quarters. And I think that is playing out well. And also we are using a lot of AI and ML to drive a lot of personalization. And I think that remains a strength that, the e-commerce platforms have.
Falguni, could you give us a sense of your revenue mix from own brands, third-party brands, and the outlook on margins from here on?
Our business is so big, so it is very difficult to share it in that manner. It's a big business and also a complex business. And as you're aware, we have a lot of repeat customers who are constantly buying from the platform, and their engagement continues to be very strong. We disclose that lifetime, we've now acquired about 40 million customers on our platforms, So I think it's very difficult to break it into that. I think we tend to drive it from our own strategy of wanting to balance both new customer as well as a repeat customer growth. I think about a year ago, what we discovered is that in trying to optimize our marketing costs, we were driving more of repeat customer behavior rather than new customer. And I think we consciously changed that over last 3-4 quarters. And the benefit of that is coming through in terms of much stronger acquisition in our new customer acquisition. However, you can also see that our physical store rollout is also going strong, and that is also giving us further increase in growth momentum. But even in physical retail, even after 210 stores, physical retail accounts for just about 9% of our omni-channel retail sales. So we continue to be predominantly an e-commerce company.
Well, Falguni, what about the sustainable growth path for the BPC business, both on the revenues as well as margins? What kind of trajectory are you seeing out there?
I think we do believe, and we've said so many times, that beauty consumption, it is a very early stage of growth, and what is happening in the ecosystem is only going to accelerate the growth of beauty consumption in the country. And we, as the largest player with all of the channels, we have, we also have eB2B, which distributes to retailers, which is also growing nicely. We have now faster delivery. So with all of we have stores, we have e-commerce, we have our own brands. So with playing in all of the ecosystem, we do want to come out ahead of the industry growth and continue to maintain our lead. So that should give you your answer. But I think we do believe that e-commerce, beauty overall will grow a lot, and within that e-commerce will grow, and so is retail store environment is growing, and we are rolling out a number of stores.
Ms. Nair, now fashion as a category, it started doing really well for you, no doubt about that. But perhaps it's not growing as fast as expected. What is your strategy going to be on this business?
Well, I think on fashion, we are very happy that we are a platform of choice for the consumer, from premium products, high quality and on trend, and we want to stay that, and that's our moat, and we want to continue to build towards that. I think what we've been doing in fashion is adding a lot of exciting brands on the platform. We shared that over last 2 years, and particularly over last year, we worked very hard to improve the assortment, because I think e-commerce starts with assortment, and people forget that for us, fashion is only a 5-year-old business. And I've been saying for last 2 years that we are continuing to build the assortment, and more better quality assortment is coming on the platform. Like, we're really proud of the fact that We just launched Snitch. We also launched Victoria's Secret recently. Before that, we had launched Foot Locker, and many other great brands like Calvin Klein and Tommy and others have been launched. So I think we continue to add to the platform a number of D2C brands, domestic brands, international brands. And I think we are in it for the long haul. I think from a profitability perspective, you can already see that our EBITDA loss is only at around 5.6% negative. And you also can see that the marketing cost is at about 30% of our revenues. And I do feel that marketing is something which is controllable. Yes, we couldn't control it in the last year that it went by. I think there were certain experiments on marketing that we tried which didn't work out, and the growth disappeared, and we needed to revive the growth. But we do believe in the long run we should be able to control the marketing costs as the mix of new and repeat customer it keeps improving on the platform, and that is already happening. Like already the platform has more than 70% customers who are repeat and only 30% are new, and as that ratio improves, our marketing costs do come down. And that's our path to profitability for fashion.
All right. Thank you very much for that explanation. Very useful. Now, a little bit about competition, right? Lots of competition around the BPC segment with Tira and others. Now, with Reliance having tied up with Shein, what's your comment on how a competitive landscape is likely to turn out? And what does it mean for a large player, incumbent player like you?
Yeah, I think on the fashion side, Myntra and Ajio are a couple of competition that we are the strongest competitor from a platform perspective. I think what we keep reminding ourselves and everybody is that fashion is a very large business. It is 5 times the size of the beauty and personal care business in India. And it consists of so many sub-segments. So there is like women's Indian wear, women's Western wear, there is men's wear, there is sportswear, there is accessories, there is kids, home. So I think one functions in all of these categories, and there's enough to offer footwear. So there's enough to offer everywhere. And Shein is at best one brand in one category. So I think from a brand perspective, it may be strong, but I think from a platform perspective, there's enough for platforms to do.
All right, Falguni, thanks a lot for stopping by and giving us all of those details with regard to the past quarter's numbers and how you see things pan out from here as well. Well, while we were having that conversation with the management of Nykaa, the markets actually have moved to the low point of the day. The mid-cap index is down again close to 1.5% or thereabouts. So there is consistent selling that we're seeing on the screen. The only good factor, I think, is that the rupee has seen a good recovery. That's it obviously has its benefits, its pros as well as cons, but the rupee actually is at the high point of the day. Yesterday, it had gone down to 87.75 and now it is at around 86.75 or thereabouts. Mitesh is back with us. Mitesh, is it going to be a bit of a down day?
That could be the case, Nine. But again, I think in case we are going to go into some kind of contraction, then this level should hold. 300 280 zone. We're right there. So for them, waiting and watching this film. But on the stock side, I have a buy on Tech Mahindra and a sell on Tata Power. Sorry. Tech Mahindra is a buy with a stop at 1685 for targets of 1750. And Tata Power, that's on the negative or the sell side. Sell here with a stop at about 356 for targets of 335.
I know something like a Zaggle, I'm just... it's down another 10%. Mitesh, I don't know if you've looked at cash stock, but have you looked at this one ever? It's basically back to levels of, March 24. Yeah.
Not recently, Prashant, but earlier there was some, when the mid-caps were doing well, I was tracking the stock. I think the stock has good support around 350, 340 marks. So maybe around those levels, we'll see the decline come to an arrest. But importantly, I think the medium and the long-term charts with the gap down have been, kind of damaged yesterday and today. So I think on any rallies, if you get the stock closer to about 410, 400 levels, time to exit.
Just some more names, by the way. Look at CRISIL. Stocks are getting completely smashed this morning. CRISIL's down 8.5%. Piramal Pharma is down 6%. And Sirma, these are, the EMS guys end up becoming the perfect whipping boys many a times. It was PG Electroplast yesterday. Sirma this morning is down about 5 to 6%. Mitesh, just quickly on some of these EMS names, they've all come down dramatically from their peaks. Sirma, PG, Dixon. Any advice here, any important levels? Because there would be people who still hold these stocks and they'd be wondering whether to now cash out, book whatever profit remains and just basically exit.
See, I've been tracking only Dixon out of all these stocks because that's the one which is most liquid and in F&O as well. The stock after decline has been consolidating and 14,500 to about 15,400, 500 is the range. But the structure is still slowly turning more negative. So I suspect a test of 200 average, which is at about 13,510 levels. I think that could be the next target area. So I still believe there's another 1,200, 1,300 points decline possible here.
Look at the capital marketplace, right? Look at K Fintech, for example. And that's the problem. I mean, stocks, K Fintech, for example, fell to about 1,050. It bounced to about 1,250, 200 rupee bounce in about 3-4 days. And today it's back to about 1,080, 1,090. Those who are waiting for sharp turns, and you get a bit of a sharp turn, and then you sort of go back and retest those earlier lower levels. I mean, confidence takes a beating, and people will get more and more sort of unwilling to try and, buy as soon as stocks come off a little bit more. I mean, essentially, people would want to wait a little bit more. And that feeling that because if you don't buy here, maybe you're going to miss the bus, I think that goes out of the window. And that's what price action like this does across a wide swath of stocks. And I'm not just talking about K Fintech. There are so many others which had bounced around starting the 1st, 2nd of this month when the budget had been presented. From those levels, stocks had recovered and they're all turning back. Not quite to exactly the lows, but close to the lows. They've retraced quite a bit. Well, we'll take a quick commercial break here. We're going to come back, focus on iShares and ESAF SFB, that's a small finance bank. They're reacting to numbers as well. Stay tuned, coming up.
Welcome back. Let's focus on some stocks that are catching the attention this morning. And Eicher Motors is definitely one of them. But for the other reasons, stock's been down 5-6%. That margin decline is something that the market is not willing to wrap its head around easily. So Darshan, tell us more. Is that the only reason, or was there anything else missing in the Eicher numbers this time?
So firstly, stock is under pressure. It's down 5% because margin has come in at a 7-quarter low, that is at 24.2%. Now, if you remember, after Q2, for the first time, company had said it would prefer growth over margin. And if you look at over last few months, even in Q3, volumes were up 19% sequentially and year-on-year. Even the last, every month, company has been reporting volumes of more than 90,000 units. So theme is playing out that yes, volume is good. But the question is, what would be the margin level that company would be comfortable with? Because it's a 200 basis points down. It has come at 24.2% versus 26.2% in the same quarter last year. So this is the real question. There would be certain level of margin that company would be comfortable with. Now, what was the reason that margin has come down or slowed? First, weak adverse product mix. Company had recently launched Bullet Battalion. That had helped volume to move higher, but negatively it impacted margin because it's a low margin product. And second, company has been unable to take any price hike over the last few months. So there are certain factors that has been impacting the margin. Yes, company's theme is playing out of growth, but the question is on the margin, and that's the main reason that today you are saying that stock is under pressure.
All right, so thank you very much for that. That's Eicher. It's a big move. ESAF SFB is the next one. Abhishek is here with details. Just to revisit, Abhishek, morning.
Morning, Prashant. So, ESAF SFB is perhaps the only lender to post a second consecutive of net loss. Disbursements are up 42.5% YOY and about 26.6% sequentially. But this has not translated into loan growth. So, loan growth is very weak at about 5.5% YOY and a marginal decline that you can see sequentially. The net interest income is down 18.5% YOY and about 10% sequentially. It's the only lender, amongst all the listed entities, that is banks and SFBs, to see interest income decline both YOY and quarter-on-quarter. So as a resultant, the net interest margin has come under pressure at about 7.9% versus 8.6% in the previous quarter and about 10.6% in the same quarter last year. Provisions that rose sharply. It is up 197% YOY and more than 20% sequentially. So they have reported a net loss of 211 crore versus 190 crore in the previous quarter. Asset quality, that was the pain point. Slippages do remain elevated. Slippages are at 505 crore versus 517 crore in the previous quarter. The annualized slippage ratio is perhaps one of the highest that you are seeing in the banking sector at about 10.5% versus 10.8% in the previous quarter. To maintain the asset quality as per previous quarter's numbers, they have had a huge write-off of about 450 crore in this quarter versus 430 crore in the previous quarter. Back to you.
Okay, got it, Abhishek. Indeed, that's a really high slippage ratio, 10.5% slippage ratio. That's ESAF, Small Finance Bank. Let's quickly move on and talk about some other cues that we're getting in from the commodity markets as well. The India Energy Week has kick-started in New Delhi today with over 120 nations participating in the 4-day event. Our colleague Manisha is standing by with more details on what to expect. Manisha, very sure that all that Mr. Donald Trump is doing will also find its way into the conversations there at this event.
Well, today is the day one of India Energy Week. This is the third edition, and in this third edition by itself, it's become the second largest energy gathering in the world. Especially, this is an important time as well, because for 2025, this is the first time that you have various countries, ministers and CEOs gathering together to take a stock of what really is happening globally in sense of tariffs, retaliatory tariffs, the geopolitical tensions, the energy transition, and of course the energy demand and investment itself. What we do understand that IEW, or the India Energy Week this time around, is looking at participation from 20 foreign ministers from Qatar, UK, Russia, Brazil, etc. There are 90 CEOs present here as well from various energy companies, 70,000 delegates, 700 plus exhibitors are taking part into this. Well, there are also 10 country pavilions here, including US, Canada, Japan, Germany. The day one today is expected to focus on ministerial announcements. Remember, there are various energy ministers from many countries here, so they would be making announcements there. They would be taking stock of what's really happening in the international markets and its impact on energy security. Apart from that, there also is a hydrogen bus ride today. Well, that's a key highlight of the day today. And then there are various MOUs slated to be signed as well. MOUs between BP and ONGC, BP and EIL, Honeywell and AM Green. Honeywell also with NTPC would be signing an MOU. These are some of the few MOUs that I have listed out for you. Apart from that, Minister Puri will be holding bilateral meetings today with energy ministers of Qatar, UK and Russia is some of them. And then there is focus on oil security, on energy transition, energy collaboration, energy resilience, also energy transition capacity and energy digital frontiers. These are some of the topics that are going to be spoken about at India Energy Week today. This is just day one. This is what we have been told to expect from the day today, and plus much more in sense of experience, in sense of AI and experiential stuff that has been put out here. What really comes out is something that I will keep coming back to you with a sense on information on what really has been discussed here.
Okay, so watching out for all the headlines coming in from that high-profile event. Manisha, thank you very much for that. We have to take a break on that note. On the other side, it's time for It's the Economy. Lata will be in conversation with Niti Aayog member Ramesh Chand on the impact of the budget and the tariffs on Indian agriculture.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल।
Welcome back. Today on It's the Economy, we focus on agriculture. The budget didn't actually increase the total allocation to the Agriculture Ministry. It actually fell by about 2.5%. But the government announced a bunch of technical missions like Mission for Pulses, Atmanirbharta in Pulses actually, a mission for cotton, mission for high-yielding variety seeds, and even for fruit and vegetables. Separately, now another issue, the Reserve Bank cut rates, betting that food inflation is headed lower in the months ahead. And a third separate issue, the United States is forcing India to reduce its tariffs, and that brings the question on whether India will have to bring down tariffs on even products like milk, fruit, vegetable, and thus endanger rural India or several sections of rural India. For all these variety of questions, I have with me India's foremost agriculture expert, Professor Ramesh Chand, member of the Niti Aayog. Dr. Chand, thank you very much indeed for joining us. I know I've stuffed in too many questions, but let me start first with this tariff issue. I mean, it is only now that I did any research on what are the tariffs we impose on US vegetables, on US frozen seafood, meat, milk and milk products, 30 to 40%. Do you think we are in danger of having to bring all this down to 10%? And will that mean we are going to endanger a lot of Indian semi-rural industries?
I will not say we are in danger. We have enough capacity in agriculture to make it more competitive and to compete with imports which are qualitatively different, which have some advantage in terms of price. Just to give you one example, I was in USA in the month of December, and I found Amul milk selling at a premium price in US store. So if our Amul milk can compete with the milk that is produced in USA, that indicates something that why we should be afraid of low price milk coming through import into the country. There are several examples like this where whenever we were exposed to competition, Indian agriculture stood up to the challenge, and in the short run there were some problem, but after some time we became more competitive. Another example is when under WTO we were required to open up our market. Initially there was some setback, but after that you just find our share in global trade, global export for most of the commodities and for total food has increased. So Indian agriculture has enough capacity to improve efficiency, both in production, in logistics, in marketing, to stand up to this 5 or 10% reduction in tariff.
Okay, so especially milk and milk products, which is a very large industry. I think we are either the largest or the second largest producer in the world. And in fruit, you would not worry that our farmers will be hurt.
You see, there are contradictory indicator in case of milk. If you look at OECD report, it just says that Indian farmer is net taxed as far as milk and dairy products are concerned. If that is the case,
really?
It speaks that our prices are lower than what our international price, and we should not be unnecessarily be afraid of this competition to dairy kind of thing. If you compare quality by quality, then you just find that we are competitive. Sometimes we start comparing products which are qualitatively different, and problem comes there. If you compare product of same quality, you just find that we are competitive. And I gave you example of Amul, that Amul selling in US market, not in small quantity. Just find it selling in large volume in Costco in US stores.
Okay. So, no, that's very encouraging, sir. Coming from you, I mean, I would take it, very optimistically. Let me come to the next question. The Reserve Bank is betting. The rate cut has come primarily, it is not a core inflation problem at all. That has been under 4%. It has been largely food, which has been the inflation rising between 8 and 11% over the last 18 months. December was the first month when we saw it recede. Are you confident that 2025 we will be in mid-single digits or low single digits on food inflation?
I recall that on your channel in the month of December, I just said that by March, the food inflation will come down significantly, but it has happened much before that. In fact, my own take on food inflation in the month of January is that it will be below 5%. So I think those months of high food inflation are now over. For a couple of months after next year situation, what kind of situation emerges cannot be said with confidence right now. But as far as next 3 months are concerned, you will find the number for month of January. You will see that inflation has already come to the comfortable zone. Not only single digit, I will say it will be half of the lowest double digit.
Oh, that is excellent, sir. You feel confident about up until March. You are saying that for the latter part...
Up to April, up to this...
yeah, I get it. After that, you are worrying. You would say that it will depend on the monsoon. Is that why you're not committing?
I'm not worried. I can't say anything with certainty as of now. Some more variable need to be considered. International situation, what kind of forecast for monsoon comes, those kind of things. But indicators are available to say something with confidence up to month of April.
Okay, that's extremely helpful. Two of the most burning issues, you have given us some peace of mind: tariffs and interest rates. Now let me come to the budget. So the budget announced very correct technical missions. There was for pulses, for cotton, for high-yielding variety seeds, and there was also a program announced for fruit and vegetable. But I didn't see any amount being announced. If you looked at the Agriculture Ministry, and the allocation is coming up on the screen, for agriculture research, the increase in the funding was only by 3% to 10,466 crores. For the entire ministry, the total allocation has gone down from 1.41 lakh crore to 1.37 lakh crore. So, where does this confidence of running these various missions come?
See, in allocation of budget, many times you put figure based on what is RE for the previous years. But those kind of expenditure, two type of expenditure. One is which are committed, that even if figure go very high, you are going to increase it. So I just looked at the individual figures. One reduction happened in case of insurance. So if the expectation is that we are going to have normal kind of Rabi season, there will not be requirement for paying much as a insurance. So it makes sense to lower the allocation for those kind of items. But those kind of items are open-ended. If the situation requires that it requires, say, 15,000 crore or 20,000 crore, government has to pay it. The flexibility is there only in terms of, say, making rural roads, that after your budget is exhausted, you don't do it. But if you are committed to say that we will give subsidy on urea, and a bag of urea will be sold for 270 rupees, even if the amount increases significantly, government is bound to achieve that. So I think we should not read too much from these budgetary figures.
Allocation.
Regarding your question that these
vegetables in particular.
you see, by this focus on first this, let me say, fruit and vegetable. If you look at the past 10 years, you find that the growth of fruit and vegetable is almost 3 times the growth rate of output of field crops. Field crop means cereal, oilseed, pulses, cotton.
Yes.
But we found that horticulture is done just on about 7% area, and large number of farmers do not do horticulture. So we suggested to government, and I'm happy it has been accepted, that we need to slightly change the focus of our mission integrated development of horticulture. Rather than spending on horticulture on the existing household, we should bring more and more farmer under the fold of horticulture. So we should take horticulture to more farmer and extension in terms of supply of quality plants which are free from disease, etc., good quality kind of things. So that is the reason to put emphasis on horticulture, that number one, horticulture growth is 3 times the growth rate of other crops, and it is driving the overall growth rate of horticulture. And secondly, some of the field crop, the growth is low. We want those farmers also to put some area under horticulture. So if they diversify little bit, even if they put, say, 10% of their area under horticulture, the income can increase by 50 to 60%. That is the kind of power of horticulture, that productivity of fruit and vegetable for India as a whole is about 6 times the productivity of field crops. So this is the reason that emphasis has been given. And another reason is that this latest survey on consumer expenditure, which is now available, you find that direct intake of cereal is either not increasing or it is falling. But if you look at fruit and vegetable, among all expenditure class, even bottom 10%, you find that intake of fruit is increasing. So because of these reasons, that scope from prospect from supply side and demand shifting significantly in favor of horticulture crop, the emphasis has been laid on fruit and vegetable.
Okay. So unfortunately out of time, but I'll take a rain check from you for a more detailed discussion on the budgetary proposals. We did not understand it with this depth and color at all. It requires a much more detailed explanation. Unfortunately, at this point in time, we're all worried about why the rupee has strengthened from 88 to $1. Today, right now, it is 86.6 or thereabouts. So it's been a sharp increase. There are other pressures on us, but we will come back to you for a detailed discussion. Thank you very much for your time. We have to wrap up on Bazaar. On that note, Chartbusters coming up.
पूरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे बाकी तो अब बाकी देखते हैं
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18.
Eicher Motors, that's the top Nifty loser today as the stock has corrected following a weak set of third quarter numbers. The margins at a 7-quarter low. Morgan Stanley issues an underweight call. UBS too cuts its target on the stock.
Apollo Hospitals is down close to 3% even as the third quarter numbers beat estimates. The management tells CNBC-TV18 the company could see an average revenue per occupied bed of over 60,000 rupees going ahead.
Grasim trades with gains despite a weak third quarter performance as losses reduce in new businesses.
Online beauty and fashion retailer Nykaa trades with gains following a strong third quarter where profit grows over 50% on a year-on-year basis. The management tells CNBC-TV18 that the digital business continued to do well despite a slowdown in consumption.
Shares of NALCO trade weak despite strong third quarter. The street fears earnings may have peaked in the short run. The management tells CNBC-TV18 that aluminum may come under tariff pressure.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. But we have results that are coming in thick and fast. So let's get straight to our first management. Signature Global, that's the one that's a little bit lower in trade. They reported their third quarter numbers. Understand what's the way ahead. Is there any tweaking in terms of the guidance that they've given us earlier? We have Rajat Kathuria, the CEO of the company. Hi Rajat, good morning and good to see you. When over the weekend I met a friend who had come to see one of your apartments and they were quite happy and quite impressed. So good on you all on that front. But what about your shareholders? They'll want to know whether you're revising any of these numbers that you'd given us earlier. The pre-sales number, I think the target was roughly around 10,000 crores, which will appear you're on target to hit that. However, collections, I think y'all are just around 53-55% of what y'all set out to do, which was around 6,000 crores. Do you want to revise any of these two numbers?
Yeah, Prashant, so thanks for inviting us to your show. So yeah, I see whether in terms of launches or pre-sales, I think we look very comfortable for the year. And even if you look at the trailing 12-month numbers, so while for this quarter, our pre-sales was about 27 billion INR. And, for the 9 months, it was around 87 billion. And if you look at the entire, trailing 12-month period, we've done 128 billion or 12,800 odd crores in terms of pre-sales. Likewise, even in launches, if you look at the trailing 12 months, we've kind of exceeded our annual guidance. We have a bit of catch up to do on both collections and completions. But this quarter is expected to be quite good on both of those parameters, and hence we've kept the guidance constant.
So how much above 10,000 will you, sell this year? And how much below 6,000 will you collect this year?
So, Prashant, at least on the housing side, see, what we are witnessing in our market is that as we are creating supply, at rightful price points, demand is getting created. So even if for these 9 months, while we've got an increase of about 8.5% in terms of realizations, but it still stands below 13,000 rupees a foot. So consumption is fairly constant. Last 4 quarters, every quarter we are either a notch below 3,000 crores in terms of pre-sales or above. So, we are hopeful that consumption, the demand for, these middle income homes will stay robust during the current quarter, while, all these, macro headwinds are, just kind of troubling the market. But at the local market level, it's kind of, fairly, going good.
That still doesn't answer our question. This year, how much above 10,000 crore will you be in pre-sales, and how much below in collections will you be from the 6,000 crore guidance that you had given us?
So we will definitely surpass 10,000 crores in terms of pre-sales. So you're right that we'll cross 10,000 crores. It's quite in the face. And we will kind of, try to strive to 6,000 number. But, honestly, on both these numbers, let the, quarter pass by. It's tough to kind of, predict it with precision.
Okay, all right, Rajat, and I think it's a Delhi collection, but Prashant's not in the studio. Nigel and Mangalam are in the studio. We are both the Mumbai boys, but no worries. So Nigel and Mangalam on the show. Let's talk about the debt number. That's been quite good. I mean, you'll have reduced the debt. What's the target out here? Because you've got a lot of construction that's going on as well. Do you see further room to reduce this debt, or do you believe it will stabilize at these numbers?
No, it will further reduce, Mangalam, my bad earlier. But yeah, it's bound to reduce further. So see, operating surplus is quite healthy. Even at the collection level of about, 3,300 crores for the first 9 months, we had a surplus of about 1,200 odd crores, which was split equally in terms of business development, and the balance went towards either debt reduction or debt servicing. So that's on a declining path. Despite us, staying active in terms of business development, we foresee this number to decline further, on a quarterly basis. So it should go below 500 is kind of, an early prediction, but it should fall below 500 by the end of the year.
All right, should go below 500 crores is what you're saying. You have both Nigel and Mangalam on the screen right now. The previous question was asked by Nigel, and I am Mangalam right now. Rajan, be that as it may. What about the next year? The last few quarters, you've been doing 2,500 to 3,000 crores of pre-sales every quarter. Do we see this run rate going slightly higher? So maybe something around 3,500 to 4,000 crores. Could we see FY26, you targeting around 12.5 to 14,000 crores in terms of pre-sales? And if that were the case to be, what would your collection target be?
So see, a little premature to give, targets for the coming year. We've been growing in terms of our pre-sales on a continuous basis. And the simple reason for that is the, sustained supply creation we've done. So even in these 9 months or 12-month period, we've consistently launched new projects at rightful price points and locations, where we've kept kind of, taken concentrated bets. They're all paying off, and, gradually more and more macro factors are also supporting. For instance, this reduction in, tax slabs by the government to now starting off reduction in, repo rate. More infra developments taking place in Gurgaon, for instance. Phase 2 of Metro is about to, kickstart. And, 2 of our 3 key locations will be very close to, the new metro stations, which will be coming up. So, all these things, we keep educating, our potential customers as they visit our sites. So definitely we are, looking northwards in terms of our next year target. But, we will wait to see where we close at the end of this year.
Okay, all right. Rajat, final question before we let you go. Could you quantify the launch pipeline?
So we during the trailing 12 months, I think we've done launches worth 17 to 18,000 crores. That's the full calendar year, I'm saying. Our dry powder is comfortably at least twice that size on which we are right now sitting and working on replenishment.
So around 3,400 crores, approximately.
35 to 36,000 crores of...
35 to 36,000,
yes,
apologies.
That's the dry powder we're sitting on.
For the next
launches.
Over the next 1 year, is that correct?
Over the next 2 to 2.5 years, we don't need to launch everything at one go, but we have that kind of land potential and land resource with us in the company at this stage.
All right, we take that point. Wish you good luck, Rajat, and hopefully by the next quarter you will be able to give us a better outlook in terms of what you're expecting from FY26, and we'll have a better handle on how much above that 10,000 crore have you gone in pre-sales, and how much have you collected,
closer to the collection,
and how much closer to the collection you are as well. We'll take that that point and take your leave as well. With that, let's talk about Growth Code, an initiative coming in from Grow and CNBC-TV18. We'll leave traders with some essential tips and strategies. Let's get you what Saket Ramakrishna, who's the trader and founder of Quick Alpha, had to say about the common misconceptions in the trading world. Listen in.
What are the tips that you would like to give in your experience as a trader and now an entrepreneur to the young traders who are looking to venture into the markets?
So firstly, it's mostly about having the right mindset. So most of us are here without understanding what trading is for quick money. So just because we have seen in a lot of places where people have made, they post that they have made quick money, and also it is on the other hand a business where people sell dreams. So they sell tips, they sell courses, they sell a lot of things where they themselves are not making money, but they sell dreams of making money, and due to which a lot of people get lured and they get into this process of making quick money.
What are the common misconceptions that you would like to bust through this platform of these young traders and enthusiasts?
So first, going by the statistics, so mostly when you come to markets, you would be among the 93%, but not the 7% who will actually end up making money, right? So when you come into the markets, unless you're coming into investing, don't come with the hope that you will actually be making money. So try to avoid as much as social media noise and try to focus on the basics of it.
Tell us about your journey and what are the ups and downs that sort of you took a lesson from.
What really happened is, for my first almost 1.5–2 years, I only saw the market go up, because when I entered, I think Nifty was around 5,400 or 5,500. From there on, 2014, we had the election and market saw a fantastic bull run. By 2015, when I was into market, so I already had started F&O by then, right? So I had only seen a bull phase where the markets went from 5,500 all the way to 8,500, right? So in my mind, it was never that the markets can actually fall.
All right, with that, let's cut across to Prime Minister Modi, who's at the inaugural session of the India Energy Week. Let's hear out what he has to say.
साल 2030 तक हम 500 गीगावाट रिन्यूएबल एनर्जी कैपेसिटी ऐड करना चाहते हैं। साल 2030 तक भारतीय रेलवे ने नेट जीरो कार्बन एमिशन का टारगेट रखा है। साल 2030 तक हम हर साल 5 मिलियन मैट्रिक टन ग्रीन हाइड्रोजन कर सके, ये हमारा लक्ष्य है। हमारे ये टारगेट्स काफी एम्बिशियस लग सकते हैं, लेकिन बीते 10 साल में जो भारत ने हासिल किया है, उससे ये विश्वास पैदा हुआ है कि ये टारगेट्स भी हम जरूर हासिल कर लेंगे। फ्रेंड्स, बीते 10 साल में भारत 10th लार्जेस्ट से 5th लार्जेस्ट इकोनॉमी बना है। बीते 10 वर्षों में हमने अपनी सोलर एनर्जी जनरेशन कैपेसिटी को 32 टाइम्स बढ़ाया है। आज भारत दुनिया का तीसरा सबसे बड़ा सोलर पावर जनरेटिंग नेशन है। हमारी नॉन फॉसिल फ्यूल एनर्जी कैपेसिटी 3 गुना बढ़ी है। भारत G20 देशों में पेरिस समझौते के लक्ष्यों को पूरा करने वाला पहला देश है। भारत कैसे अपने लक्ष्य समय से पहले प्राप्त कर रहा है, इसका एक और उदाहरण है इथेनॉल ब्लेंडिंग। आज भारत 19% इथेनॉल ब्लेंडिंग कर रहा है। इससे फॉरेन एक्सचेंज की सेविंग हुई है और सब्सटेंशियल फार्मर रेवेन्यू जनरेट हुआ है। साथ ही CO2 एमिशंस में सिग्निफिकेंट कट भी आया है। हम अक्टूबर 2025 से पहले ही 20% इथेनॉल मैंडेट अचीव करने की राह पर है। आज भारत की बायोफ्यूल्स इंडस्ट्री तेजी से ग्रो करने के लिए तैयार है। हमारे पास 500 मिलियन मैट्रिक टन्स का सस्टेनेबल फीडस्टॉक है। इंडिया की G20 प्रेसिडेंसी के दौरान ग्लोबल बायोफ्यूल्स अलायंस बना और लगातार एक्सपांड हो रहा है। इससे 28 नेशंस और 12 इंटरनेशनल ऑर्गेनाइजेशंस जुड़ चुके हैं। ये वेस्ट को वेल्थ में ट्रांसफॉर्म कर रहा है और सेंटर्स ऑफ एक्सेलेंस सेट कर रहा है। साथियों, भारत अपने हाइड्रोकार्बन रिसोर्सेज के पोटेंशियल को पूरी तरह से एक्सप्लोर करने के लिए निरंतर रिफॉर्म्स कर रहा है। बड़ी डिस्कवरीज और गैस इंफ्रास्ट्रक्चर के व्यापक विस्तार के कारण हमारा गैस सेक्टर एक्सपांड कर रहा है। इससे हमारे एनर्जी मिक्स में नेचुरल गैस का शेयर बढ़ा है। भारत अभी 4th लार्जेस्ट रिफाइनिंग हब है और हम अपनी कैपेसिटी 20% तक बढ़ाने में जुटे हैं। साथियों, हमारी जो सेडिमेंट्री बेसिन्स है, इसमें कई सारे हाइड्रोकार्बन रिसोर्सेज मौजूद है। इनमें से कई का पता चल चुका है और कई ऐसे हैं जिन्हें खोजा जाना बाकी है, जिनका एक्सप्लोरेशन बाकी है। इंडिया का अपस्ट्रीम सेक्टर और आकर्षक हो, इसके लिए सरकार ने ओपन एकरेज लाइसेंस पॉलिसी OALP बनाई है। एक्सक्लूसिव इकोनॉमिक जोन को खोलना हो या सिंगल विंडो क्लियरेंस सिस्टम बनाना हो, सरकार ने इस सेक्टर को हर तरह से मदद दी है। ऑयल फील्ड्स रेगुलेशन एंड डेवलपमेंट एक्ट में हुए बदलाव के बाद अब स्टेक होल्डर्स को पॉलिसी स्टेबिलिटी, एक्सटेंडेड लीजेस और इंप्रूव्ड फाइनेंशियल टर्म्स की सुविधा भी मिलेगी। सरकार के इन रिफॉर्म्स के कारण समुद्री क्षेत्र में ऑयल और गैस रिसोर्सेज की खोज करने, इनका प्रोडक्शन बढ़ाने और स्ट्रेटेजिक पेट्रोलियम रिजर्व्स को मेंटेन करने का काम आसान होगा। साथियों, भारत में कई डिस्कवरीज और बढ़ते पाइपलाइन इंफ्रास्ट्रक्चर के कारण नेचुरल गैस की सप्लाई बढ़ रही है और इसी कारण आने वाले समय में नेचुरल गैस का उपयोग भी बढ़ने वाला है। इन सारे क्षेत्रों में आपके लिए निवेश की बहुत सारी संभावनाएं बन रही हैं। साथियों, आज भारत का बहुत बड़ा फोकस मेक इन इंडिया पर है, लोकल सप्लाई चेन पर है। भारत में पीवी मॉड्यूल सहित हम लोकल मैन्युफैक्चरिंग को सपोर्ट कर रहे हैं। 10 साल में भारत की सोलर पीवी मॉड्यूल मैन्युफैक्चरिंग कैपेसिटी का विस्तार हुआ है। ये क्षमता 2 गीगावाट से बढ़कर करीब 70 गीगावाट हो गई है। पीएलआई स्कीम की वजह से ये सेक्टर और आकर्षक हो गया है। इससे हाई एफिशिएंसी सोलर पीवी मॉड्यूल्स की मैन्युफैक्चरिंग को बढ़ावा मिला है। साथियों, बैटरीज और स्टोरेज कैपेसिटी के सेक्टर में इनोवेशन और मैन्युफैक्चरिंग दोनों के लिए बहुत अवसर हैं। भारत बहुत तेज गति से इलेक्ट्रिक मोबिलिटी की तरफ बढ़ रहा है। इतने बड़े देश की डिमांड पूरा करने के लिए बैटरीज और स्टोरेज कैपेसिटी के क्षेत्र में हमें बहुत तेजी से काम करना है। इसलिए इस वर्ष के बजट में भी हमने ग्रीन एनर्जी को सपोर्ट करने की संबंधित अनेक घोषणाएं की है। सरकार ने ईवी और मोबाइल फोन बैटरी की मैन्युफैक्चरिंग से जुड़ी कई चीजों को बेसिक कस्टम ड्यूटी से बाहर किया है। कोबाल्ट पाउडर, लिथियम आयन बैटरी वेस्ट, लेड, जिंक ऐसे अनेक क्रिटिकल मिनरल से ड्यूटी हटा दी गई है। नेशनल क्रिटिकल मिनरल्स मिशन भी भारत में एक सशक्त सप्लाई चेन के निर्माण में बड़ी भूमिका निभाएगा। नॉन लिथियम बैटरी इकोसिस्टम को प्रमोट करने की दिशा में भी हम आगे बढ़ रहे हैं। इस वर्ष के बजट में हमने न्यूक्लियर एनर्जी सेक्टर को भी ओपन कर दिया है। एनर्जी में हो रहा हर इन्वेस्टमेंट नौजवानों के लिए नई जॉब्स क्रिएट कर रहा है, ग्रीन जॉब्स के अवसर बना रहा है। साथियों, भारत के एनर्जी सेक्टर को मजबूती देने के लिए हम इसे जनता की पावर से लेस कर रहे हैं।
7 p.m.
I'm committed to buying and owning Gaza. As far as us rebuilding it, we may give it to other states in the Middle East to build sections of it. Other people may do it through our auspices, but we're committed to owning it, taking it, and making sure that Hamas doesn't move back. There's nothing to move back into. The place is a demolition site. It'll be, the remainder will be demolished. Everything's demolished. I mean, you can't live in those buildings right now. They're very unsafe. But we'll make it into a very good site for future development by somebody.
Mr. Speaker, sir, with your permission, may I ask a slightly different question pertaining to gold? In the year 1971, Richard Nixon, who was then President of the United States of America, gave up the gold standard. After that, gold was hardly considered to be a serious financial asset. In 2006, gold constituted only 6% of the reserves of the central banks of the world. In the year 2024, it is up to 11%. China, India, Poland, Turkey are the most aggressive buyers. Even in India, there has been a surge in the domestic price of gold. My question to the Honorable Minister is that this shift away from the dollar to gold, does it indicate a renewed search for an alternative international settlement mechanism, de-horse the dollar? That's my question to the Minister.
So the Honourable Member, has he himself mentioned that it is not the core part of the question, but he's still asking, and I would certainly like to give my brief answer on it. India's, as he observed rightly, the demand for gold in India has not come down. On the contrary, it's going up. And I would think it is very typical of India, particularly for households or small businesses, and it is normally said women, but general households also and women also, to invest in gold because they think it's far more secure and far more liquid, and therefore as an asset class, we see that sustained interest in it by the households and small businesses.
Welcome back. Sharp sell-off for the market continues. The mid-caps now down 1,200 points. Amidst that, Patanjali Foods actually delivered a good set in the third quarter, led by sharp surge in edible oil prices, and as a result of which the improvement in the operational performance out there. They also had the benefit of the home and personal care business in their results this time around. We have Sanjeev Asthana, who's the CEO of the company, joining in. Sanjeev, thanks a lot for joining in. A little short on time, so if you could keep your numbers or answers a little crisp with numbers. Just one thing, the edible oil volume growth in the third quarter was what, if you could tell us that, and how has your market share moved in the third quarter, along with what is a sustainable run rate for that business when it comes to the operational performance? Because earlier you had targeted around 250 crores, then there was that big up move that we saw in prices, and from those volatile highs, the prices have come off as well. So on a sustainable basis, what is the quarterly run rate that we should look at in the operational performance there?
So thanks for having me. Our volume-wise, there's a marginal degrowth. It's pretty much flat, and this is reflective of the the imports and the high prices in the edible oil side. On the run rate side, as we've always maintained, that we should be able to pretty much maintain on a good performance side about 4% of EBITDA margin. I think pretty much we stay true to that. And to answer your question on the market share, I think we'll pretty much remain at 10% as we are currently. But it's constantly moving up. I think it's just a matter of one quarter. We saw that blip in the volumes dropping, but this was across the board for all the industry players, not just for us.
All right. And what about the home and personal care business? You had earlier alluded to, this year doing 1,500 crores in the revenue, next year going upwards of 2,000 plus crores as well, 2,000, 2,500 crores, if I remember correctly. The first quarter, you're around 430 crores. Where does that revised number stand at for this year and the next?
Took just 2 months of revenue in this quarter, the previous quarter. We did integrated that on 1st of November. We did about 430 crores. Our target, what we had mentioned of 15% growth rate. So hitting a number of in the full fiscal next year of upwards of 3,000 crores. We are pretty confident of doing that. And I think it will be closer to 3,200 crores based on the early reflection that we have. And the way our distribution strategy, our new product launches, etc., is happening. So we're very excited. We've maintained a margin of 15% in this quarter, which will improve closer to 18% in the next quarter. And thereafter, we hope to maintain and bring in the synergies of this integration to a better level as we go forward.
And this year, what do you end at?
This year, what do you end at, sir? In the home and personal care? Yeah.
HPC, we should be this year we should be closer to 900 crores is what the estimation is. So broadly we will do in next quarter closer to about 300 closer to 600 crores, and I think we should be at about 900 to 1,000 crores.
Okay, 900 to 1,000 crores for the year. What about non-oil
That's
as
only
a percent?
That's only for 5 months. Sorry, just to correct
That's
that.
correct. And the next year you'll do 3,000 to 3,200 crores. We got those numbers down. Non-oil as a percentage of business, I think it's roughly in the mid-20s. And you were guiding that it goes to around 50%. By when?
So 50% we had said in 4 years' time. This particular quarter, because of the high edible oil prices, that percentage came down. Our overall non-edible oil revenues remain pretty much stable. We saw some degrowth in the consumer staples category in the rice business in particular, but that was only one-off blip. We should be pretty much on course on a target of 50% in 4 years' time, and progressively every quarter on quarter we'll keep on improving from 30% what we had in the last quarter.
And let's wrap up with the weakest part of your business this time around, the FMCG, personal care business, where the revenues actually declined by quite an amount. And we also had the EBIT declined by about 45%. The foods business, that is, FMCG foods. What's the prognosis here? By when do you see improvement? And what's your target for the next quarter and next year?
Yeah, so as I mentioned, it was not, the weak part was only in one particular product category, which was the staples, the rice, where the prices dropped by 10%. And then we took, hit of 35 crores. Overall, we are pretty much on the run rate of 8 to 10% margin, which we maintain. In the first 9 months, we are already at 9% plus. We should end up the year with close to 10%, which is a projected number that we gave for the food side. So we have continued to grow on Nutrela, biscuits we are growing, nutraceuticals we are stable. On the foods part, as I mentioned, 250 crores of drop. So that showed a drop, but that's a one-off. I think we should be getting out of it in this quarter.
All right, we take that point. Thank you so much for candidly, fielding all our questions and giving us the outlook for the business going forward as well. Wish you good luck. With that, we're out of time on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.
Of India. But beyond that, of course, the Reserve Bank also is buying gold to make sure that it has adequate reserves of gold and not just a basket of currencies. And in that, one of the currency which predominantly has been held by the Reserve Bank has been the US dollar. But we also have the reserve currencies in denominations of different denominations of other currencies as well. But the gold is also kept in the Reserve Bank, and gold is also being bought by Reserve Bank. But beyond that, as regards an international currency or potential currency, there's not much for me to comment at this stage.
Right now. So we thought this would be appropriate. Even bigger than the Super Bowl. This is a big thing. And almost everybody now has assented to that.
Attention on board. Ladies and gentlemen, if you could please direct your attention out the right side of the aircraft. Air Force One is currently in international waters, for the first time in history, flying over the recently renamed Gulf of America. Please enjoy the flight, and we are now about to head westbound to Super Bowl 59.
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar, and with me is Vivek Iyer. As always, Vivek, the sell-off is now extending itself for the 5th day in a row. The benchmark indices are under pressure, particularly the broader markets, and that's been the worrying point for our markets. Look at the fall that we've had from its 52-week high. On the mid-cap index and the small-cap index, it's now approaching about a 13-15% kind of fall from its all-time high levels. And the only good thing is the broader market, the global setup in that sense, because despite all the noise that you're hearing surrounding the tariffs, it's not that you are seeing a big sell-off in the global markets. This is the picture on a year-to-date basis. Today, of course, the Japanese markets is shut, but the picture across Asia is mixed. So there is noise on the global market front in terms of headline, but the indices themselves are fairly unscathed.
Good morning, Reema. First up, what a fall, you just highlight almost a 16% fall. What a number that is, especially from the recent top. Well, we are focusing on a few important developments. First up, early tomorrow morning or later today evening, we'll actually have the MSCI come out with its Feb index review. This time around, not too many changes are expected. But what is it that IIFL Capital is expecting? They're expecting Hyundai India, a recent listing, to enter. They are expecting the exclusion of Adani Green Energy, and IndusInd Bank, post the headroom as far as FIS is concerned, that particular stock is expected to see a weight increase. A couple of other stocks on the radar, as far as this particular hour of the show is concerned, look at Torrent Path. That particular stock, after a Morgan Stanley downgrade, that stock has seen a significant sell-off. Couple of hospital stocks, Max Healthcare, Apollo Hospitals, both of these are the ones in focus. New entry, a new player coming into especially the Mumbai as well as Gujarat market, and these stocks are seeing significant selling pressure. And have a look at Eicher Motors, a downgrade coming in from UBS after a margin miss as far as Q3 is concerned. Top stocks on the radar, especially at this hour, and most of the stocks that we're discussing are on the negative side today morning.
Indeed. For Eicher Motors, Morgan Stanley has pegged the target price at 3,855. And they're saying it's very difficult for the company to achieve both high growth and maintaining margins. And something's, got to give. But that's Eicher Motors. And even Apollo Hospitals, which you referred to, has now moved to the day's low. It's a fall of more than close to about 5% coming through on Apollo Hospitals right now. But let's get to some other important news. And this is some positive news coming through for United Breweries, because the Telangana government has hiked beer prices by 15%. Sudarshan is now joining in. In fact, he had alerted us just about a month back about the potential hike and the release of funds from the government in order to, pacify the situation. He's now joining in with the details, Sudarshan.
Remember, on January 20th, we had reported that government will be releasing the order related to beer price hike in Telangana in 30 to 45 days. So finally, price fixation committee that was set up by government has recommended price increase, and yesterday late evening, government has released the order, and the order says that beer price will be increased by 15% effective today, that is February 11th. Now, the also important part is that whatever the store, like on depot, whatever the store of beer is there and whatever is in transit, so all those will be sold at revised prices. Basically, all those would be sold at increased prices, that is 15% increase. But more than that, the important part is about the pending dues, for which even that company had stopped the supply. Now that we understand from sources that first installment of those 500 crore dues that was related to UBL, of that 500 crore, government has released 130 crore in the month of January, and the remaining dues, as per sources, would be released in the installment, basically 12 to 13 installment that government had announced. So first installment has been released. So two important part. First, price has been increased by 15%. Second, of the dues, first installment of rupees 130 crore for UBL has been released. That's the reason it's positive for United Breweries.
So much, Sudarshan, for joining us. You've been highlighting this particular development ever since this particular news did break up. But moving on, Transrail Writing reported a strong set of Q3 numbers, with its margins expanding and profit rising 92%. To discuss more on the company's quarter gone by, we are joined by Randeep Narang, the MD and CEO at Translail Writing Limited. Thank you so much, sir, for joining us. First up, last time you joined us, you just declared the Q3 results around 15-20 days ago. So you had mentioned that the top line that you're expecting to grow FY25 at was close to 30%. You had given us a margin guidance in the range of 11.7 to 12.2%. Are you on track? And what will be the PAT percentage at the end of Q4?
So we are absolutely on track, as we had mentioned 2 months ago. We are on track. Our revenue growth is around 30% over last year, which is going to happen. As you see, the Q3 results are also in the same vein. We have grown by 25 to 26% over last year. And EBITDA margin profile will be 12.5% as we had forecasted. Our PAT would be around 5.9 to 6% is what we are looking at. As currently we are at 5.9%. So that's the forecast. So we are on our guidance and we look forward to delivering good numbers this year.
EBITDA margin, Randeep, hi, Rima here, will be 12 to 12.5%. Is that correct for the full year?
So we are at 13.1 now. So we are looking at 12.5% plus. We still have a quarter to go. And
but are you anticipating some margin pressure to kick in Q4? Why are you not confident to hold margins above 13% for the full year?
I would rather talk about 12.5% plus and over deliver. That's the way I prefer to position it. And of course, we have a lot of work in terms of project execution happening in this quarter. So that's the way it is. And definitely we are confident to achieve what we are doing.
Mr. Narang, the other question that we want to understand from you is current order book, excluding L1 is close to 11,500 crore. What is the current L1 position? What are the orders in the pipeline? And with the prospective order pipeline, if you take into account your win ratio, where do you expect to end FY25 in terms of order inflow, and where will your order book be at the end of FY25?
So with L1, we're at 15,000 today. 4,144 is the L1. Breakup of this approximately is 2,500 is domestic and 1,500 or 1,600 is international. So that's the current breakup, which we hope that these numbers will from L1 will fructify into actual awards by end of March. So we are looking at order intake this year around 7,500 crores. And we believe that our beginning of next year, our order book to execute would be around approximately 16,500 crores.
7 to 7.5% in terms of an order inflow. But for the first 9 months, you've done 4,700 crore. So you are anticipating a big pickup in Q4.
Yes. So we've done 4,715 and 4,144 is the L1, which will fructify in the last quarter.
What about FY26, Randeep? What are the early indications? Will FY26 be as strong as FY25, a 30% kind of a top line growth, 12.5% EBITDA and 6% PAT margins?
Yes. So we have an order book which will sustain us for 2 years, plus new orders coming in. We know the margin profile. So we will maintain the EBITDA margins and the growth will be 25 to 30% as we are growing this year. So it's a healthy trend and the order book is supporting us.
Mr. Narang, one last question. When it comes to the international orders, we understand you do have some exposure in Bangladesh as well, and there have been some issues in terms of actual execution there. What percentage of your order book is exposed to Bangladesh? And secondly, when it comes to international orders, could you give us a sense of the EBITDA margin differential, between international as well as domestic orders?
Okay, so I'll talk about Bangladesh. There was a month delay because of the change in government in Bangladesh. But since then, we have started working aggressively and we are absolutely on track on Bangladesh in terms of the work happening, in terms of execution. So we have absolutely no problem on Bangladesh in terms of execution and support from the Bangladesh government, the PGCB being our client there. And there are 6 jobs, out of which 4 are EXIM based and then 2 are government of Bangladesh. So 20% of the order book is from Bangladesh currently, and which is going to continue in terms of execution. The next question which you asked was on the Africa bit. What was the second part? Sorry, I missed it.
Differential between domestic and international orders.
Yeah. So the margin profile, international orders are in the range of 12.5 to 13.5, and domestic will be 10.5 to 11%.
Thank you very much for joining in. That's Transrail. The stock is holding up in the green. It's come off from the highs, 589. But it's done well compared to its issue price of 432 towards the end of last year. December 27th is when the company listed. It went to a high of 718. That's the 52-week high in its short span of being on the Lal Street. It's come off, but today on the back of good numbers, at least it's holding afloat. Get into a break on the other side. We'll discuss market technicals. Mitesh Thakkar will join in next.
Welcome back to Trading Hour. Well, the weakness as far as the broader end of the market persists. A good time now to speak to Mitesh Thakkar. He joins in for a quick technical check on the market. Mitesh, what are you making of the markets at the current level, especially the broader end of the markets, and any individual picks for the day, or will you refrain from any individual stock calls today?
I think, one, I've been, I was bullish a couple of days back, and then we got the trade stopped out because we got a decline which much more than what I was anticipating. Having said that, my belief is that we still haven't given any strong bearish signal, and while the market is down today, that could possibly mean some volatile consolidation. So I think in that sense, today's low becomes important, 23,250. And I was looking at 23,300 to begin with, but 23,250 to about 23,500 could be the range. If we start breaking below 23,250, I'll be worried, but till then it looks like, market might just chop around a bit, be slightly volatile, but may not see a decisive move on the downside. Having said that, on the stock side, I have one buy and one sell. On the buying side is Bajaj Finserv. Keep a stop around 1760 here. Look for targets of around 1825, 1830. And on the sell side, I have Bandhan Bank, which I would recommend selling with a stop at about 148.5 for targets of 140.
Thank you very much for that. We will get into a break. On the other side, we'll invite the management of Sarda Energies to discuss their Q3 earnings. Welcome back. The pressure is mounting on the mid and the small cap indices and individual stocks. The advanced decline ratio is 1:9. One stock advancing for nearly 9 in the red. These new age tech companies like Swiggy, Zomato, Ola Electric continue to crumble. Look at the way Swiggy, it's now much below its IPO price of 390. The stock today has even breached 350 rupees. Jyoti Structures, a 20 rupee stock, is down 22% in a span of 2 days. Varun Beverages under pressure post numbers. Newland Laboratories, ESAF Small Finance Bank, GSFC Insecticides are today's accidents on the back of numbers. There's also one more, Sarda Energy. Now, the stock is under pressure, but here the numbers were actually fairly good. The company's EBITDA rose by 103%. The profit after tax was up 76%. But the stock, as you can see, is under pressure, but that's the market for you. PK Jain, Director and Group CFO of the company, is now with us on the show. Mr. Jain, thank you very much for joining in. First, we have the reported numbers, but there is that contribution of the acquisition of SKS that you all did. So what was the contribution to the revenues in EBITDA because of SKS, and what would the numbers look like if you strip that out?
Yeah, SKS this quarter has got the full effect, and in EBITDA it is a little less than 50%. But that includes the effect of the coal mines also, because the coal is provided from our own captive coal mines. So in the EBITDA level, before interest and depreciation, our contribution of the SKS power plant is little less than 50%.
Okay, and on the top line, your top line was about 1,310 crore. Yeah. How much of it was incrementally because of SKS?
Top line is about 35% is from the SKS.
35%.
So the other question we want to ask you, Mr. Jain, is that when it comes to SKS, what is the full capacity when you acquired? What is the current operational capacity, and what is the capacity that is left to be operational? And post operationalization of all of the capacities, what will be the quarterly EBIT run rate from this particular from the power business?
We have acquired a power plant having 2 units of 300 megawatt, and that is the present capacity. Capacity is fully operational, but because it was under IBC, so proper amount was not spent on the maintenance of the plant. So capacity utilization was lower. Gradually it is improving. And in the month of January, we have achieved 97% of power load factor. And we expect the annual power load factor to be normal in the next financial year. We should be able to achieve somewhere in the range of 80%.
So which is about Sorry, go ahead.
The total generation capacity is 600 megawatt, which is fully operational as of today.
As of today. But in Q3, what was the capacity utilization, and in the December quarter, what was the capacity utilization, and now that it's almost 100%, what will be the incremental contribution to the margins?
Yeah, in December quarter, it was somewhere about 75%, 73-74%. And
so as it goes,
annual capacity should go above 80%, somewhere in the range of 80% plus minus.
Okay, Mr. Jain, let's now talk about the iron ore pellet as well as the sponge iron business. Give us a sense of the prices over there. Give us a sense of the realization trends that you've seen. What is the volumes you are penciling in for FY25, and any initial estimates that you've made as far as FY26 is concerned?
So far as pellet prices are concerned, pellet prices have improved a little from the third quarter average realizations. We had an average realization of, I think, 9,100 plus. Now it is hovering in the range of 9,700. And in case of other steel products, billets, sponge iron and wire rod, etc., prices are hovering at the levels at what we achieved in the quarter 3. So except pellets, in steel prices are more or less in the range where it was in quarter 3. So far as ferroalloy prices are concerned, ferroalloy prices have moved up post quarter 3, and realizations are maybe 10 to 12% higher than the quarter 3 average realization. And so far as volumes are concerned, we have not carried out any expansion in last 2-3 years. So volume will remain more or less stable, except a little bit improvement on account of the efficiency improvement steps taken by the company.
So do you want to put a number to the volumes for FY25? What could it look like for iron ore pellets and sponge iron?
Iron ore pellets, somewhere production should be somewhere in the range of 8,20,000. more or less in the range of the previous year. In case of sponge iron also, it will be a little bit higher than the previous year. It should be somewhere in the range of 3,25,000. And in case of steel and wire rod, it may be a little less because we have been selling power whenever we are getting better realization on the energy exchanges. So to that extent, the production of steel may be affected, but it will not affect margins. It will improve the margins because we are selling power at a better price than what we realize from production of the steel.
Understood that, sir. Mr. Jain, could you give us a sense of the demand trends, especially where will you end FY25? You did give us a sense that you're expecting little improvement in FY26, even though you've not really added capacity. So give us a sense, number one, of the entire volume trend, and number two, how do you expect EBITDA margins to move from here on, especially in the consolidated space with the addition of the power business?
Yeah, at consolidated space, the EBITDA margin must improve because volume-wise also there will be few more additions. We are starting the one hydropower project by the end of the current financial year. We are also completing the mineral wool project by end of this current financial year, and we will be starting production from our new coal mine, Garepalma 4/5. So all these things should be able to add to our EBITDA levels for the present year. And SKS Power also, this year we had only for 7 months. Next year we will have full year operation. So that should substantially add up to our EBITDA levels from the current year.
We leave it here. Mr. Jain, thank you very much for joining in out of time on the show today, but all the best. As we wrap up the Growth Code, which is an initiative by Grow and CNBC TV18, we want to leave traders with some essential tips and strategies. Here's a snippet of what Saket Ramakrishna, trader and founder of Quick Alpha, had to say about the common misconceptions in the trading world.
What are the tips that you would like to give in your experience as a trader and now an entrepreneur to the young traders who are looking to venture into the markets?
So firstly, it's mostly about having the right mindset. So most of us are here without understanding what trading is for quick money. So just because we have seen in a lot of places where people have made, they post that they have made quick money, and also it is on the other hand a business where people sell dreams. So they sell tips, they sell courses, they sell a lot of things where they themselves are not making money, but they sell dreams of making money, and due to which a lot of people get lured and they get into this process of making quick money.
What are the common misconceptions that you would like to bust through this platform of these young traders and enthusiasts?
So first, going by the statistics, so mostly when you come to markets, you would be among the 93%, but not the 7% who will actually end up making money, right? So when you come into the markets, unless you're coming into investing, don't come with a hope that you will actually be making money. So try to avoid as much as social media noise and try to focus on the basics of it.
Tell us about your journey and what are the ups and downs that sort of you took a lesson from.
What really happened is, for my first almost 1.5–2 years, I only saw the market go up, because when I entered, I think Nifty was around 5,400 or 5,500. From there on, 2014, we had the election and market saw a fantastic bull run. By 2015, when I was into market, so I already had started F&O by then, right? So I had only seen a bull phase where the markets went from 5,500 all the way to 8,500, right? So in my mind, it was never that the markets can actually fall.
I do believe we're making progress. We want to stop the Ukraine-Russia war And I want to stop it just because I hate to see all these young people being killed. The soldiers are being killed by the hundreds of thousands. And I expect to have many more conversations. We have to get that war ended. It's going to end, and we have to get it ended. And we have to get it ended soon. Should have never happened, would have never happened if I was president.
Welcome back to Trading Hour. Well, there's been a surprise today. The Indian rupee has done a U-turn this morning and is trading sharply higher versus the dollar. Lavta joins in with more details.
Well, the rupee's rally is absolutely come out of the blue, and it is an extremely sharp rally. The rupee at its sharpest dealt at 86.63, and the overnight close was 87.46. So, you know, it's almost a 1 rupee jump or a 1 percentage point rally in the rupee. And it is surprising because the dollar index has actually strengthened. Last week, Friday night, it was at 107.70 thereabouts. Monday, it went to 108.10. Tuesday, now it's at about 108.4. So dollar is strengthening. Almost all Asian currencies are weakening. Almost all. There's a minor green on the ringgit, but that's minor. Whereas the Indian rupee is extremely strong. And the only reason why it has been strong, the only person who's offering dollars like no tomorrow is the Reserve Bank of India. There are some huge numbers floating around, but all this is market chatter. People tell us that yesterday as well that the RBI must have sold well over $3 billion. Today, in the first half itself, they must have sold an equivalent amount. So the market is only trying to guess why is the RBI standing so much against the current of the foreign exchange flow. And it's not only peculiar to India. You know, all EM currencies are falling. One guess is it wants the other side to come in and sell, the exporters. Typically, Jan, Feb, March is an export-heavy month. We do very well in exports. We sometimes have a current account surplus. So he's probably tempting the exporters to come and sell. Alternatively, they are scaring the speculators. You know, one day the rupee went from 86.50 thereabouts to 87.40. The next day it opened at 87.95, almost 88. I mean, this kind of speculative moves have to be stopped and the speculators have to be hurt. And that may be the position that the Reserve Bank is taking. But at the moment, all these are guesses.
Thank you. And as you could have seen on your screen, Shireen is currently at the IVCA Conclave 2025. Let's cut across.
The last several years, in fact, over the past decade or so, we've seen an increase in the number of buyouts. And, 2022 was a record year, and we've started to see an improvement after a little bit of a lull. We've started to see an improvement in 2024. The sectors that we are seeing controlled deals or buyouts happening in: IT, ITES, healthcare, manufacturing, retail. There's a whole bunch of them. But the outlook continues to look strong at this point in time. So without further ado, Manish Kejriwal, I'm going to get you to start with the macros. As we look at 2025, let's first talk about the global trends that could shape investment strategies in India. Your time starts now.
Thanks, Sharon. Great to be here. Good seeing you again. I think a month ago when we were all in the Alps, the two themes or two topics people talk about was Trump and AI. And I'm just saying that because I think while that's not an investing theme, what the two of those things happen will really influence a lot of the global investors going forward. I think going back to global trends, if you look at it from the perspective of GPs, it's been an interesting year, 23 and 24. I think the biggest takeaway, if we went back to the Investor Council that we had a month ago, was a real lack of DPI and money going. So there was a significant shortage of liquidity, money being returned by GPs to their LPs, which is not good news, given the state of the markets. And because of that, a lesser degree of investment by global LPs into the asset class because there was a lack of liquidity. I think India is in a very different place. I think we're in a secular uptrend, barring the early stage VC when there was a slowdown given what happened 2 years ago. I think we'll see that come back. But if you see this as a representation of the dry powder, even all of us, despite being price disciplined, are stepping up and paying and acquiring assets where we have a high degree of conviction. But the bar is that much higher. And what's helping us is the DPI story out of India, which was a disaster 15 years ago, is today the one thing which is most appealing, not only vis-a-vis the rest of Asia, but as far as the rest of the world, because we have booming IPO markets, which has been actually the exit from the majority of all our positions. But in addition to that, a significant amount of dry capital, as we said earlier, for sponsors, and India being globally relevant, whether it's China plus one, given what's happening to the Ukraine and the Middle East, it seems like even the strategics are refocusing on India. So exits, IPOs, of course, but in addition to that, the financial sponsors, because of all the dry powder we have and because we believe in India, and in addition to that, the strategics. So as a promoter or a GP which controls an asset, our exit options for the first time are multiple and very attractive.
Multiple and very attractive. And I think that has been the change as far as the story is concerned. And we've seen that accelerate, especially in the last few years. Vivek, let me come to you to draw the macros and the micros. And let me start by asking you about the global outlook first, before we talk about India specifically. To take forward what we heard there from Manish, what will be the trends that could potentially shape investment decisions and investment strategies globally, which could have an impact and a bearing on India?
Well, thank you, Shireen. That's a terrific question. Since we're talking about buyouts, to be specific, I think there was a panel earlier where we had a bunch of LPs on.
You're going to have to move the mic a little bit higher.
Okay. Is that better?
Yes.
We had a panel earlier where we had a number of LPs on, and I think David Lowe and others talked about this. What happens in the US matters for what happens in India, right? And I think there are probably three things I'd highlight. Number one, if you just look at where buyouts have gone in India, there's been increasing concentration from about 55% to 75% into three sectors: financial services, IT, BPO, and healthcare.
Yeah.
And we suspect that will actually only continue to increase for very important reasons. These are often family-owned. They're often available for sale. You're effectively buying out other people's equity and capital. They often don't require cash, as much cash for growth, other than M&A and platform opportunities. So that's one trend that we definitely see persisting, is companies who produce great cash, whose balance sheet can be well managed, and whose equity stakes are available for sale. Those three sectors offer a lot. The second is, we actually do believe that the risk-reward returns for buyouts, for when all the LPs do understand this, risk-reward has really favored buyouts over the last cycle.
Okay.
What you'll find is, if you look at large growth, large buyout, small buyout, pipes, and other forms of, effectively what you'll find is that on a risk-adjusted basis, buyouts are outperforming. And it's fundamentally, our belief is because buyouts help you reduce beta in many specific ways, not just how you allocate, not just governance and how you allocate capital, but it also allows you to control exit timing. The third trend, and this is where the US, by the way, people are nervous in the US about this, and in India, hopefully the party will continue, is if you look at buyout specifically and the MOICs, right, on exit, buyout, just other sales to sponsors for buyout companies delivered about a 2.8 MOIC. Sale to public markets at the time of IPO, 5.1. And sale to public markets a year following, 4.8. In other words, a huge amount of the outperformance of buyouts has been route to exit, and that is dependent on how buoyant the capital markets stay. And that's something actually in the US, which has actually been a little more muted.
Yeah.
So as long as the IPO market stays open, we should continue to see great exits.
Well, Mukesh, I want you to build on what we just heard there from Vivek. Do you believe that the party is likely to continue? And again, linking the macros and the impact that the US could potentially have on the way deals are done in India, what would your take be?
I started in Indian private equity 20 years back, and I remember my first deal. That time, if you go back in 2006, people used to pay premium to buy 5% stake in company. And if you ever told anyone that you can buy out a company and sell it in public market 100% of your stake,
they thought you were joking.
People were stated that we were joking. And look, 20 years afterwards, majority of the deals are buyout. And I think as compared to when we have our global offsites where we meet SMDs in other countries, at least one thing great about India is majority of our deals are still primary buyouts, where we're not buying from other private equity firms. Mature markets like US, UK, Japan as well, a lot of it is secondary, where you're buying from other PE firms. So that story has just begun, and a lot of founders have become mature to see what value is being created by especially firms like us and others, and the ability to attract talent, the network which we bring to place. And I think this is where this is just a start, and I think next 10-15 years this story will. Today Blackstone AUM is $50 billion.
Yeah.
Just to give you a perspective, we are the top 10 business house in India, which was the firm which has been started only 20 years back. So, and I'm sure that this trend will continue and PE will dominate a big part of Indian market.
As far as delisting, etc., is concerned, at this point of time, no. I think we continue to be as is. We continue to run our businesses. We've given commitments to our business partners, our customers at large, that we take responsibility as a responsible company for whatever we do in the country. Our focus is continuing to under the sort of conditions that you're seeing, and you explained earlier when you opened across the businesses, making sure we deliver strong growth and profitability.
Welcome back. Sarda Energy, we were chatting with the management, and that stock has seen a bit of a recovery in the last half an hour or so. So it's moved up about, there you have it, from the start of the show at 11 o'clock, it's moved up to a tad bit. And keep your eye on Muthoot Finance. From the day's low, it's managed to recover close to about 2% Here, CLSA has upgraded many of the gold loan financing companies, including Muthoot Finance, and that's put the stock on the flat line. Devyani International's Q3 numbers are on your screen. There is some optimism when it comes to QSR companies that the increased disposable income because of the budget income tax cuts could help the QSR companies after the long week stretch of poor performance they've gone through. But let's invite the management of Sanathan Textiles. Sameer Dattani, director of the company, is now with us to talk about the Q3 numbers and the way forward. Sameer, thank you very much for joining in. So the top line of your company has gone down by about 4.5–5% in Q3. If you could tell us what led to that, and are you on track to achieve your full year guidance that you had shared earlier?
So on a year-on-year basis, the numbers are looking very strong. Our EBITDA is up almost 30%, and even our PAT compared to 9-month versus 9-month year-on-year is up 30%. Last year, around the same time for December, 31st December, we did a PAT of almost 82 crores. And this year, we have achieved a PAT of 116 crores. So it's up by 30%, and margins have added back. This growth has mainly been on account of stable pricing, operational efficiencies, existing and new customers coming back, and demand being robust. So we are very bullish. Also, the recent government budget has a keen focus on textiles. The government has focused mainly on 3 key textile segments. They have the PLI scheme for the man-made fabrics. They have the 5-year cotton mission plan to improve cotton productivity. And they have tax breaks for machinery connected with technical textiles. We are at a very strategically advantageous position because we supply yarns to all 3 segments: the polyester segment, the cotton yarns, and yarns for technical textiles.
Right. Sameer, earlier you had given a guidance, a top-line guidance for FY25 to be in the range of 3,000 to 3,100 crore. Are you on track for that? You expected EBITDA margins to be around 9%. Are you on track to achieve that? What is the FY26 guidance that you're giving?
Yes, very much. Very much seems on track at the moment.
And FY26 guidance, anything you've penciled in?
We have a greenfield project that's coming up that's going to start in the first quarter of FY26. Where our polyester yarn manufacturing capacity is almost going to double. So for FY26, we see a great bump up in terms of absolute numbers because of the new capacity coming online with our production.
Would you be able to quantify that?
Sorry?
Would you be able to quantify the bump up that you're expecting?
So currently we make about 230,000 tons per annum of yarns across all 3 yarn segments. And this new project in Punjab, this greenfield project in Punjab, will add another 250,000 tons per annum in the first phase. And we expect to get at least 70% to 80% of productivity in the first year, since it'll take 1 quarter for us to ramp up, which is the Q1 quarter of FY26.
Out of time, Samir, unfortunately, but wish you all the very best. That's Sanathan Textiles for you. Well, with that, it brings us to a close on Trading Hour. Thank you very much for watching. Don't go anywhere. Halftime report is up next.
Mid-caps take a pounding with only a small fraction of stocks in the green. Realty, industrials and healthcare among the biggest losers.
Eicher Motors takes a beating after their margins dive in an unfavorable product mix and weakening pricing power with rising competition. Sales volumes, though, show a strong uptick.
Apollo Hospital says Adani Group's entry into the healthcare is positive for the sector and international payments, as there is room for more players. The comments follow a strong all-round show in the quarter.
Niti Aayog Agriculture member Ramesh Chand says India's food inflation looks set to fall sharply to low single digits in the first half of 2025 on the strength of excellent harvests. He also tells CNBC-TV18 that Indian milk and vegetable farmers are competitive enough to face lower tariffs on US imports.
In a totally surprising move, the Indian rupee rose sharply to a high of around 86 rupees and 80 paise per dollar from its overnight close of 87 rupees and 46 paise. This despite a sharp rise in the dollar index overnight to 108.6. Dealers attribute the rise of the rupee to huge dollar selling by the RBI.
Good afternoon. You're watching us here on Halftime Report. I'm Mangalam Malu. With me, Nigel D'Souza. We've started out on the back foot, and the first half of today's trading session has been a battering of all the mid-caps in particular. You look at the advanced decline ratio, you have 10 stocks declining for every stock which is outperforming in today's trading session, and that's how your portfolios would feel as well. One would have imagined, Nigel, you know, after a big drubbing that we saw in yesterday's trading session in the recent past as well, maybe there could be signs of some bit of recovery, but seems like, the bears are running amok.
Well, Mangalam, we should have seen some bit of recovery, but the manner of the fall actually is worrying.
Yep.
Yesterday as well, it was a bit worrying. Today as well, it's a bit worrying. So, it has all the ingredients to see a bounce, but at least on the headline index, that's on the Nifty. You have a net shock market. You have the PCR as well, that's moved down to around 0.72 or thereabouts. But we'll have to wait by for that. I think the bigger talking point is going to be the broader markets. I would like to see some more promoter buying. I was looking at a chart, and there are some promoters that are coming in then creeping into that. You want to see more of the same. More promoters buying, more buybacks. Because in the near term, it appears that the retail audience have got a little bit nervous. So I think what helps confidence is when promoters come in there, they put in some money, they buy their own stock. I think that will bring some confidence back. But otherwise, the screen is not looking great. Mid-cap index down 2.5% after seeing a fall yesterday. And the breadth of the market, one stock advancing for 10 stocks that's declining. That's telling you the pain in portfolios.
Most definitely keep an eye out on that as well. But let's get talking about numbers. Vijay Devan, who's the managing director at APJ Surendra Park Hotels, known better as the Park Hotels Group itself, joins in now. Thanks a lot for joining in, Mr. Devan. We see your numbers, the third quarter, seasonally the strongest for the hotel industry itself. And you had promised, better average room rates in the second half, largely because of a couple of the palaces that you've launched as well. So that is really the first question. What is the occupancy and the average room rate of the new palace hotels? And what would their full year contribution to your results be? What's your prognosis for the next financial year?
So I'm firstly delighted to be on the channel with you. Thank you for inviting me. The first and foremost thing is that we have had an excellent and remarkable 2024. It has been a year of triumph and success for us. We had a successful IPO, and today we are a debt-free company. And most importantly, we have launched the two palace hotels, the Lotus Palace at Chettinad and the majestic Ranbas, the Palace at Patiala. Also, we have launched Zone Connect at Hotel at Prayagraj just before the start of the Kumbh festivals. So that hotel is also doing exceedingly well. In terms of your question, we have achieved, for this quarter, we have achieved an occupancy of 91%, which is India's highest occupancy. The ARR has grown in double digit, and the RevPAR has grown by 12%. And the outlook remains very, very positive. All the indicators at the moment are very, very strong, and we expect the double-digit growth to continue. In terms of the overall numbers on a quarter-to-quarter basis, if you were to look at, they are up 25%. Year-on-year basis, the operating performance is up 11%, the EBITDA is up 11%. So the outlook, the current performance has been excellent, and the outlook is also very, very good.
All right. Hi, Mr. Devan, and good day and good to see you on the show. Give us a few more details. What kind of room addition are you looking at in FY26? How much will you end up with in FY25? And also, if you could help us out with your operating margins, what kind of EBITDA margin should we work with?
So currently we are, firstly to answer your last question, we are currently operating at an EBITDA margin of 35% and a PAT at 18%, and these margins are likely to continue as we sort of move forward. Most importantly, currently we have about 2,495 keys in our portfolio. We have 36 hotels, and we plan to double this inventory over the next 4 years, taking it to 5,048. So most of our hotels, the work on all the projects which we have undertaken has already started. We plan to launch our hotel on EM Bypass in terms of the construction of the project on EM Bypass, Calcutta, before the festive season. This will be followed by the start of the construction at the Pune hotel, followed by the start of the construction at a hotel in Visakhapatnam and Navi Mumbai. So all our projects are on course. Currently, as I said, we have 2,495 keys, and we plan to take it to 5,048 keys over the next 4 to 5 years. So all development plans are on course.
That's perfect for the next question that we have to ask you, because if you're doubling your, room portfolio, how much of that would be via the owned business? How much of that would be managed? If you could give us a sense of that, because currently it looks like by just the number of rooms that you have, it's almost 50-50.
Yes, so currently we have 1,101 keys on the ownership side of the business. We plan to add 830 keys over the next 4 years. And on the management side, we plan to add 1,666 keys. So all in all, this adds up to 5,000. With some leases, it adds up to 5,048 keys. The most important thing is that we have achieved 100 stores in our Fleury's business, which is the bakery and cafe business. We have reached the 100 store mark, and we plan to be at the 200 store mark by 2027, because that's the year when Fleury's celebrates its centenary. So in the F&B space also, we are growing at a very fast rate. We plan to add 40 to 50 outlets on a consistent basis over the next 5 years.
Right. And Fleury's currently is, is it EBITDA positive? And what proportion of your revenues do you expect to come from Fleury's over the next couple of years, since you've been so strong in store additions out here?
So Fleury's business currently is about 9% of our total revenues, and this business is expected to go up to 12% by 2027. So it is growing, as I mentioned, at the rate of 40 to 50 stores on a yearly basis. We entered the city of Mumbai 2 years back, and today we have 16 outlets between Kolaba and Malad. We have recently entered the city of Hyderabad, where we have opened 2 outlets, the most significant one, which we have opened recently at Banjara Hills. And we plan to add actually another 14 stores during the course of this financial year.
Is it EBITDA positive? Mr. Diwan, is it EBITDA positive?
Yeah, Fleury's has been always providing for industry-leading margins. The EBITDA margin for Fleury's business is in the range of 17 to 18%, and we plan to retain this percentage going forward. In fact, it is expected, as the stores sort of stabilize in this year, the stores which we have just opened, as they stabilize, we expect the business, the EBITDA margins to further improve. Currently, we have industry-leading EBITDA margins at 17 to 18%, but this may actually improve in the coming years to 20 to 22%.
All right, we take that point. Wish you good luck for all the foray into Fleury's and the other park palaces, etc., that you've added as well. The sector having a fair amount of tailwinds as well, and you stand to benefit from that. We take a short break, come back. On the other side, we discuss markets with Mr. Mugundan Siva, who is the Managing Director at India Avenue Investments, to talk about the sort of decline that we've seen in the markets and some portfolio bets.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before posting?
Welcome back. Well, the markets continue to reel under some pressure. We're 130 points down on the Nifty, but as we have been telling you, that the broader markets is where there's a lot of pain. That said, when there is pain, there's always opportunity that comes about, and that's why select stocks will come on your radar. To help us out with how things are shaping up, we have Mr. Siva, the Managing Director at India Avenue Investment Management, who joins us on the show here. Hi, Mr. Siva. Thanks a lot for joining in. Well, you seem to be managing roughly around 8 to around 900 crores or thereabouts. And I'm looking at your portfolio construct, and it appears that Oro Pharma is one of the top weighted stocks out there. So could you tell us how you're approaching the pharma theme, and if there's something else that you like out there as well?
So broadly, we're overweight in healthcare, which is predominantly in pharma.
Okay.
And largely that's because of a view that strategic growth in the sector is going to play out over the next 3 to 4 years. We've already been an established holder of overweight pharma for about 3 years.
Okay.
When valuations were a little bit further south than where they are today. And our view is, India will win a greater share of the market pie from a global perspective.
Okay. Yeah. All right. So you'll continue to maintain. The reason I ask you about Oro is because it's down close to around 20% from the recent peak. So, it could come back down to those valuations that you'll have got in at.
Yeah.
So would you remain constructive at the stock even at current levels?
Yeah, because I think thematically we want to play that exporting story in generic pharmaceuticals. We think there's a patent cliff coming up in the next couple of years, and companies like Oro and other exporters will be best placed to benefit from it.
What do you make of the IT space? Because I see you having a fair amount of exposure via Infosys. There is HCL Tech. I see Coforge, and also names like Reddington, which have the IT e-services sort of portfolio. What are your thoughts here? Because these stocks also have been underperformers, and at the same time, the outlook looks fairly grim as well, with ordering activity not picking up as fast as the street wanted to, and then you have obviously the constant threat of artificial intelligence.
Yeah, so we, as you rightly noted, pharma and IT are the two areas we're overweight. We like the inside-out story. Previously, in the last decade, it was very much about consumption, financials, and our thesis, at least for the early part of this decade, has been those areas may be more challenged.
Yes.
And India will win more of a global pie, be it pharma, be it in information technology. Whether the industry is challenged because of what's happening globally is one issue, but secondly, we feel the Indian firms are best placed to take on engagement with the cloud, artificial intelligence, integration. If you look at integration that some of these firms are doing for global companies, I find a lot of the globals are still a long way behind, and that education process can be best coming from some of these companies that have been practiced in that area.
Okay, all right. Let's look inward now. Look at the domestic story. And I was looking at the two-wheeler space. And from that space, I think your key bet is Hero MotoCorp. I think you'll have been holders for a while as well. What makes Hero MotoCorp, get preference in comparison to, say, a TVS or a Bajaj Auto? If you could give us your rationale. And also, what are you making? There are some changes at the top out there. So how would you change your view?
Yeah, so as you said, it's a holding which we've had pretty much post-COVID, when valuations were further south. We found, the introduction of new products, new partnerships that they've had has, I'm not saying that there is only one two-wheeler company that works. We've also at times owned Eicher Motors as part of that journey.
Yeah.
Today we also own some Bajaj Auto, but Hero has been realistically the position we've held for the longest. So we're fairly comfortable with that and holding it from a longer term view as a domestic play on consumption, particularly in the rural space where we expect perhaps a little bit of an uptick over time.
Right. Could you give us a sense on a couple of factors? One is that, what is the churn in your portfolio typically? I mean, how long do you hold companies for, and what's your exit rationale? And secondly, I look at your India 2030 fund. You're betting at India for the future. And what's absent are some of these futuristic companies that everyone keeps talking about, be it, some in the food delivery space, some in the digital beauty space, or value fashion, a bunch of them, all of them conspicuous by their absence.
Yeah, so there's two parts to that question, and I'll focus on the second one first. So essentially, our view on India 2030 is not necessarily futuristic. It's where we think India's, let's say, if you look at the MSCI India, what that might look like in 2030. You know, we want to partner with those firms where we feel the greater component of the growth story will be driven by those industries. And we think pharma and IT were underrepresented in where India could get to by 2030. Rather than say we'll hold businesses that we think could, find a success story. The problem is in some of those industries, we don't know who the winner is going to be. Right, so we don't. We're a bit cautious about their valuations being high without the profitability necessarily already justifying that valuation.
All right. Before we let you go, final question with regard to the financials as well as the banking SPAC. Some of the top banks out there, like an HDFC Bank, actually haven't given much returns in the last few years. They've been relative underperformers. HDFC Bank, Kotak Mahindra Bank. I think that's a sector you're betting on. Tell us more.
Actually, we've been underweight that sector quite significantly. I think we have about 20% in our portfolio.
In comparison to the benchmark, you're saying that relatively underweight.
Relatively underweight, and that India 2030 fund hardly has any financials. I think we only have Shriram in that. So essentially our view is it's more a challenging environment for the financials, particularly as consumption has been weak and we get a little bit of increase in asset quality issues that perhaps some of these companies which had flourished in the last decade, corporates also have pretty healthy balance sheets. So their need to go and, borrow, we feel is going to have an impact on credit growth, whereas most corporates are obviously receiving funding from the equity markets at the moment.
Got that, Mukundan. Thank you so much for joining in and giving us your view on markets, a whole host of sectors, your top bets, etc. What from both of us we can say is just ensure that the foreign money keeps coming into India, because kind of selling that we've seen over the last 3.5 months has been quite brutal. So you've been doing your way, standing at the door of such a massive FII exit on a regular basis itself. We wish you good luck with your portfolio.
Thank you very much for your time.
Thank you. With that, we'll take a short break. Come back. We'll talk about the markets and a lot. But as we do that, let's get you the growth code, an initiative coming in from CNBC-TV18 and Grow. We'll talk about that. Take a short break. Come back. More on the markets.
Fine. How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I'm committed to buying and owning Gaza. As far as us rebuilding it, We may give it to other states in the Middle East to build sections of it. Other people may do it through our auspices. But we're committed to owning it, taking it, and making sure that Hamas doesn't move back. There's nothing to move back into. The place is a demolition site. It'll be, the remainder will be demolished. Everything's demolished. I mean, you can't live in those buildings right now. They're very unsafe. But we'll make it into a very good site for future development by somebody.
Mr. Speaker, sir, with your permission, may I...
Welcome back. As promised, let's get you the initiative by Grow and CNBC-TV18, the Growth Code, where we want to leave traders with some essential tips and strategies. Here's a snippet of what Saket Ramakrishna, who's the trader and founder of Quick Alpha, had to say about the common misconceptions in the trading world. Listen in.
What are the tips that you'd like to give in your experience as a trader and now an entrepreneur to the young traders who are looking to venture into the markets?
So firstly, it's mostly about having the right mindset. So most of us are here without understanding what trading is for quick money. So just because we have seen in a lot of places where people have made, they post that they have made quick money, and also it is on the other hand a business where people sell dreams. So they sell tips, they sell courses, they sell a lot of things where they themselves are not making money, but they sell dreams of making money, and due to which a lot of people get lured and they get into this process of making quick money.
What are the common misconceptions that you would like to bust through this platform of these young traders and enthusiasts?
So first, going by the statistics, so mostly when you come to markets, you would be among the 93%, but not the 7% who will actually end up making money, right? So when you come into the markets, unless you're coming into investing, don't come with a hope that you will actually be making money. So try to avoid as much as social media noise and try to focus on the basics of it.
Tell us about your journey and what are the ups and downs that sort of you took a lesson from.
What really happened is, for my first almost 1.5–2 years, I only saw the market go up, because when I entered, I think Nifty was around 5,400 or 5,500. From there on, 2014, we had the election and market saw a fantastic bull run. By 2015, when I was into market, so I already had started F&O by then, right? So I had only seen a bull phase where the markets went from 5,500 all the way to 8,500, right? So in my mind, it was never that the markets can actually fall.
Different question pertaining to gold. In the year 1971, Richard Nixon, who was then President of the United States of America, gave up the gold standard. After that, gold was hardly considered to be a serious financial asset. In 2006, gold constituted only 6% of the reserves of the central banks of the world. In the year 2024, it is up to 11%. China, India, Poland, Turkey are the most aggressive buyers. Even in India, there has been a surge in the domestic price of gold. My question to the Honorable Minister is that this shift away from the dollar to gold, does it indicate a renewed search for an alternative international settlement mechanism, de-horse the dollar? That's my question to the Minister.
So the Honourable Member, has he himself mentioned that it is not the core part of the question, but he's still asking, and I would certainly like to give my brief answer on it. India's, as he observed rightly, the demand for gold in India has not come down. On the contrary, it's going up. And I would think it is very typical of India, particularly for households or small businesses, and it is normally said women, but general households also and women also, to invest in gold because they think it's far more secure and far more liquid, and therefore as an asset class, we see that sustained interest in it by the households and small businesses as much as women of India. But beyond that, of course, the Reserve Bank also is buying gold to make sure that it has adequate reserves of gold and not just a basket of currencies. And in that, one of the currency which predominantly has been held by the Reserve Bank has been the US dollar. But we also have the reserve currencies in denominations of different denominations of other currencies as well. But the gold is also kept in the Reserve Bank, and gold is also being bought by Reserve Bank. But beyond that, as regards an international currency or potential currency, there's not much for me to comment at this stage.
Right now. So we thought this would be appropriate. Even bigger than the Super Bowl. This is a big thing. And almost everybody now has assented to that.
Attention on board. Ladies and gentlemen, if you could please direct your attention out the right side of the aircraft. Air Force One is currently in international water.
Welcome back. Let's get another corporate conversation going. This is Century Ply. There was a good performance that came in from their plywoods business in particular, where the volumes grew by about 15.8%. We saw realizations improve a tad as well. And as a result of which, the margins increased all the way from 8.6% to just shy of that 12% mark itself. And that really is the obvious path that we will focus on when we have the conversation with Keshav Bhajanka. Keshav, thank you so much for joining in. FY25 so far has had some elections. There was CapEx, which was, planned but not deputed so far. What's your outlook on demand recovery and the target for FY26, particularly for the plywood business? And also if you could give us a sense on other businesses.
Good afternoon. Thank you so much for having me on the show.
I think that overall, considering the muted demand environment, we have had a very good quarter. 20% plus growth on a consolidated basis is something that I think as an industry, we're one of the few that companies that have been able to achieve the same. For plywood, definitely our plywood segment has done very well. I think we have grown by close to 19% YOY, and that has been a substantial growth, which is aided by gaining market share because the market growth hasn't been all that great, to be honest. Going forward, I think our guidance for the current year was we'll grow volumes value by 12% and we'll maintain EBITDA margins between 12 to 14%. And I think we are pretty much in line to maintain the same next year as well.
Could you give us an updated market share? Because the last time you said plywood market share was close to 7% and laminates at around 6%. And seems like you've gained market share in the third quarter, like you pointed out. Could you quantify that for us?
We've definitely gained market share, but as you know, our data isn't, there isn't any authenticated source of data as far as plywood is concerned. However, judging by competition and the reported numbers that competition has done, I think it is safe to assume we've gained market share. The quantum of the same, maybe you'll get to know at the end of the year.
Okay, all right. Hi, Keshav. Always good to see you. Ben, give us some inputs on a couple of your raw material, timber as well as chemicals. Have those prices come off the peak?
I think in terms of timber, they have not really come off the peak, but we don't see any further increases. So that's a step in the right direction. As you know, in the past 1 year, particularly for MDF and particle board, the cost of timber has more than doubled in certain geographies, and we have faced a huge inflation in the price of timber overall. So I think that going forward, it is likely to be status quo. I don't see any reductions per se, but I don't see any increases as well.
So what does that then mean for your consolidated margins? Because you do have the benefit of the MDF utilization increasing. So next year, what should we look at in terms of overall sales growth for the company and margins in particular, given the stability in raw material prices?
I think in MDF, from last quarter to this quarter, we have increased in margin from, say, less than 6% to greater than 13%. So there's been a substantial increase in margins, primarily on account of operating leverage, like you rightly pointed out. The guidance for MDF margins are 15% that we are given for the current year, whereas for the current year, it might be difficult to hit the same because of a weak H1. I think next year, 15% plus should definitely be achievable.
All right, Keshav, you've got a capex guidance, right, for this year. Could you tell us what is the updated number? FY25, how much are you spending? FY26, how much are you spending? And since you'll be spending money, what kind of debt number are you comfortable with? What is it? Where does it head?
So our overall capex is pretty much going to be in line with the guided numbers we had given. The particle board plant that we are likely to commission by perhaps end of this quarter or the start of next quarter, that is likely to cost us in excess of 500 crores, which is in line with what we had guided. We are thinking, or we have finalized on a new capacity for plywood at Hoshiarpur, for which we have already bought the land. And that capex will be to the tune of 100 crores or slightly higher than 100 crores. So these are the two frozen capex plans that we have as of now. I think in terms of debt, we have always said that we would be comfortable with a debt to EBITDA ratio of 1:1 or lower debt. So I think going forward, maybe for a couple of quarters, that ratio might be breached, but otherwise we'll definitely be within the same.
All right. And what about, the particle board business itself? It comes on board in the next quarter. So that means the next year will be a full year of revenue recognition and capacity ramp up. At peak utilization, what is the kind of revenue and margins this business can do?
At peak utilization, it can definitely do a revenue of in excess of 500 crores. Having said that, it will take some time to ramp up to the same. Our current capacity is 250 cubic meters, whereas this capacity is 800 cubic meters. So we are pretty much more than tripling in size. However, the margin profile changes drastically because our earlier press was a multi-delight press, which is more outdated technology, leading to higher operating costs. Whereas in the new press, in the new line, we will have a continuous press. So this will lead to at least a 10 to 15% EBITDA delta over the previous line. So once we commission the same, I think particle board will see a revival both in terms of value and margin.
All right, just a final question before we let you go. Looking at your 9 months revenue and annualizing it, with the kind of plans that you have, it so appears that FY26, you would be able to cross 5,000 crores on the top line. Would that be a possibility with, say, 12 to 14% margins?
So as always, you're putting me in a very tight spot. But yes, I think we should definitely be able to cross that based on the volume guidance that we have as of now, the value and volume growth guidance. And in terms of margin, our attempt will always be to hit guidance. Blended, if we do hit our guidance numbers, you're correct. We should be in that ballpark.
All right, we take that point, Keshav. Always a pleasure speaking with you. With that, take a short break. Come back on the other side. We, decode the F&O trends in the market. The mid-cap index now down nearly 1,500 points. So, big shave off is what we're seeing in terms of value. Take a break. We come back, focus on the markets once again.
History flying over the recently renamed Gulf of America. Please enjoy the flight, and we are now about to head westbound to Super Bowl 59.
At the low point of trade, the Nifty now down 150 points, well below that 23,250 mark as well. One was hoping for some support coming in at that 23,300 mark, which was the 20-day moving average. We'll keep an eye out on not only the Nifty, we have the Nifty Bank as well, perilously close to its 20-day moving average. We have the Nifty Bank, and the mid-caps is actually where the most amount of pain is. That index is now down 3%. When we started the show, it was down about 1,100, 1,200 points. 300 points shaved off just immediately, with 2,300 stocks which are declining for about just 240 stocks which are advancing. So those are the important levels. The Nifty is broken below that 20-day moving average. The Nifty Bank just about 200 points above that 20-day moving average itself. But something that tells you about the pain in the broader markets, you look at the investable universe, which is stocks which are in the A and B group on the BSE. 202 of them have hit a 52-week low in today's trading session. Only 5 of them have hit a 52-week high, of which there is only one A group stock which has actually hit a 52-week high today, and that's Kotak Mahindra Bank, which in the past has been an underperformer, though from the highs that stock too has currently slipped. What's interesting is that the call writers are now lowering their strikes. Earlier we saw call writing at 23,500, 23,600. Now it's come down to 23,300, and also some action is what we're seeing at the 23,350 call, telling you as the market attempts some recovery, there could be supply at levels around that 23,350 to 23,400 mark itself. Put writers are being caught on the wrong side, so the 23,400 put writers have begun to unwind some of their positions, and we are now seeing some action shift to the 23,000 put itself, where we are still seeing some writing, but the premium here, 25 rupees, tell you that 23,000 is really the last bastion of support that bulls are hoping for the market to look at. A lot of short positions being added in individual names, two that stand out in particular, Max Healthcare and Escorts Kubota, with the kind of open interest jump that we've seen. And Sun TV is a rare outperformer in today's trading session, with all the open interest being unwound, indicating that there could be some sort of short unwinding in Sun TV. So we'll keep an eye out on this, take a short break, come back, focus on the markets and a lot of individual stock specific action.
Back, the markets continue at the low point of the day, but let's shift focus to the India Energy Week 2025, which is underway in New Delhi. And we have various nations that are participating. In fact, Manisha is standing by to fill us in with an itinerary for day one. Manisha, tell us more.
Hi Nigel. Well, yes, the India Energy Week and the first day at here is high on energy and a lot of productivity as well. So, a few things that have already been spoken about right now. One is there's a launch of OALP, which is Oil Acreage Licensing Policy. This is being done to ensure that the policies and cost efficiency in sense of production in India are taken care of. Apart from that, there's a lot of conversation about recalibration and strategy to ensure that the near term is profitable, but the long term transition goals are still on track here. Well, apart from that, there is a major conversation, of course, about the geopolitics, the tariffs, and clearly about sanctions that we've seen happen on Russia and Iran and impact of that going forward. Of course, there would be more deliberations on that going forward in the next 2 or 3 days there. Apart from that, there's a very interesting statement that came out from IEA, which says that the energy investment has been the highest in 2024. But remember, out of the $3 trillion that was invested in energy, $2 trillion of that actually was in clean energy. So that clearly tells you on where we are going in sense of investment and what the future does look like. But more importantly, there also was a call, especially from the Prime Minister and the Energy Minister as well, saying that there are a lot of opportunities when it comes to India in sense of investment. And some of the areas and sectors that the ministers really laid out was in sense of biofuels, in sense of batteries, storage, technology and AI. And I want to take a bit of time talking about AI here, because when you talk about AI for energy and then energy for AI, I mean, these are two different things. When you talk about AI itself, the kind of energy consumption that AI does in sense of its data centers and the productivity therein, well, India as of now is more a consumer of AI than building all those data centers. But the clue coming in from here is that nearly 18 to 20% increase in energy consumption from AI could be seen on an year-on-year basis until 2030. So, well, as you can see, there is so much conversation happening around here, and this is just half a day of day one. The second half promises to be even more productive, and I'll, of course, keep coming to you with all of those conversations.
Take that point, Manisha. Thank you so much for that. We'll have to wrap up on this edition of Halftime Report with the news that the Nifty is now broken below that 23,200 mark itself. Weakness persists for the market. Mid-cap index now down a whole 3%. The Nifty Bank down by 1% as well. We'll take your leave. Come back. Don't go anywhere. We have business lunch, which will take all the market action.
I do believe we're making progress. We want to stop the Ukraine-Russia war, and I want to stop it just because I hate to see all these young people being killed. The soldiers are being killed by the hundreds of thousands. and I expect to have many more conversations. We have to get that war ended. It's going to end, and we have to get it ended. And we have to get it ended soon. Should have never happened, would have never happened if I was president.
Mid-cap stake pounding with only a small fraction of stocks in the green, realty, industrials, healthcare are the biggest losers. Eicher Motors takes a beating after margins dive on an unfavorable product mix and weakening pricing power with rising competition. Sales volumes, though, show a strong uptick. Apollo Hospital says Adani Group's entry into healthcare is a positive for the sector and international patients as there is room for players. The comments follow a strong all-round show in the quarter. Niti Aayog Agriculture member Ramesh Chand says India's food inflation looks set to fall sharply to low single digits in the first half of 2025 on the strength of excellent harvests. He also tells CNBC-TV18 that Indian milk and vegetable farmers are competitive enough to face lower tariffs on US imports. In a totally surprising move, the Indian rupee rose sharply to a high of 86.63 per dollar from its overnight close of 87.46. This despite a sharp rise in dollar index overnight to 108.61. Dealers attribute the rise of the rupee to huge dollar selling by the RBI. Hello, good afternoon. You've tuned into Business Lunch, coming in live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala. Thank you so much for tuning in, as always. Let me start by looking at the market. Not a pretty picture again coming in for the market. So you're seeing a sharp fall coming in the Nifty as well. And this is one more day of fall that we're seeing coming in. Nifty as of now is trading at the day's lowest point below the 23,200 mark. As of now, Nifty is trading at 23,100 level. Surely important one to watch out for in today's trading session and where it's going to be headed now. Top losers in terms of the Nifty, we have HDFC Bank, ICICI Bank, Kotak Mahindra Bank. These are the top drags for the Nifty 50. So clearly the private banking side is not managing to hold on to any sort of a gain today coming in for the Nifty. And let's pull up the Nifty Bank as well on that note, because Nifty Bank also is down almost a percent in trade is what we're looking at, more than a percent. That also is trading at Nifty mid cap, small cap, both are seeing pressure coming in. This is the second consecutive day. Corporation, Godrej Properties among some of the names. So we're seeing red coming across the screen. Now let's move on, and Prime Minister Narendra Modi has actually inaugurated the India Energy Week earlier. This morning, addressing the gathering virtually, the Prime Minister laid out the key pillars of India's energy ambitions and reaffirmed the country's commitment to global sustainability while driving domestic growth. The Prime Minister highlighted India's rapid economic progress and highlighted India's goal of adding 500 gigawatts of energy capacity by 2030. As a part of its transition to cleaner sources of energy, let's also listen to what he had to say and what his comments were.
हमारे बहुत सारे एनर्जी गोल्स 2030 की डेडलाइन के हिसाब से अलाइन किए गए हैं। साल 2030 तक हम 500 गीगावाट रिन्यूएबल पावर जनरेटिंग नेशन है।
Okay, let's also hear out Petroleum Minister Hardeep Singh Puri, what he had to say on Trump's administration focusing on energy and where prices could be headed in the near future.
New administration's focus on energy, which I must say is music to my ears. When the new administration says that more energy should come on the market and more energy means prices should, come down. Clearly, for a country like India, which is both consumer and producer, there are some of my oil marketing companies who get upset every time the price comes down because their balance sheets don't show that. But as an Indian and as a line minister, I am very happy with prices coming down. My friend, my first point is there has never been a shortage of energy in the world. I mean, not now. There is more than enough energy available.
And in a huge surprise to traders and exporters, the Indian rupee did a U-turn this morning and is trading sharply higher versus the dollar at around 86.80 versus its overnight close, which was at 87.46 per dollar. Lata is joining in with us to explain us what's happening in the forex market. Lata?
Well, the rupee's rally is absolutely come out of the blue, and it is an extremely sharp rally. The rupee at its sharpest dealt at 86.63 and the overnight close was 87.46. So, it's almost a 1 rupee jump or a 1 percentage point rally in the rupee, and it is surprising because the dollar index has actually strengthened. Last week, Friday night, it was at 107.70 thereabouts. Monday, it went to 108.10. Tuesday, now it's at about 108.4. So dollar is strengthening. Almost all Asian currencies are weakening. Almost all. There's a minor green on the ringgit, but that's minor. Whereas the Indian rupee is extremely strong. And the only reason why it has been strong, the only person who's offering dollars like no tomorrow is the Reserve Bank of India. There are some huge numbers floating around, but all this is market chatter. People tell us that yesterday as well that the RBI must have sold well over $3 billion. Today, in the first half itself, they must have sold an equivalent amount. So the market is only trying to guess why is the RBI standing so much against the current of the foreign exchange flow. And it's not only peculiar to India. All EM currencies are falling. One guess is it wants the other side to come in and sell, the exporters. Typically, Jan, Feb, March is an export-heavy month. We do very well in exports. We sometimes have a current account surplus. So he's probably tempting the exporters to come and sell. Alternatively, they are scaring the speculators. One day the rupee went from 86.50 thereabouts to 87.40. The next day it opened at 87.95, almost 88. I mean, this kind of speculative moves have to be stopped and the speculators have to be hurt. And that may be the position that the Reserve Bank is taking. But at the moment, all these are guesses.
Thank you so much for that. Now, let's also hear out what the Chief Economic Advisor, Anantha Nageshwaran, had to say on the recent fall and the value of the rupee.
In the long run, which is 5 years or beyond, it is ultimately boils down to inflation differential. So in that sense, as long as our inflation rate is 1% or 2% above the average inflation rates of developed countries or the US, to that extent the currency will depreciate. But the point is, this currency depreciation hasn't prevented India from delivering returns to investors. If we are going to settle down at an inflation rate of around 3 to 4% rather than 5 to 6% as before, and if developed countries also end up finding that they can't bring it below 3% down, then naturally the gap between the two really shrinks a lot. And therefore, India may be able to experience a much lower rupee depreciation rate than what we have seen historically. And I don't think we should be too concerned about what is happening currently. This is an extraordinary period of dollar strength, which has lasted quite long.
Okay, on that note, we're going to step into a very short break, and the growth code, that's what we're focusing on, an initiative by Grow and CNBC-TV18. We want to leave traders with some essential tips and strategies. Here is a snippet of what Saket Ramakrishnan had to say, the trader and founder of Quick Alpha, about common misconceptions in the trading world. Let's listen in.
What are the tips that you'd like to give in your experience as a trader and now an entrepreneur to the young traders who are looking to venture into the markets?
So firstly, it's mostly about having the right mindset. So most of us are here without understanding what trading is for quick money. So just because we have seen in a lot of places where people have made, they post that they have made quick money, and also it is on the other hand a business where people sell dreams. So they sell tips, they sell courses, they sell a lot of things where they themselves are not making money, but they sell dreams of making money, and due to which a lot of people get lured and they get into this process of making quick money.
What are the common misconceptions that you would like to bust through this platform of these young traders and enthusiasts?
So first, going by the statistics, so mostly when you come to markets, you would be among the 93%, but not the 7% who will actually end up making money, right? So when you come into the markets, unless you're coming into investing, don't come with a hope that you will actually be making money. So try to avoid as much as social media noise and try to focus on the basics of it.
Tell us about your journey and what are the ups and downs that sort of you took a lesson from.
What really happened is, for my first almost 1.5–2 years, I only saw the market go up, because when I entered, I think Nifty was around 5,400 or 5,500. From there on, 2014, we had the election and market saw a fantastic bull run. By 2015, when I was into market, so I already had started F&O by then, right? So I had only seen a bull phase where the markets went from 5,500 all the way to 8,500, right? So in my mind, it was never that the markets can actually fall.
As far as delisting, etc., is concerned, at this point of time, no, I think we continue to be as is. We continue to run our businesses. We've given commitments to our business partners, our customers at large, that we take responsibility as a responsible company for whatever we do in the country. Our focus is continuing to, under the sort of conditions that you're seeing, and you explained earlier when you opened across the businesses, making sure we deliver strong growth and profitability.
Welcome back. Thanks for staying tuned into Business Lunch on CNBC-TV18. Now let's move on. The Karnataka Global Investor Meet will also get underway in Bangalore with the theme of reimagining growth. The meet is expected to drive investments worth around 10 lakh crore rupees across sectors, while the state government is also likely to unveil its new industrial policy today. Ritu's here to tell us more about this.
Well, yes, the 7th edition of Karnataka's Investment Summit, the Global Investors Meet 2025, kicks off today, and Defence Minister Rajnath Singh is going to be inaugurating this event, which is themed Reimagining Growth, while the State Chief Minister Siddaramaiah is going to preside over the sessions. Now, the state government has set itself an ambitious target this time around, expecting investment commitments of more than 10 lakh crores in the summit, which is nearly double the figure which has been promised in at least the last 4 investor summits. Now, realization, as we know, remains a key challenge. From a mere 15% realization of investments in 2008 to a peak of 48% in 2022, Karnataka's investor summits have yielded mixed results in the past, but this time around, the state is targeting to convert at least 70% of these commitments into actual investments. A revamped industrial policy for the state for the next 5 years to make Karnataka more competitive and an upgraded single window system for faster clearances are also expected to be unveiled at this global investor meet. The event is going to see participation from 19 countries, more than 75 speakers and industry heavyweights like Anand Mahindra, Sajjan Jindal, Kiran Mazumdar-Shah and others. Now, interestingly, the Karnataka state government has invited several union ministers, including Nirmala Sitharaman, Piyush Goyal, Ashwini Vaishnav, H.D. Kumaraswamy, Prahlad Joshi and others to attend the summit as key invitees, and reports suggest that Congress President Mallikarjun Kharge and the leader of opposition Rahul Gandhi are therefore likely to skip the summit altogether because of the prominence being given to several BJP leaders and union ministers by the Congress government of the state.
Thanks so much for that, Ritu. But on that note, we're going to step into a very short break. And when we return, we put the focus on President Donald Trump's tariff threats and ultimatum issued to Hamas last evening. Stay tuned in for that. Thanks so much for staying tuned into Business Lunch on CNBC TV18. Now let's move on. And the US President Donald Trump's top economic advisor, Kevin Hassett, in an interview to CNBC, has criticized India's tariffs, describing them to be enormously high and restrictive to imports. Listen in on what he has to say on tariffs overall and specifically India.
Talking specifically about tariffs, just recall that almost every trading partner has much higher tariffs than we do. In fact, the only trading partner that's about where we are, and there's Canada and Mexico who are part of the trade deal, but outside of that, the UK has about the same tariff we do. The EU it's 2 to 3% higher. Taiwan it's 10 or 11%, and India, and we're meeting Modi soon, has got a lot to talk about with the president because they have tariffs that I think the trade weighted average is a little bit short of 20. Now I'm running it out of my head, so don't give me a Pinocchio. But they have high rates that are enormously high. They're lockout rates, and so President Trump believes that at the very least everybody should agree that if they're charging us 20, then we should charge them 20, and then if they go down, we'll go down. But that's the idea of reciprocity in the tariff space.
And some more updates. US President Donald Trump has waded into the ongoing Israel-Hamas hostage crisis. He has issued a warning to Hamas that he will cancel the ceasefire if all hostages are not returned by Saturday. Listen in to what he had to say.
Hostages aren't returned by Saturday at 12 o'clock. I think it's an appropriate time. I would say cancel it and all bets are off, and let hell break out. I'd say they ought to be returned by 12 o'clock on Saturday, and if they're not returned, all of them, not in drips and drabs, not 2 and 1 and 3 and 4 and 2. Saturday at 12 o'clock, and after that, I would say all hell is going to break out.
And Elon Musk escalated his feud with OpenAI and its CEO Sam Altman after he announced that a consortium is set to buy the pioneering AI company. OpenAI CEO Sam Altman calling him a swindler and scam Altman. The problem between the two tech honchos go back to at least 2017 when they had a fallout over how OpenAI should be run. Okay, but with that, it's a wrap on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Up next, you have Midcap Radar.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
Good afternoon and welcome to Mid-Cap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Vivek Iyer and with me today is Reema Tendulkar. Good afternoon, Reema. It's a complete meltdown.
I'm surprised you're calling it a good afternoon, right?
It's not at all, actually.
It's a tough afternoon.
Tough afternoon as far as bulls are concerned. Mid-Cap Index down 3.4%, Small Cap Index down close to 4%, and the selling pressure has actually exacerbated, especially in the last 1.5 hours of the trading session.
No signs of the pressure abating as of now. Mid-cap index down 1,700 points. And look at the advanced decline ratio, 1:13. These are the top stories at 1:30 p.m. Markets fall to the day's low with the Nifty down more than 300 points. The mid-cap index declining 1,800 points. Realty, industrials, healthcare are the biggest losers.
Hospital stocks under pressure as rising competition in the space after Adani Group's foray weighs on the stocks beside Q3 earnings.
Escorts Kubota slips over 5% following a weak Q3. Weak outlook. The company's revenue growth stood at 9%, much below estimates of 35%.
Torrent Power falls after Morgan Stanley downgraded the stock to an equal weight from an overweight rating earlier, revising the target price to 1,413 rupees a share from over 2,026 rupees a share earlier.
Well, straight away, let's get to one of the corporates joining us on the show today on Mid-Cap Radar. That's Insecticides India. The company's reported a mixed Q3. While the margins came in healthy, revenues were flat. Rajesh Agarwal, Managing Director of Insecticides India, is now with us on the show. Mr. Agarwal, if we could start with the top line first. So flat revenue growth in Q3. Break that up in terms of volumes and realization. And also for FY25, what are you likely to end the year with, considering that in the first 9 months, your top line has degrown by 3%?
The total degrowth is not 3%. It's very nominal, actually, and we should be able to make a recovery. So we had a strategy. The strategy was to sell the premium products, and very successfully we have done that. We have sold the premium products in the market, which has helped us in building our bottom line. So this year, in 9 months, we have made 128 crores, which is the highest ever profit made by the company, the PAT margin, which is 36% higher in 9 months if we compare with the previous year. So in the full year, we have the best profit made by the company is 122 crores. So that way, I can say that we are doing well. The market was tough, and technically Q3 is a lean quarter. Even Q4 for our industry, because it's a cyclic industry, generally Q3 and Q4 are lean. But the international market is changing. The market has already bottomed out and prices have started going up. And looking at that, I believe that B2C demand, B2B demand, and also international business, they all three are moving up in Q4. So there will be some better performance in this, and we should be able to make some gain in the top line also. But in terms of bottom line, I am sure that we'll end up with double-digit EBITDA margin, and which we have already shown in 9 months. So that will be the highest ever profit built by the company. And the vision is to bring the premium product and continue the sale of these premium products. In the previous years, we have launched about 10 products. There are more than 6 products in pipeline for the next year also. So these products are going well in the market, very well accepted. Like in last 2-3 years, we have launched many products, and these products are doing well. So
just some numbers, Mr. Agarwal, sorry to interrupt. So for the first 9 months, your top line was 1,694 crore rupees. What can you end FY25 with in terms of a revenue growth? And what will the contribution of premium products rise to? As of December, I think it's 62%.
Yes, this will remain around plus minus 62%, but last year this was 59%. Okay. There will be some growth. We are targeting a growth of 3 to 4% in the complete year. So which means that we are under pressure in this Q4, but I see the export sales growing, I see the B2B sales growing and also B2C, and the performance of last 40-45 days is plus. So I'm confident that we should be able to break even this year with the positive note. So top line will be little positive. I'll not say very positive, but yes, for future we are ready by launch of these 16 products. 10 already come in and 6 also coming, and all these products coming in the premium segment. We are very confident that in
Mr. Agarwal. Understood that, yes. Mr. Agarwal, so at the start of the year, the guidance that you had given was 5 to 10% revenue growth. You are now paring down that guidance, hoping that you will see some growth as far as the top line is concerned. In terms of the EBITDA margin, what is the exact quantum that you're looking to end the year with? And what will be the corresponding PAT margin that you will end the year with? Like you mentioned, on account of the changing mix, you've actually managed to expand your margins at the expense of moderate top line growth. So give us a guidance where you will end FY25 at.
Difficult to give the exact number, but I will say that we'll beat the last year in the last quarter again. And since we are expecting some growth also, so this will be a good margin. So I can only say that the EBITDA is going to be double-digit positive EBITDA. So we are already 11.7% roughly in 9 months. So we should be able to maintain 11% plus anyways. What it will be, difficult to say today.
Okay. Getting back to premium products, I understand in 3 months it will still probably be 62% in terms of contribution. But say 1 year, 2 years down the line, what would the contribution of premium products be? And secondly, exports is still about just 3% of your top line. You were hopeful of growing that. What is the outlook on exports and what's the growth?
Okay. These premium products, the vision is that we should cross 65% in the next year or 1.5 year. We have reached from 59 to 62. Next year vision will be to cross 65%. And I'm very, very confident that we should be able to do that. And with the top line growth also, because this year the launches were a little late and the market was tough, the prices were declining because volume growth is much more than the value growth what we have got. So it was a difficult year, difficult phase, but the recovery has already started coming and we are seeing that recovery in all the segments. As I told you that we are going to grow everywhere. And regarding your second question, which was exports. Exports are showing a sign of growth. This year it will be beating last year, but the export growth won't be much, but will be beating last year. And the future for export is looking good actually. Again, we are going to keep the aggressive target for export because we have bagged some registration in South America and some more are expected. And European business also is expected to grow for us, which was very, very dull in the previous 2-3 years. Some business in CIS also maturing. So looking at that, I believe that these markets are going to open up. Also, Australia is going to open up for us. So ultimately, our white label exports and also the technical exports are going to start now. So this will give good boost to our international business also.
Thank you so much, Mr. Agarwal, for joining us, giving us a sense of how Q3 panned by and hopeful of a better Q4 and FY26. Let's now slip into a short break. The management of MTAR Tech joins us on the other side to discuss their Q3 earnings. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I'm committed to buying and owning Gaza. As far as us rebuilding it, we may give it to other states in the Middle East to build sections of it. Other people may do it through our auspices, but we're committed to owning it, taking it, and making sure that Hamas doesn't move back. There's nothing to move back into. The place is a demolition site. It'll be, the remainder will be demolished. Everything's demolished. I mean, you can't live in those buildings right now. They're very unsafe. But we'll make it into a very good site for future development by somebody.
Welcome back. There is a complete mayhem in the broader markets. The concerns are mounting. There is a bloodbath. The Nifty is down 1,700 points, and this is over and above the 1,200 point fall that we had yesterday, which means in 2 days, the Nifty has lost close to about 2,800, 2,900 points. The small cap index in 2 days, yesterday and today, has erased about 5.5% of its market capitalization. The advanced decline ratio, the gap between the two has only worsened. We're now talking about less than 200 stocks in the green for about 2,500 stocks in the red. So this is looking very, very ugly, very painful for individual stocks. Many of these high flyers are losing significant ground. Just stocks like Swiggy, Zomato, Ola, every single day these stocks are falling day after day on large volumes.
High valuation, high price, weak earnings. It's not looking like a good concoction. Yes,
yeah, there's so much supply in the market, but we've got a management waiting by to chat with us. Right.
So MTAR Technologies is the management. They reported a steady set of Q3 numbers. Revenues came in strong, but margins actually contracted marginally. To discuss this and more, we have Parvat Srinivas Reddy, Managing Director at MTAR Technologies. Mr. Reddy, thank you so much for joining us. You joined us at the end of Q2. Q2 was slightly challenging. Q3 appears to have been better. At the end of Q2, when you joined us, you told us that the FY25 revenue guidance would be 25% from the 30% you had envisaged earlier. You had the margin guidance at 21% from the 25% earlier. End of Q3, where do we stand and how do you expect to end FY25 at? Top line, margins as well as bottom line.
Yeah, we are still on track with that. We will be crossing 700 crores plus revenue by the end of Q4, and at a much higher margins of close to about 24% EBITDA levels to come at about 21% plus minus 100 basis points. So we are on track with that for this year. And for next year, we have a clear roadmap of a 30% revenue growth at about 24% EBITDA margin comfortable.
24% EBITDA margin. So correct me if I'm wrong, but weren't your EBITDA margins close to 20% in the quarter gone by? Are we looking at such a big jump in margins?
Yes, we have developed a lot of first articles. We have done a lot of work towards that. And we are back on track with our margins from Q4 onwards, where we'll touch about 24%, close to 24% EBITDA margin plus minus 50 basis points. So that's how we might end up with about 20% margins for the year. But moving forward, we'll go in the same momentum with about 24% EBITDA margin for the whole FY26 as well, with a 30% revenue growth.
So for FY25, where do you expect to end the top line at? I just missed that number. You're on track for 25%, is that right?
Yeah, the FY25 top line would be roughly around 700 crores plus. That's what it's going to be at the end of the day.
Understood. So slight moderation from 21% to 20%, and next year you're expecting to revert back to 24% as far as EBITDA margin is concerned. FY25, earlier you had indicated that the closing order book would be close to 1400 to 1500 crore. Your order book currently is slightly in excess of 1000 crore. So 400, 500 crore, where are you seeing the order visibility at as far as Q4 is concerned?
We're going to expect major orders from space and nuclear divisions, and also from a lot of MNC customers. We're getting a lot of orders. You have seen that recently we have received orders close to even 400 crores plus. So we are expecting a lot of orders coming in, and hopefully all these orders will come before 31st March. So we'll end up with the number of 1400 crores by end of the year. That's what we're looking at.
The budget gave a thrust to the nuclear power segment. What is your contribution from the nuclear segment? In what way is the company now better placed than it was prior to the budget?
See, one is the announcement in the budget, the nuclear division, MTAR contributes a lot to the civil nuclear reactors in India, right, for the last 35 years. So definitely, as and when those tenders come in, MTAR would benefit a lot. We are expecting huge orders of nuclear coming in the form of the regular fleet reactors from Kaiga 5 and 6, and as well as the refurbishment of reactors. We're expecting 5 reactors to come in for refurbishment. So over the next 3 to 6 months, we're expecting close to about 1000 crores of orders coming in, apart from what government has announced for the 220 megawatts, what they're looking at.
Understood that, sir. So as far as exports are concerned, Bloom, a major client, how's the order visibility over there? Have they recovered? They were also in a bit of a lull last year, like you had mentioned. Have they recovered? How's the order pipeline in that particular segment?
They're absolutely right on top right now with a lot of new orders with the data centers, and the kind of orders we have received recently and the kind of numbers we're looking at for the next year. It's right back on track.
Could you quantify, the prospect pipeline?
Yeah, see, for next year itself, we might even look at about almost like 485 to 500 crores of orders being executed just with Bloom, based on the kind of orders that we have received from Bloom Energy.
Thank you so much, sir, for joining us, giving us a sense of how the quarter panned by and the outlook as far as Q4 and FY26 is concerned. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Mr. Speaker, sir, with your permission, may I ask a slightly different question pertaining to gold? In the year 1971, Richard Nixon, who was then President of the United States of America, gave up the gold standard. After that, gold was hardly considered to be a serious financial asset. In 2006, gold constituted only 6% of the reserves of the central banks of the world. In the year 2024, it is up to 11%. China, India, Poland, Turkey are the most aggressive buyers. Even in India, there has been a surge in the domestic price of gold. My question to the Honorable Minister is that this shift away from the dollar to gold, does it indicate a renewed search for an alternative international settlement mechanism, dehoss the dollar? That's my question to the Minister.
So the Honourable Member, has he himself mentioned that it is not the core part of the question, but he's still asking, and I would certainly like to give my brief answer on it. India's, as he observed rightly, the demand for gold in India has not come down. On the contrary, it's going up. And I would think it is very typical of India, particularly for households or small businesses, and it is normally said women, but general households also and women also, to invest in gold because they think it's far more secure and far more liquid, and therefore as an asset class, we see that sustained interest in it by the households and small businesses as much as women of India. But beyond that, of course, the Reserve Bank also is buying gold to make sure that it has adequate reserves of gold and not just a basket of currencies. And in that, one of the currency which predominantly has been held by the Reserve Bank has been the US dollar. But we also have the reserve currencies in denominations of different denominations of other currencies as well. But the gold is also kept in the Reserve Bank, and gold is also being bought by Reserve Bank. But beyond that, as regards an international currency or potential currency, there's not much for me to comment at this stage.
Welcome back to Mid-Cap Radar. Well, there's been absolutely no respite as far as the selling pressure is concerned. A couple of stocks, especially from the healthcare space, the hospital space, are taking it on the chin today. Have a look at Max Healthcare. This particular stock is now down 5%. And the other stock that's taken a real beating today has been Apollo Hospitals, over 6% lower. Worries of impending competition is something that is keeping these stocks under pressure. But as we wrap up the growth code, let's now bring you an initiative by Grow and CNBC-TV18. We want to leave viewers with some essential tips and strategies. Here's a snippet of what Saket Ramakrishna, trader and founder at Quick Alpha, had to talk about common misconceptions in the trading world. Let's listen in.
What are the tips that you would like to give in your experience as a trader and now an entrepreneur to the young traders who are looking to venture into the markets?
So firstly, it's mostly about having the right mindset. So most of us are here without understanding what trading is for quick money. So just because we have seen in a lot of places where people have made, they post that they have made quick money, and also it is on the other hand a business where people sell dreams. So they sell tips, they sell courses, they sell a lot of things where they themselves are not making money, but they sell dreams of making money, and due to which a lot of people get lured and they get into this process of making quick money.
What are the common misconceptions that you would like to bust through this platform of these young traders and enthusiasts?
So first, going by the statistics, so mostly when you come to markets, you would be among among the 93%, but not the 7% who will actually end up making money, right? So when you come into the markets, unless you're coming into investing, don't come with a hope that you will actually be making money. So try to avoid as much as social media noise and try to focus on the basics of it.
Tell us about your journey and what are the ups and downs that sort of you took a lesson from.
What really happened is, for my first almost 1.5–2 years, I only saw the market go up, because when I entered, I think Nifty was around 5,400 or 5,500. From there on, 2014, we had the election and market saw a fantastic bull run. By 2015, when I was into market, so I already had started F&O by then, right? So I had only seen a bull phase where the markets went from 5,500 all the way to 8,500, right? So in my mind, it was never that the markets can actually fall.
Right now. So we thought this would be appropriate. Even bigger than the Super Bowl. This is a big thing. And almost everybody now has assented to that.
Attention on board. Ladies and gentlemen, if you could please direct your attention out the right side of the aircraft. Air Force One is currently in international waters, for the first time in history, flying over the recently renamed Gulf of America. Please enjoy the flight, and we are now about to head westbound to Super Bowl 59.
to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index holding on to gains of 0.7%. PM Modi's visit to France includes an extensive discussion with Macron on strategic cooperation, innovation and artificial intelligence.
I think this is going to be one of those years when the offtake in the state capex loans is going to be at its lowest point.
Nifty Bank closed lower yesterday, but relatively outperformed the Nifty, 23,365 and 49,871. Nifty Bank is coming off a little bit more.
10% increase in volumes for Congo, which is cardiac, oncology, orthopedics, neuro and gastro.
We do want to come out ahead of the industry growth and continue to maintain our lead.
साल 2030 तक हम 500 गीगावाट रिन्यूएबल एनर्जी कैपेसिटी ऐड करना चाहते हैं.
The sell-off is now extending itself for the 5th day in a row.
The rupee at its sharpest dealt at 86.63.
It seems like even the strategics are refocusing on India.
There's a lot of conversation about recalibration and strategy.
The meet is expected to drive investments worth around 10 lakh crore rupees across sectors.
Mid cap index down 3.4%, small cap index down close to 4%.
Well, it is painful, and we are almost at 23,000 now, 23,028 on the Nifty. This is closing well. We are starting a little early, of course, because of what's happening out there in the market. I'm Prashant. With me, my colleague Surbhi, Reema here, and Nigel joining in from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. The mid-cap index is down 3,000 points in a span of 2 days, 1,800 points lower today. And add to that the near 1,200 point fall that we had yesterday. 5.5–6% gone on the small cap index in 2 days. So this is really going to test the patience of the new investors who had only seen gains.
You know, so I'm sure most of us have been trying to figure out, calling people as to what's really going on. Some feedback that I received was that this doesn't look like mutual fund based selling. It's not MF suddenly throwing in the towel. It's not that. It's probably more to do with, either individual traders or retail investors or, family offices. There's a large middle which is not captured. It's neither FPI nor domestic institutions. They're not, domestic insurance firms or mutual funds. That large black middle is leading to this kind of a fall. At least that's what I'm picking up, because the sense and the sentiment seems to be preserve money wherever you have it. And a lot of these mid-cap stocks have run very, very hard. So one theory that I heard was it's preserve profit wherever you have it and get out. And the second was start booking some losses, because remember, you can offset your losses against gains elsewhere. So maybe there's some kind of rejigging going on, but painful would be an understatement. 2 days running, extremely severe. Nigel?
Well, that's right, and one would say that the weaker hands are getting flushed out, but just take a look at the pain in the broader markets. There's a lot of pain out there, and that was where the big money was made by a lot of retail audience. So that's why we're seeing a bigger sell-off out there. And that's the broad feedback you're getting. It may not be institutional-led, but the kind of selling that you're seeing from the HNI's larger participants as well is quite a bit. The hope is that maybe we at least protect the recent low, which was at around 22,780 or thereabouts. So let's see how this goes. The problem is these tariffs. The US is talking about something. Now you have the European Union that's responded as well. And it could turn into a whole-blown tariff war, which in turn will be very, very uncertain for the global equity markets as well.
Absolutely, and we'll hear more on that. By the way, as we get into the program, we are at 23,000. So let's see if we are able to hold this. That's basically nothing but the 20-day moving average. 23,004 as of yesterday's close, and we are at the 20-day as we look at the picture. But that's 1.5% on that index. Other indices are down 3%, almost 4% of the small cap index. So everything down kind of a day. Quite something. Let's bring in Rohit Srivastava, founder and strategist at IndiaCharts.com. Rohit, good to have you with us here, but we've seen markets puke it out all out. I think that's maybe the one expression which passed through my head It does certainly seem that way. What's going on in your opinion, and where are we at? The bounce has not been that sharp on the up. So we got to about 23,800 or so, which was the low, 27th of January. And then the market bounced a little bit. It was expected, broadly the view was it'll maybe stretch a little bit more, but we reversed much faster. Where are we at and where does it leave us?
Yeah, surely the quick reversal to the downside has probably been a surprise because you've been at the end of a 4-month-long decline. So let us split this view into two parts. One is the medium to longer term and one is the short-term setup. Medium to longer term, I think since October, I've been anticipating what could end up being a year-long grind, which we may eventually end up calling a bear market. But it's essentially that you don't make new highs. You have many bear market rallies, you have sell-offs and so on and so forth. So that is like in the big picture. In the near term, however, nothing happens one-sided. So if you had a pretty long fall over several months, you do anticipate that some kind of a counter trend move would happen. And that is the setup with which we were working, I think, from the week prior to the budget. And you're right that we didn't get past 23,800. And once again, we are back to testing the lows. My sense is that we are getting very oversold today, especially when we look at certain indicators, like we have our daily swing indicator, which essentially tells us the percentage of a group of F&O stocks which are showing negative momentum, and that's down to around 3%. So when you have only 3% of stocks showing positive momentum, 97% negative, that's usually a point from where markets will rebound. That doesn't mean today itself, but being very, very close to that point today, tomorrow, and you start recovering again. And what I would then anticipate is that we manage to protect the lows of late January, which is 22,800, or even better if we protect 23,006, or which is around 78.6% retracement of the bounce that we had seen. Then we should make one more attempt to go towards 24,000. So that is the first thing I would think about. Can we really make that attempt? Because nothing has really happened in the global markets to cause this kind of sell-off, and we need to also come out of some medium-term oversold conditions. Like a lot of us have talked about the positioning, which is the FIs being extremely short, the client data being extremely long, and they are at the opposite ends of the spectrum. And whenever that has been the case in the past, we have seen markets turn around for some time. And that has not happened yet. We haven't seen any significant short covering. Now, we can argue whether this is directional and the market keeps falling. Definitely, markets are supreme and it's possible. But based on data and based on historical patterns, we wouldn't anticipate that right away. I would expect that markets try to bounce back, loosen up the negative sentiment much more before you get another meaningful sell-off. However, the hard part would be to say the same thing about mid caps relative to large caps. I think that is where the next debate shifts then. But these are the Nifty levels with which we'll be working, and still looking for that it does not significantly sell off yet. You might attempt another recovery into March.
Rohit, hi, afternoon. So that's the near-term outlook, right? That we've possibly made a bottom today, tomorrow. There will be a little bit of a bounce back, maybe another meaningful correction. But what about the trend in the market for the next 6 months, 9 months, or 2025? Are we in for, much lower levels? Broadly, directionally, are we headed down? If you look at it from just a larger time frame, and talk to us on what's happening on the mid and the small cap stocks.
So when we take a slightly longer time frame, we've, historically, when we would go into a market correction consolidation, we are used to the idea that, Nifty, mid caps all generally move in tandem. But 2018 to 2020 was a very, different period, which, changed the way the market behaved. And it did so also in an environment where we did have a lot of mutual fund flows starting. That was the starting point of your mutual fund SAIA campaigns. And so all that money kept the large caps elevated even when the mid caps are falling. So that is the main thing to remember. 2018 to 19, 20 till COVID happened. The Nifty was still holding up, coming back to 12,000 after each sell-off. But the broad market was still in decline. I think that is the first thing that we can at least anticipate, that there may be further weakness in mid and small caps. After each bounce, they may still keep selling harder, as we are seeing today. But somewhere the large caps may find support because money in the end has to go somewhere. A lot of money is flowing into funds. They will only reallocate. They will decide, okay, let's not buy too much of mid cap. Let's buy this. They're hybrid funds that will shift back and forth. And so at some level, you end up getting buying coming back to the large caps. And so that may be more supportive of Nifty, Bank Nifty, relative to mid and small caps. So that is the first scenario we should keep in mind. What happened between 18 and 20 can repeat. The alternate would be to have something like 2015 or 2012, where for a 12-month period, both Nifty and mid caps made lower lows and lower highs, and you gave up around 20-30% over a 1-year period. That is the second scenario. But I think given the similarities and more recency, the first scenario has a greater likelihood of playing out. But we will see as it progresses. It clearly highlights one thing, that be careful of mid and small caps. I think that much is clear.
Absolutely. Rohit, hi, good afternoon. I was actually doing homework for the other show that I also host, the personal finance show. And since the pain in the mutual fund part is also really showing up, people are asking, it's all very fine to say long-term India story. But the thing is, people still pick up their, funds and look at the NAVs, and they're down quite sharply. Maybe I'll put up this data for, everyone's reference. The mid-cap category, mid-cap funds is the category, in the last 3 months is down about 8%. The small-cap category is down 10.5%. That's 3 months. And not just this, the 3-month correction has been so savage, it's cut out the whole year gain as well, down to about 7% gain average in small cap funds, which is, people will really, sit up and ask questions. Is the risk worth it if my 1-year return is coming down to 7-8% now? Of course, these are absolute returns. They're not rolling returns. So we have to take that in perspective. But Rohit, the question is, what is to be done here? I think, and that's something that people are grappling with. Now, whether you're owning mid and small caps directly or via funds, would you say that this is the time to book whatever profit you have, or do you think that this is the time to just sit tight in at least some sectors and companies? What's the advice? What should be done with anyone's mid and small cap holdings? Anyone who's watching this absolute carnage play out?
So what has to be done is that every time you get a bounce, like we got one in December also, where the small cap index almost made it back to the highs. This time around, it was much smaller. Every time we get these 2-3 week rallies, you need to reduce your weightage towards mid and small caps in favor of large caps. Now, this is usually not true for individual investors who have only, say 10 stocks or so, and they've selectively bought something which they have a 5 to 10 year time horizon for growth. Then it becomes a different game. But when you're really investing only in funds and you're watching 6-month, 1-year performances, it makes a lot of difference if you have over allocated to a particular segment, which most people are saying is still relatively overvalued. So reducing that weightage in favor of large caps or particular other sectors that can do well in the interim might be one way to deal with the problem, because otherwise you'll keep seeing poor performance or even negative performance stretch further on a 6 or 12-month basis, because this segment might continue to weaken in this time period. So that is the thing to keep in mind. And second is also consider alternate asset classes. Very few people talk about. One of the places that have done well has been gold, and gold as an alternate allocation apart from equity is also something that a lot of investors should consider during such times.
Hi Rohit. Rohit, I wanted to ask you about the Nifty Bank. That in fact has taken a sharp downtick. It's at around 49,300. One would have thought a sector where there is valuations which are pretty okay. You have RBI action as well that's taken place, and bulk of the estimates, going ahead as well, they don't appear very, unbelievable, or they appear that they've taken into account yields will fall a little bit. But that one, in fact, is at a very, very crucial level. Where is that one headed?
Yeah, so like you said, it's a crucial level. If we look at all the major indices, it's one of the ones that is losing the least. The Bank Nifty, it's down less than the Nifty. It's not broken the 20-day average, which is currently at 49,272. So it's actually doing relatively better. Of course, it's down because the market is down, and so everything is down. But on a relative basis, if I look at the performance from the 5th of December when the market peaked, the top sectors that we actually see I see on the screen right now is private banks. That is one that comes right on top, followed by IT, banking, and metals. So these might be the areas. So when you see on a decline like this, that these are the areas where we are seeing relative outperformance. that is sort of where I would expect things to remain better when even the markets rebound. So they would be places where I would look at allocating money at this point of time from a maybe at least a 1 month perspective.
Okay, so again, the view, Rohit, is large caps see a bounce from here, maybe the Nifty, right?
Yeah.
Mid and small caps can't say. You're saying institutional behavior could move towards large caps, and that may cost mid and small caps, right? Because you've got to, you basically mark to market to the benchmark, and then you can't, it's tough there. Individual, of course, portfolios, that's an important point, the differentiation. And sectorally, anything looking, interesting or poised for further declines?
Further decline. So, one of the surprisingly most weak segments is FMCG. I think we all thought, including myself, that post the budget it would hold up a little longer, maybe go further than that. But it's broken that entire shelf. The FMCG index, the Nifty FMCG was holding 55,000. It held it around 3 times between late November and mid of January. And after attempting a breakout on the upside, it failed. And now it's making new lows. It's broken the entire range. So that looks like a very, very weak segment right now, despite whatever we may have tried to do. And it means that that's going to keep making lower highs and lower lows. So even when it does bounce, I doubt it will possibly go back to even where it was, pre-budget or around the budget. So that's one of the weakest areas I can see.
My question was weak or strong? Anything looking interesting also from a buying perspective?
On the strong side, I would actually think metal space, even though I know the tariffs that have come overnight are on steel and aluminium. But when you actually look at commodity prices, they are rising. The copper prices have been going up for the last 6 to 7 days consecutively. Aluminium prices are close to a breakout point. So they could very well follow copper on the way up. If they go past around, say, 2690, that would be a good breakout point above which aluminium would get strong. Even there are other commodities, things like coffee, which nobody's looking at, which are making all-time highs. So basically what I'm saying here is that commodity prices, and sometimes this is how cycles work. It's bonds, equities, commodities. Bonds tend to peak out first, equities next, and then commodities are last. And so money does get reallocated from equities to commodities in a last blow-off, and which is why sometimes inflation risks remain elevated till later in the cycle. And we are seeing now some kind of a pickup in commodity prices. So commodity-related stocks could be another area which could be positively surprised.
Rohit, thank you very much for that. Just a word on gold. There are two, game-changing events that everyone's watching out for. One, is there a possibility that the US Treasury will revalue its gold assets? So it's currently valued at $42 per ounce, but the current market rate of gold is about $2,900 an ounce. And increasingly, there is speculation that the US Treasury will revalue it at the current, at the current market price, which basically reinforces confidence in gold as an asset. And secondly, China has allowed a pilot program which allows insurers to invest in gold. So it takes money away from the US dollars and it will put them in gold. And that again could drive gold prices. So that's just a quick update on gold. But let's move on and talk about the broader market and the panic, the big sell-off, the mayhem that we're seeing there. Now, FIs have sold shares worth 1 lakh crore rupees in 2025. Sudarshan is here with the numbers.
So market has taken a big knock in the last few days from their recent peaks, especially in the broader markets. Both mid-cap and small-cap indices are down nearly 20% each. And in just last 2 sessions, both these indices, mid-cap and small-cap index, are down 6% each. So what would be the main reason? If one of the many reasons, if you could mention, that is big FIs selling. Just in 2025, basically in January and in February, if you accumulate, FIs have sold shares worth nearly rupees 1 lakh crore. And from October 2024, FIs have sold shares worth nearly rupees 3 lakh crore. Now, if you look at the mid-cap stocks, there are 100 stocks. So nearly 30% of those stocks are at or near to 52-week lows. And all the stocks have fallen up to 60%, with 60 or 70% of them have fallen more than 30%. Now, for Sensex and Nifty, fall from their record highs are in the range of 11 to 12%. But look at the broader markets. Mid-cap index from record highs down 17%. Small-cap index has fallen 19%. Nifty Next 50, earlier it was known as Nifty Junior, it's down 22%. And Nifty SML 250 is down 19%. And if you look at the sectoral indices, the fall is more severe. Media index down 32%, energy 30%, PSU 28%, realty 26%, PSU bank 26%, and metal 20%. Now, if you look at all the stocks, obviously PSU stocks are topping the list, with top losers being MRPL down 60%, Cochin Shipyard 55%, Vodafone Idea 54%, Hind Zinc 49%, Oil India 47%, Hoodco 46%. These are the stocks in the mid cap. If you come to the small cap, Sterling and Wilson 64%, Chennai Petro has fallen 61%, Raymond is down 59%, Jupiter Wagon 57%, Titagarh Rail 56%, ITI 53%. So now, what's next from here? There was an expectation from earnings that also seems to have vanished. Number of companies which have reported earnings so far, so number of companies reporting below than expectations is much more than the companies which have reported earnings which are higher than estimate. So we'll have to see how the next few days pan out. As of now, it's a big fall that we are seeing in the market.
Okay, all right, indeed. And a lot of these stocks have fallen in a big fashion from their highs. So Darshan, thanks very much. That's interesting data. Just puts the fall in perspective for us. We have to slip into a quick break at this point in time, come back with some more perspective. And we'll have Adrian Moat join in as well. He's been a long time India veteran watcher. So what is he making of the Indian market's underperformance? Back with that in just a bit. Welcome back. We're continuing to track what's turning out to be another brutal session for the market. 3.5% gone from the mid-cap index. The Nifty is nursing losses of about 1.5%. We have now, as promised, Adrian Moat joining in this leg of the conversation. He's someone who's been watching India, tracking the Indian market for many, many years, for decades. And therefore, that perspective is going to be very useful right now. Adrian, great to have you on. Thank you for taking this quick call. You know, investors in India are not really used to long periods of underperformance. But that's exactly what's playing out now. The growth valuations are perhaps coming back to haunt us. What do you make of the big sell-off that we're in the midst of? It's been a time-wise correction, but now the price correction is also getting pretty savage, especially in mid-caps and small caps.
It certainly is. And, you know, when you look at the charts, the technical situation looks very poor. And I was just looking at how even the Nifty, you know, failed to break above its 50-day moving average, is moving down, and then we've got another sell-off. So there doesn't really seem to be any sort of technical level for the market at this point in time. And you know, if you go back to your earlier point, which is the valuation of the market, this remains a very expensive market, which is justifiable if it is generating high growth. And I think investors have been disappointed both at the macroeconomic level, but probably more importantly at both revenue and profit growth levels in the market. So this is going on against a backdrop of India being a big outperformer, emerging market funds having a good exposure to India, at a time where we've got rising U.S. interest rates, which put pressure on current account deficit countries, including India. And we've also, surprising, considering you'd think it would be the center of the trade dispute with the United States, Chinese equities doing quite well at the moment. So I think that the mindset here for investors is, look, I've been long an expensive market. It's not delivering the level of growth I was expecting. And at the same time, I'm very underweight market like China, which is surprising me by performing well. That might be partly driven by the whole DeepSeek story and people perhaps appreciating the level of opportunity in very cheap Chinese tech names.
You know, the funny part, Adrian, is that all this, if we, for instance, talk about the latest rumblings, which is all about tariff and tariff wars, if anything, I guess markets like South Korea or Taiwan or, of course, China, they're directly more impacted. India is still a very inward-looking market, and our net exports to the U.S. are not that significant in the larger scheme of things. Yet, like you were saying, the Chinese market has started doing better. We're not seeing a big shakedown over there. So, in the near term, do you think that could be an added negative for India? Should we be prepared for that? That China starts doing better despite these trade wars?
Well, I mean, it is doing better despite the trade wars, and I think you are already seeing a flow impact. Remember here we're talking about the Indian equity market as opposed to the Indian economy. Your IT sector is very sensitive to U.S. immigration policy, and there's clearly a dispute between, let's say, the heads of the big tech companies and those that are more MAGA-centric about whether visas for skilled workers should be given out. And if they're not, that is pretty bad news for the Indian IT industry. You've got a lot of steel companies and commodity companies listed, and if you're getting tariffs on the import of steel and aluminium into the United States, there is an impact at a sector level there. But I think a lot of this comes back to just the results season. The results season was disappointing. And when you're an expensive stock and you disappoint, you are going to see share price corrections. So I would suggest quite a lot of this is micro. It's about the earnings disappointing relative to the valuation.
You know, there are so many stocks which are at fresh 52-week lows. Swiggy, Delivery, MRPL, Motherson Wiring, NCC, LIC, GAIL, Coal India, IOC, All these stocks are now hitting fresh 52-week lows. And these are stocks which have fallen 35, 40, 50% from their 52-week highs. So, Adrian, what's the advice that you're giving investors now? Sell more of Indian shares, or do you think now, after the correction, there is some relative comfort?
I wouldn't be buying at this point in time because you need to, as we've seen, let's say in markets like China, when, the share market peaked a couple of years ago, the correction phase can be quite protracted as valuations move back to, the growth to a level that would be justified by the growth rate that they're delivering. I think the retail investor in India has a large exposure to equities. They've done well out of it, and now they're going into a period where that exposure is beginning to hurt them. And they might be willing just to, for a period of time, park a bit more money in the fixed income market as opposed to the equity market. If you're a high-frequency trader, I would still be on the sell side. As a saver, I would be standing back and not buying into this weakness.
Okay, I would not be buying into this weakness at this point in time. Adrian, it's a pleasure. Thank you very much. And I hope you come back and speak to us once we know what really comes out of the sort of, talks between President Trump and PM Modi. That's essentially going to be over Wednesday and Thursday. And I think markets will remain very, very sensitive to it as well. Thanks indeed. Well, sorry, go on. You wanted to say something?
I'm sure the President of the United States will say they're the best ever talks he's had.
But do you think it'll yield a positive outcome from an India perspective, or you think at the margin, whether it makes a real dent or sentiment-wise, you think it'll be positive or negative by the end of it?
I think for an hour it'll make a difference, and then there'll be another news story coming out from the White House. I'm getting to the point where I think we're better off watching cricket rather than Trump's Twitter feed for our own mental health, and probably for the performance of our portfolios, because I think it's very dangerous reacting to all the noise that's coming out.
No, absolutely, and it's been overwhelming. Is the Twitter feed, and of course then there's the other stuff, and it doesn't stop. I mean, Saturday, Sundays are not sacrosanct either. And you hear something or the other over the weekend when you come back on Monday. Thank you very much, Adrian. Appreciate you joining us here on CNBC-TV18. I think, the market just about holding the 23,000 mark, 360 odd points down in the Nifty. So that's opinion, both local and some global stuff as well.
The thing is, by the time an executive order goes out in the evening, 11, 11:30, you never know. By 6 in the morning, maybe a part of it has been repealed, or someone else has done something else, or there's another tweet putting it on hold. So, I mean, this is an extremely exciting time, if I were to say optimistically.
Exciting for the news cycle. Absolutely for the news cycle.
Exciting in double quotes. Okay. All right. I think we have to take a very, very quick break. As we do that, let's get you some more snippets from the Growth Code. This is, of course, an initiative by Grow and CNBC-TV18. We want to leave traders with some essential tips and strategies. Here's a snippet of what Saket Ramakrishna, trader and founder of Quick Alpha, had to say about common misconceptions in the trading world. Listen in. We'll take that break and come right back.
What are the tips that you would like to give in your experience as a trader and now an entrepreneur to the young traders who are looking to venture into the markets?
So firstly, it's mostly about having the right mindset. So most of us are here without understanding what trading is for quick money. So just because we have seen in a lot of places where people have made, they post that they have made quick money. And also it is on the other hand a business where people sell dreams. So they sell tips, they sell courses, they sell a lot of things where they themselves are not making money. But they sell dreams of making money, and due to which a lot of people get lured and they get into this process of making quick money.
What are the common misconceptions that you would like to bust through this platform of these young traders and enthusiasts?
So first, going by the statistics, so most obviously, when you come to markets, you would be among the 93%, but not the 7% who will actually end up making money, right? So when you come into the markets, unless you're coming into investing, don't come with a hope that you will actually be making money. So try to avoid as much as social media noise and try to focus on the basics of it.
Tell us about your journey and what are the ups and downs that sort of you took a lesson from.
What really happened is, for my first almost 1.5–2 years, I only saw the market go up, because when I entered, I think Nifty was around 5,400 or 5,500. From there on, 2014, we had the election and market saw a fantastic bull run. By 2015, when I was into market, so I already had started F&O by then, right? So I had only seen a bull phase where the markets went from 5,500 all the way to 8,500, right? So in my mind, it was never that the markets can actually fall.
I do believe we're making progress. We want to stop the Ukraine-Russia war, and I want to stop it just because I hate to see all these young people being killed. The soldiers are being killed by the hundreds of thousands.
Welcome back. Well, the markets continue to reel under pressure. If you're, trying to look for a couple of positives today, one is the rupee, which has pulled back a little bit. That's point number one. Point number two is, in the last 1 hour or so, at least the Nifty has managed to defend the 23,000 odd mark. And point number 3 is the Nifty Bank. If you pull up the 20 DMA as of now, it breached it intraday and now it's holding about that. And for the next, 50 minutes or so, you'll want these levels to hold out, which gives the bulls a chance to fight for another day as well. So that's at least the hope. It's a weak trading session, no doubt. Mitesh Thakkar is back in. Mitesh, you had told us you have taken your long positions down, but have you all started shorting the index now? Are you bracing for a bigger pullback as well from these levels?
Oh, we have. So, instead of the long view has gone wrong, then I was hoping that there would be some consolidation and the markets have actually broken the 23,200 levels as well. So there's no sign of reversal. And I don't want to take a shot at these levels given the fact that, we are slightly unfavorable risk reward equation had so we've got to wait it up for the next opportunity. Till then, I think trading should be slightly more on the stock specific basis. I have a sell on Tata Communications. Keep a stop just above levels of 1550 here for a 1450, 1460 kind of a target. Similarly, Tata LXI is also giving a fresh negative crossover. So sell here at the stop at 6200 for targets of around 5940.
Okay. You just apologize to him.
Okay, all right. Mitesh, got it. Thanks very much for the calls. We'll come back to you in just a bit. Let's move on and look at some stocks as well. The market, of course, as a whole has been pretty troublesome. Nifty is still trying to hold on to 2,300 for what it's worth. Like I said, let's come down to some stocks. One of the worst hit on the Nifty is actually Eicher Motors, or even we should point out Apollo Hospitals. Apollo is now down 6.5% after a pretty decent quarter. But I think maybe it's the added weight of the Adanis getting into the healthcare space. Maybe it's that. Maybe it's just the general market sentiment. Big knock on Apollo Hospitals. The other one which is falling as much as this is Eicher Motors. So what's plaguing Eicher? Clearly the numbers haven't gone down too well with the street. Sudarshan's joining in with more details. Sudarshan, margin was?
So Eicher Motors is top, Nifty loses, and it seems that market is concerned with the same issue that we have been highlighting since morning. That's about the margin. It's about like what would be the level of the margin that company would be comfortable with. Now, remember last quarter after Q2 earnings, company had raised this issue that it would prefer growth over margin. And you can see that over the last few months, volumes have been healthy. Every month, company has been reporting volumes of more than 90,000 units. And in Q3, total volumes were up 19%, up both sequentially and year on year. But what about margin? Margin for Q3 has come in at 24.2%, which is down 200 basis points year on year, also down against our expectations of around 26.4%. And some of the factors which have impacted the margin is the adverse product mix. Nearly company had launched one product that is Bullet Battalion. It's a low margin product and it might be helping the volumes to go up. But on the margin front, it's impacting negatively. And another is due to heightened competition, companies unable to take price hike. So these are some of the major reasons. That's the reason that margin has been under pressure. But company will have to take a call. What will be the level of the margin that it's comfortable with?
Today, while UBS is downgraded, Eicher Motors posts the Q3 numbers. Morgan Stanley says growth over margins is the right strategy. But with the stock pricing in high growth and high margins, achieving both will be tough. Their target price is all the way down to 3,855. But Sudarshan, Escorts Kubota, also very weak set of Q3 numbers. Commentary here was downbeat. Give us the details. Sudarshan? If you can hear me, tell us about Escorts Kubota.
Well, Escorts Kubota, it was an all-round miss. On the earnings front, company has performed much better than, much below expectations on all the front. Revenue was below estimates, when margin has come at 11.4% against our expectation of 12.4%. But more than earnings, what has been more problematic is the guidance. Guidance that company has given for FY25 is very weak. On the volume front, it says that due to the transition, it's going to increase the construction equipment price, and in resultant, it would impact the volume. And second, company has been also unable to take the price hike. And on the margin front also, it says there will be a gradual increase, but companies unlikely to see a major jump in the margin. And on profitability for FY25, it's saying that it's unlikely to see any major change if you compare versus FY24. Now, if you remember, yesterday only M&M had come and it had given the guidance for tractor industry that in FY25 growth is likely to be in the range of 6 to 7% for FY25. And that means that in Q4, growth of tractor industry is likely to be much more than 15%. But it's for the industry. We'll have to see what exactly it would be for Escorts Kubota, because on volume front also, every month, the volume that company has been reporting has been below expectations. So results were weak, but more problem is the weak guidance.
Okay, thank you very much for that big crack seen in many of these auto names. Realty Index is the worst performing index today, and that we'll get that up for you on your screen. But ahead of Axis Capital's India flagship conference this week, Neelkant Mishra discusses the potential fallout of the US reciprocal tariffs on India. And Atul highlights the risk of high equity supply in 2025.
While there is a lot of global turbulence, the levers for growth are completely internal. So there will be some impact. As we have estimated, if there are reciprocal tariffs, and this was done before the headline rates were cut in the budget, if US was to impose the same rates as India imposes on US imports, you would see an impact of about $7 to $8 billion. But I think that number is going to be a lot lower because India, as you must have seen in the budget, has actually cut those numbers. There is, I think, significant global uncertainty. I think there is, the more the uncertainty on investment. And therefore, it makes sense to be a bit cautious on external demand.
23, we saw total activity of around $15 to $18 billion. In 24, we saw around circa $40 billion. In 25, we could see as high as $50 to $55 billion of sale through various corners. So that's the supply that is going to hit the market. As long as we have the domestic flows which are robust, and there the key indicator to watch out for is the SIP flows. I think as long as the SIP flows are adequate or in line with what we are seeing, we have no reason to be worried or concerned about.
And I expect to have many more conversations. We have to get that war ended. It's going to end, and we have to get it ended. And we have to get it ended soon. Should have never happened, would have never happened if I was president.
investing.
Amazing. There are many biases that we need to think carefully about. That is why I am grateful to my friend, President Macron, for hosting this summit and for inviting me to co-chair it. Friends, AI is already reshaping our polity, our economy, our security, and even our society. AI is writing the code for humanity. AI is writing the code for humanity in this century. But it is very different from other technology milestones in human history. AI is developing at an unprecedented scale and speed, and being adapted and deployed even faster. There is also a deep interdependence across borders. Therefore, there is a need for collective global efforts to establish governance and standards that uphold our shared values, address risks, and build trust. But governance is not just about managing risks and rivalries. It is also about promoting innovation and deploying it for the global good. So, we must think deeply and discuss openly about innovation and governance. Governance is also about ensuring access to all, especially in the global south. It is where the capabilities are most lacking, be it compute, power, talent, data, or the financial resources. Friends, AI can help transform millions of lives by improving health, education, agriculture, and so much more. It can help create a world in which the journey to sustainable development goals becomes easier and faster. To do this, we must pull together resources and talent. We must develop open source systems that enhance trust and transparency. We must build quality data sets.
All right, that's Prime Minister Narendra Modi sort of addressing the August audience there. And of course, his next stop is going to be the US, where all eyes is going to be on Prime Minister Modi and President Trump as they engage in talks. Tariffs top of mind, and that's going to be all of the sort of news cycle over the next 2 days, Wednesday and Thursday. Jitendra Sriram is with us, Senior Fund Manager at Baroda BNP Paribas Mutual Fund. Jitendra, good to have you with us here. Thank you for your time. You know, the screen is negative, so the price makes you negative, even if you want to be a little constructive or positive, but you must look through it. If you have time on your side and if you have money to invest, what are you doing, Jitendra? And how are things looking? Is it looking so negative, or what's the view here from here?
Yeah, so broadly, I would say I think the correction has been quite intense and quite rapid as such. So I would think that at this juncture, it actually looks like it is a little bit overdone for near term, because at least from what we can see on the capex front, the reports that we are picking up, at least the capex on the ground from the governmental sources and all, seems to be picking up. So our take is that at least the earnings momentum should improve from here on. So the kind of, we were undershooting on the earnings estimates all through first quarter, second quarter. My take is that we'll probably be closer to expectations, at least on the large cap odd side. Maybe the small cap still has about a quarter or so to go before it starts recovering. But I would think that at least certain segments are starting to look far more attractive now.
So which would be the sectors where we will see earnings growth revert, where there is opportunity sectorally? And where are the small cap pockets where you think that the recovery is a little more delayed now, 1 to 2 quarters out?
So I would say that broadly, if I look at it, at least the exporting segments is something that we are clearly seeing some kind of better traction come in, because, a lot of their pains were early on. So whether it's healthcare, whether it's IT, all these segments are starting to look a little bit more promising. There is a margin uptick that is expected by the street going forward. So those are areas that are clearly positive. The second is also that the Madam FM has put in a lot of money into the hands of the middle class now post the budget. That impact will be starting to felt through from April onwards. So hopefully that should also lead to some amount of discretionary pickup going forward. And that will again be an area where you could see some improvement and uptake coming through on the consumer discretionary side. So those are areas that are clearly looking positive. I would say that, where it could still take a little bit of time is especially those exposed to some of the capex thing, because capex, what is happening is a lot of the announcements are happening right now, but it might take some time before these investments are crystallized, move on the ground, that secondary order giving out happens. I think that might be a little further out there.
Okay. Jitendra, hi. Good afternoon. Slightly different question, because I've been sort of trying to figure out how mutual funds are looking at this big fall and, what's the sense. The monthly data is going to come out only tomorrow, but I think the sense that I got from a couple of people is that it's not like suddenly the investors are shutting off the tap and flows are drying up. But what have you been hearing at your AMC and around in peers in terms of redemption pressures, especially for mid-cap and small-cap funds?
So it's very similar to what the news coming to you, in a sense that there is no panic as such on the retail side. See, retail is also confronted with a couple of things. On the tailwind, of course, you have this big rising equity cult which is there. The second is more money in the hands of consumers. All these are pro the equity theme overall. Of course, the headwind is that, in some of, especially like SIPs into, say, the small cap segment or something, you are seeing now the 1 year return being, say, probably about negative or something like that. So you could have a little bit of a headwind there. My take is that, the retail has also evolved over a period of time. They don't panic as much as they used to in the past. So I would assume that they would probably ride through it. And we are not seeing any, any kind of material, people pulling out money or something like that. What we are seeing is that, okay, the positive trickle that used to come in, that has probably, marginally come off, but it is still a positive.
Okay, all right, Jitendra, I request you to stay with us. We're going to come back to you. We want to continue this chat, but for the time being, it's 3 p.m. and we have Nimesh who's joining to tell us what he's making of today's fall. Nimesh, what's the feedback that you're getting? Surbi earlier alluded to the fact that it may or may not be institutions, who are selling a lot, but it could be more the domestic hands. What are you picking up?
So, Nigel, 3 things which a lot of markets have been talking about and focusing on. One, is there a very large FIS selling? The answer to that is no. Okay. I haven't heard any large basket selling or an MOC sell flow at any large institutional. So, there is selling. Of course, that's been the data which has been showing up. But there is not very large selling which suggests a 300-point cut on the Nifty or 3% fall in the broader market. So that's the FI part. Yeah. The second part is, are there redemption pressures in domestic mutual funds? Even to that, the feedback seems to be that there are no any signs of redemption pressures in the mutual fund industry, so to speak, as we speak, right? Good. The only thing is, from the DI point of view, from the domestic mutual fund point of view, the participation has slowed down clearly. I was talking to some large institutional desk, and the feedback is, if they offer or show a 10 lakh shares of bid, the bid is only for 3 lakhs or 4 lakhs. So clearly, from the mutual fund side, the aggression to buy in such a market is slowed down clearly. So even that is impacting the stock price to some extent. I guess what we are seeing is literally a carnage in the broader market name. So looks like that's more of panic selling from retail and HNI investors, or for that matter, who are individual investors who are directly investing into the market. So that's the pocket which seems to be panicking now. The mid cap index is on 3%, micro cap, small cap. The SME IPO index is down 4.5% in today's market. So that clearly shows that there is pain now at the portfolio level, and even at a trading level. So a lot of people are booking the losses as well to adjust the books for the March end. So it's still far off for the March end, but still, that's the feedback that there is a bit of unwinding happening from the retail and HNI category. So that explains the flow perspective. FI large selling, no. Domestic redemption, maybe no. Yes, there is lack of buying interest from the domestic mutual funds. I guess technically, we've been saying this, right? 22,800 now is a level to watch out for. We've clearly broken the 23,300 support. Now the level to watch is 22,800. If that gets taken out, then you will see further selling or further panic in the large cap names as well. So that's overall feedback as far as flows are concerned. I guess it's more to do with the pain in the broader markets, and it looks like that's something to watch out for. But again, looking at just the data purely from the PCR data point of view, it's come to 0.65, and I've been saying for a while now that that's the level where normally we see a bit of a pullback. So hope for a pullback, but I haven't heard any big selling from FIs.
There are two factors out there. One is the PCR, the other is the FI net short positions, which has reached 1.75 lakhs. So ideally, these are the levels from where we should get a bit of a bounce. Yeah. That said, Nimesh, what about individual stocks?
So in terms of individual names, the first is a couple of the new age plays, so to speak, Zomato and Swiggy. Both are under pressure today. In fact, there was a Citi initiating report on Swiggy as well, but stock is down 6%, and there is selling pressure. Aggressive selling is what I understand from larger FIs. I guess the street is a bit worried about, there could be a bill for the gig workers to be included in the pension scheme. So that could have an impact. And maybe that explains there is selling in both those names today. The second stock is Interglobe Aviation. In a weak market, that's not very down, but there is buying as well. There is small buying, but there is buy flows from larger institutions in Interglobe Aviation at these levels. But again, for Interglobe Aviation, watch out for a potential large block, because the 5-month lockup seems to be over now for the gun ball. So that's something to track there. The third name is Goldium International. A sharp cut in that stock. Down 13% and large volumes as well. I understand there are sell-offs at HNI desk, and one leading HNI investor has been aggressively selling for the last couple of days there. And the last one is LIC Housing Finance. A lot of funds bought in anticipation of rate cut and a potential beneficiary, but now you're seeing a bit of reversal and a bit of whether you call it profit booking or genuine selling. There is selling in LIC Housing at these levels.
Okay, all right, got it. Nimesh, thank you very much for that perspective. Interesting, the market that we are in the midst of. Back to that conversation with Jitendra Sriram, senior fund manager at Baroda Mutual Fund. Thanks, Jitendra, for just waiting by. Want to talk to you about now the sectors that you're still convinced on, or the pockets where you think, despite this volatility, I mean, say 2, 3, 4 months down the line, 5 months down the line, at least one is reasonably sure of returns because of the growth profile and the valuation comfort. Where do you find these safety zones in the market?
Sure. I think utilities, as I mentioned, exporters was the first one, the healthcare, IT sectors. The second, I would say, is utilities is looking fairly promising. You had in the morning, you were putting out this thing about the kind of capacity growth, the kind of energy demand that's coming in the country as well. So those are something which are long-term drivers. So I know I can see that, there has been a little bit of a pressure of it, but I think the longer-term story is pretty much intact in these names as well. And also the cost of borrowing is a big help, because utilities typically work like an inverse bond as well. So to that extent, I would say that space is something interesting. And lastly, I would say even pockets of consumer discretionary should be promising. You have this huge amount of capital reaching out into the middle class. Where does it actually show up is a little bit questionable. I mean, in a sense that whether it is used to buy a two-wheeler or a four-wheeler or something like that. But the fact is you have higher disposable incomes, which should be positive. I think sometime in the next year, we should also be starting to hear the news flow around wage commission awards for government employees, and then it follows through for PSU employees and all that. So I think you have a 2-year kind of a run of income boosters coming in for the salaried class as well. So that should also do fairly well.
Got that. Jitendra, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here on CNBC TV18. So that's a quick conversation with Jitendra Sriram. Markets down about 320 points. I mean, there is some recovery which comes, fleeting recoveries, but that gets sold into very quickly. I just saw Nifty went on 280, back down to about 320. So that's what you've got going. Advanced decline is at the bottom of the screen. Some 10:1 more in favor of advances at this point. We'll take a quick commercial break here. More market conversation comes up. We'll get you more opinion from a private equity perspective as well when we return. Jay Bala will also be with us for a technical perspective. Stay tuned.
Not just the first woman banker, but the first public sector banker in India after 70 years of banking in this country to be awarded the Padma Shri.
I was really grateful and humbled. No other public sector banker has been acknowledged.
Do you believe then that privatization is the answer?
I don't really believe that is the answer. There was a particular reason for which the public sector banks existed. Women need to feel fulfilled. If you are fulfilled in doing, staying at home, being a homemaker, great. But do not think of it as a sacrifice. I would tell them that, it's good for you to be a role model to your child.
As far as delisting, etc., is concerned, at this point of time, no. I think we continue to be as is. We continue to run our businesses. We've given commitments to our business partners, our customers at large, that we take responsibility as a responsible company for whatever we do in the country. Our focus is continuing to, under the sort of conditions that you're seeing, and you explained earlier when you opened across the businesses, making sure we deliver strong growth and profitability.
Welcome back. There's some tiny slight recovery, if I could call it that, in the mid-cap market. What was earlier a 3.5% cut is now about a 3% cut, but it's still brutal. There's no taking away from that. Let's look at the top volume gainers and see what's moved up in the last 1 hour or so. Not too many names actually on the upside, hardly any to speak of. Largely still names on the downside. Lots of PSUs, NBCC, you have names like obviously IFCI, SAIL, RailTel. It's a bad day, bad afternoon for most PSUs. Okay, let's quickly move on and get some final trading advice from Mitesh. Mitesh, it's been quite a session. Final levels to keep in mind for the Nifty. Clearly, the long trades haven't worked 2 days in a row. And any final stock ideas?
I think, the index trade hasn't worked. But, on the stock side, I would suggest STVT. That will be on APL Apollo. Keep a stop at about 1392 and look for a target of maybe 1350, 1345 on the downside. And the other one is STVT on Bajaj Auto. Here, keep a stop at about levels of 87.91 for targets of 87.20.
Thank you very much for that. Let's get some more opinion then on the markets, the Indian economy and investment. Venture capitalists and PE fund managers still remain very bullish on India. Kedara Capital's Manish Kejriwal says the second half of 2025 will be a buyer's market, while Samara Capital's Sumit Narang says the deal flow in 18 months should accelerate. Listen in.
A significant amount of dry capital, as we said earlier, for sponsors, and India being globally relevant, whether it's China +1, given what's happening to the Ukraine and the Middle East, it seems like even the strategics are refocusing on India. So exits, IPOs, of course, but in addition to that, the financial sponsors, because of all the dry powder we have and because we believe in India, and in addition to that, the strategics. So as a promoter or a GP which controls an asset, our exit options for the first time are multiple and very attractive. Sharon, I think if you look at what was clear is the time gone by. So I look at 24, it was definitely a seller's market. We had IPO markets which were crazy. We all got exits. I think each one of us We had more than 4 IPOs. We still have another 3 in the... It's gotten tighter now. So when it's a seller's market, buying was very difficult last year. The public markets eventually are an indicator where the private markets are going to go. And it hasn't been the most healthy start to a year. I think prices rightly will correct, the multiples will compress, and the second half of 25 will be a buyer's market much more than a seller's market.
If you see globally, as investors sitting globally, still India is, I think, on the expensive side on a relative basis, what they are seeing. So I think the markets will be subdued. And I think to each seller, if people like, even in our business, if a business needs to be sold and we need liquidity, and we're getting 10% lower than what we want, we would go ahead and do it. And I see the same behavior from, other motivated sellers and buyers respectively. But I think it will be a little subdued environment seeking liquidity.
Welcome back. Well, the markets are still down, but at least from the lows, we've seen some kind of recovery on some kind of, up move, at least on the Nifty as well as the Nifty Bank. Jay Bala joins us on the show. Jay, You've been calling it right that the Nifty could test lower levels, but going by the way that we have fallen and going by some of the technical indicators, do you think we could brace for a counter trend rally, or do you think it's going to be one way down?
It's never one way down, Nigel, and good to be here. I actually overestimated the strength of the counter trend move. I anticipated the market to touch somewhere close to 2400, but the markets have started caving in from 23,800 itself. So, it didn't allow opportunity to accumulate enough short positions on the index. So that's what the market it is. But, going forward, two stocks are going to be very important. One is Reliance, another one is SBI. Reliance, if it were to break 1200, not a good sign for the bulls. And I've mentioned that SBI has potential to cave in to somewhere close to 550. That will be dependent on what the stock does between 722 and 721. If the stock were to slice through like a knife on butter, then that's an indication that much deeper cuts are coming through, and that will have a very broad implication on the banking sector and the overall market.
Hi, Jay, good afternoon. It's turning out to be a really tough last couple of days. So, any individual level stock advice right now, or would you wait it out for the next couple of days to see where the market settles? Any stock trades?
Yeah, I have two bearish views on two stocks. One is Lupin. Lupin from 2400 hasn't, exactly declined in a corrective fashion. It's looking like a start of a reversal in trend, and it's bounced from 2000 odd levels to about 2225 in a corrective bounce. So, and today's decline is pointing to much deeper cuts for the stock. So, as long as the stock trades below 2225 or 2230, I'll be bearish on the stock. And the other one is AU Small Finance Bank, and it's been a rank underperformer. And the recent bounce from the January lows is sporting a corrective look. So as long as the stock trades below 620, I'll be negative on the stock and expecting more cuts to come through for the stock.
Okay. So got that. Those are individual names. Jai, hi, good afternoon. Just to get the Nifty view, are you expecting immediately lower levels, or are you expecting a bounce?
Yeah, I'm expecting minor bounce to come through, not anything tangible or pronounced one. So a bounce towards 23,300, 23,400 is likely to be met with further selling. I think the recent low that we saw in January, 22,700, I think it's a matter of time before it breaks. And we have been projecting every week from beginning of October, end of September, that the June 4th objective of 21,800, the closing basis, and the intraday low of 21,280. So that's the higher time frame objectives. The supports lie at about 22,700, which is the immediate lows. And once that's taken out, the support comes at about 22,100, and then anticipating a direct acceleration to the June 4th low.
Sorry, I'm jumping from sectors to asset classes, etc. But gold, of course, has been on a tear, and you have an interesting view here.
Yeah, that's right. See, gold, I put out a note when it cost 27.26 on London's spot gold, that it's heading for record highs, and had anticipated that to go to record highs, but silver not to get followed. And the markets have done exactly that. But the objective of gold was about 2850 to 2880, but it's exceeded that and come to about 2900 and change. So what gold does in the next few days is going to be pretty important. If it were to cave in, like I'm anticipating the next 2 days, then that's very dollar bullish, and likely to see a lot of strength in the dollar, and has implications for equity markets. But if it doesn't respond to in a negative fashion, it's going to probably go to 3,000 plus, which I'm anticipating to come through at a later date. So it might come through much sooner if it doesn't respond today or tomorrow. So that's an important implication for risk assets, because that has a direct implication on the dollar.
Okay. The only lone ranger on the Nifty that's finding a tiny hint of green today is Trent. Imagine it's the only stock, and that's after a dropping of almost 40% from the peak. Apart from that, all other 49 stocks on the Nifty are negative. It's that kind of an overwhelming afternoon. That's Trent. It's managed to pull back finally. Jay, I don't know if you've been tracking it, but I mean, the fall has been hard to miss or ignore on Trent, right? Any levels to keep in mind here? Is there any reason to at all look at any of these high-flying erstwhile winners?
See, the problem is trend is good in the long term, but it's probably got short-term corrections to work with. The bounces, likely to hold on for the short term only, and not something meaningful or pronounced. So I anticipate some bounce to somewhere close to 5,800. But if you look at the overall market structure, the mid caps are below the January lows, and the FMCG index is below the recent swing lows. So it's all indicative of broader market weakness. So trend as such, I don't think it's got potential to outperform or deliver significant short-term gains.
Okay. All right, Jay, thanks very much for the advice. Stay on. We'll come back to you and ask some more questions in the next show as well. But for the time being, let's quickly recap what has been another brutal day for the bulls. India once again underperforming regional markets, and the mid-cap carnage has been painful and deep. The mid-cap index over the last two sessions, just Monday and Tuesday, has lost 5%. The small-cap index has lost about 5.5%. So it's been massive unwinding. I'll just quickly name out some of the mid-caps which have taken it on the chin today. And it's a long list of stocks actually out there. Godfrey Phillips, 9% down. KFin, 10.5% down. Uno Minda, Elecon Engineering, Zaggle losing 10%. Just lots and lots of names. Prince Pipes is down 8.5%, 9%. Many names on the downside. If you're looking at the volumes charts, then even here, Railtel, Lemon Tree, PFC, Ircon, NBCC, Zomato, Sale. It's just you take a dart and throw it anywhere. Chances are it's going to land on the red side of the screen. But for what it's worth, Prashant, I mean, the bulls try to defend 23,000. I guess sentimentally, that's the only positive at least I can find today.
Yesterday, same time, we were 23,300 was the 20-day moving average, right?
Yeah.
And that went and... sorry, 23,000 was around 23,000 was the 20-day, and that's been defended. But the point is, we are off sharply, 300 points once again, and this week is already turning out to be a pretty bad one. The Nifty has lost about 2.5%, and I was just looking at the cuts in the small and mid cap indices. Small cap index is down 18% from its all-time high, with today's 3.5% cut. The mid cap index is down some 16%. From its all-time high as well. So, we'll have to assess the damage in terms of individual stocks, what's fallen how much, and, what percentage of, say, for example, a group like NSE 500 is down more than 20%, 25%. We'll do all that and sort of, get you an overall picture a little later. But once again, a very poor day, and markets under a fair bit of selling pressure. It's a wrap on this edition of Closing Bell, but stay tuned. There's more coming up on markets forward. Surabhi and Nigel will take you through that in just a bit from now.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards?
The market falls for the fifth consecutive session as Trump's tariff threats and selling by foreign investors weigh on sentiment. The Nifty ends with a 300-point cut, while the Sensex tanks over 1,000 points. Realty stocks see deep cuts. Healthcare and public banks drag as well.
Mid-caps fall under pressure amidst the sell-off. The mid-cap index slips 1,600 points. The mid-caps are down 20% from the 2024 record highs and 6% in just 2 trading sessions.
Forex dealers left puzzled as the rupee makes a surprising recovery even as US tariffs on steel and aluminums kick in. RBI likely to have sold dollars in massive amounts. Sources say the move is an attempt to scare speculators.
Hello and welcome to a fresh edition of Market Sell-Off. I'm Nigel and with me is Surbhi. Surbhi, what a trading session it was. You seem to have indicated in the morning with this red color and it was red all the way. But I'll just say one point. I don't think we should lose heart. In the last 44 years or so, every year you've seen the index, the Nifty pull back closer on 10%, barring 4 years.
Yeah.
So that gives you some heart that sometimes corrections like these just tell you keep it going, keep your SIPs going, and ultimately, a longer span of time, things will turn around. The problem today was the broader markets, not the headline index, but there was pain in the broader markets.
Oh, absolutely. And we'll talk about this as we go over the next 20 minutes. We've got lots of perspective lined up on the show, both on technicals, on fundamentals, on the currency market, and what's happening with, of course, mid-caps as well. Just a quick word. What did we see in the market today? It was a slam dunk completely, and the pressure just kept mounting. The market opened with small cuts, and then the cuts just kept on getting deeper. The Nifty's, loss was about 300 points, 1.5%. But the crunching fall was really in mid-caps and small caps. But by the way, even on the Nifty, the Indian market again has underperformed global equity, second day running. So while the tariff headlines are big concern for markets around the world, India is falling more. Now, let me talk about this, fall that we had in mid-caps and small caps. In 2 days put together so far this week, the mid-cap index is down 5%, the small-cap index is down 5.5%, and stocks are falling across the board like 9 pins. So what's really going on? Well, I've been trying to sort of get some perspective from mutual funds, which are large players in the market. And the sense is that right now they're not seeing any kind of panic redemptions come through. In fact, flows in most fund houses, most AMCs, they've been positive so far in the month of February, and mutual funds are still net buyers in this market so far in February. So they're providing the support, but yes, there is FPI selling. The larger selling seems to be happening in the rest of the market, which could be HNIs, which could be family offices, which could be, of course, direct retail participation in stocks as well. That's where the unwinding is happening. And I got two reasons. Why are people selling mid-caps and small caps so much? Two reasons, logical reasons that made sense was, one is the need to protect profits. Given the crunch and fall in the market, you want to protect wherever you still have money left on the table. And that seems to be a part of the psyche that's playing out. And the second is tax loss harvesting. Remember, you can offset your losses against, gains, capital gains that you may have. And some of that technical factor could have been playing out as well. You want to book the losses to offset against future gains. So anyway, all things put together, it was a very, very weak session today once again for us, Nigel.
Well, that's right. And in fact, the rupee, that was the one that was in focus. It saw its strongest intraday in over 2 years. Dealers, they attributed the rise of the rupee to the RBI likely to have sold dollars in massive amounts. Lata joins us to decode the rally that we saw in the rupee in today's trading session. Lata?
Well, the rupee's rally is absolutely come out of the blue, and it is an extremely sharp rally. The rupee at its sharpest dealt at 86.63, and the overnight close was 87.46. So, it's almost a 1 rupee jump or a 1 percentage point rally in the rupee, and it is surprising because the dollar index has actually strengthened. Last week, Friday night, it was at 107.70 thereabouts. Monday, it went to 108.10. Tuesday, now it's at about 108.4. So dollar is strengthening. Almost all Asian currencies are weakening. Almost all. There's a minor green on the ringgit, but that's minor. Whereas the Indian rupee is extremely strong. And the only reason why it has been strong, the only person who's offering dollars like no tomorrow is the Reserve Bank of India. There are some huge numbers floating around, but all this is market chatter. People tell us that yesterday as well that the RBI must have sold well over $3 billion. Today, in the first half itself, they must have sold an equivalent amount. So the market is only trying to guess why is the RBI standing so much against the current of the foreign exchange flow. And it's not only peculiar to India. All EM currencies are falling. One guess is it wants the other side to come in and sell, the exporters. Typically, Jan, Feb, March is an export-heavy month. We do very well in exports. We sometimes have a current account surplus. So he's probably tempting the exporters to come and sell. Alternatively, they are scaring the speculators. One day the rupee went from 86.50 thereabouts to 87.40. The next day it opened at 87.95, almost 88. I mean, this kind of speculative moves have to be stopped and the speculators have to be hurt. And that may be the position that the Reserve Bank is taking. But at the moment, all these are guesses.
Okay, Lata, got it. So maybe a bit of a reminder that, hey, we're also in the market and we can act when we wish to or choose to. Let's also hear out what the Chief Economic Advisor, Anantha Nageswaran, had to say on the Indian currency's weakness.
In the long run, which is 5 years or beyond, it is ultimately boils down to inflation differential. So in that sense, as long as our inflation rate is 1% or 2% above the average inflation rates of developed countries or the US, to that extent the currency will depreciate. But the point is, this currency depreciation hasn't prevented India from delivering returns to investors. If we are going to settle down at an inflation rate of around 3 to 4% rather than 5 to 6% as before, and if developed countries also end up finding that they can't bring it below 3% down, then naturally the gap between the two really shrinks a lot. And therefore, India may be able to experience a much lower rupee depreciation rate than what we have seen historically. And I don't think we should be too concerned about what is happening currently. This is an extraordinary period of dollar strength, which has lasted quite long.
Okay, all right. Well, let's get to the markets then, and let's welcome our guest. We have Jay Bal of CashTheKiosk.com, who will help us out with the technicals, and Sudeep Bandyopadhyay of Indie Trade Capital, who will help us with the fundamentals. Hi, gentlemen. Thanks a lot for joining in. Jay, you go first. We saw that counter trend bounce from 22,800 all the way to 23,800. Now we're closer to around 2,300. I think the call you were making earlier was for sub 22,000 levels. Is that on?
That's right, Nigel. See, the markets could see a very short-term bounce to about 23,300, 23,400. and then head on to break the recent low registered about 22,700 and change. The higher time frame objective has been the same since end of September, early October. That is the closing levels of June 4th and the intraday low, which is around 21,800 to 21,200. So the short-term resistance for the Nifty is 23,300 to 23,400. And the supports come in at about 22,700. If that were to given, the next support comes at about 22,100. And after that, it's directly to the June 4th low.
Okay, all right, got that. We'll come back to you, Jeff, for some more questions. But let's just go back and look at the broader market weakness that we've seen. Like I said, about a 5.5% correction at the index level in just 2 days, and a far deeper correction when you're coming down to individual stocks. We've got Sudarshan joining in. He's been looking at a lot of trends, including the FBI selling that has gripped this market. Sudarshan, tell us more.
So in the last few days, market has taken a big knock, especially in the broader markets, with both mid-cap and small-cap indices are now down 20% each from record highs that both these indices had hit in late 2024, and down 6% each just in last 2 days. And one of the reasons, if you can attribute, is big FIs selling. Just in 2025, FIs have sold shares worth nearly rupees 1 lakh crore in the cash market and nearly rupees 3 lakh crore if you see from the month of October 2024. And the impact can be seen in broader markets. Nearly 30% of total mid and small cap stocks are at or near to 52-week lows, with 70% of them are down 30% or more from their recent peaks. For Sensex and Nifty, the fall is 11 to 12% from the record high, both these indices that have hit in September 2024. But look at broader markets. Mid-cap and small-cap indices are almost in correction territory. Mid-cap index is down 17%, small-cap index has fallen 19% from record highs, Nifty Next 50, or earlier it used to be known as Nifty Junior, has fallen 22%, and Nifty Small-Cap 250 is down 90%. The fall looks more severe if you look at sectoral indices. Media index is down 32%, energy 30%, PSU 28%, realty 26%, and PSU bank 26%, and metal index is down 20% from their record high. So which of the stocks are top loser? Well, not even a single stock is at a 52-week high. And amongst top losers, PSUs are at top of the table. Top losers are MRPL, Cochin Shipyard, Vodafone Idea, Hind Zinc, Oil India, and HUDCO, down somewhere in the range of 46 to 60%. And among small caps, top losers are Sterling and Wilson, Chennai Petro, Raymond, Jupiter Wagon, Titagarh Rail, and ITI, down somewhere in the range of 60 to 65%. And if there was any expectation from earnings, that too seems to have vanished, with number of companies missing estimates has been much more than the ones beating expectation. We'll have to see how the remaining calendar earnings pans out, and if any time soon FIs start buying. That's a big if, but that's what we can hope for now.
Okay, nothing wrong in hoping, but hope is not a data point. Thanks a lot for that, Sudarshan. Well, Sudeep, give us a couple of, good buy calls, because I'll tell you what, I was looking at the pattern, 2011, 2016, we did see the index pull back a little bit, to around these levels. So maybe if you follow that sort of a pattern, then maybe at most the index will pull back another 4 to 5% from here on. There just maybe, I know the rally has been very, very ferocious, but to give us a couple of ideas, what would they be?
Well, Nigel, I think, from a long-term investor's point of view, this can be a good opportunity for accumulating good quality stocks for 1 year plus kind of time horizon. And, I've been telling them to focus on the large cap universe because the valuation does look reasonable in some pockets. Look at BFSI. I think, this bucket definitely should be on an investor's radar. And, if you want to really play safe, go for SBI. It's a great bank. A lot of good things are happening. Interest rates are started coming down. So the way forward for SBI looks good. So buy SBI if you have to buy in the BFSI space. If you're looking at a slightly larger basket of BFSI stocks, which includes insurance, go for LIC. I think fundamentally, structurally, way forward for LIC looks very good. So buy LIC, forget the Q3 numbers, forget the Q2 numbers and this all the other parameters at this stage. Fundamentally, structurally, the way the business is poised, the way regulations are shaping up, I think LIC looks very good. Cement is another pocket where, Nigel, I'm very bullish. And, again, play safe, go for Ultratech. 170 million capacity already in the bag, gunning for 200 million, looking at acquisition. Costs very, very, carefully being looked at and being controlled. So in spite of the, pressure on volume, the performance has been good. Margins have improved. So Ultratech on the cement pack definitely looks good. And finally, I think my favorite, Reliance, I'm looking at a 1500 kind of a price, lot of triggers, value unlocking opportunities, and this correction definitely offers an opportunity. So these 4 stocks definitely should be looked at by investors building portfolio.
Can you name them once again? There's Reliance, Ultratech,
Reliance, Ultratech, State Bank of India, and
SBI. And LIC, got it. Okay, so 4 pillars to build your portfolio on without getting too scared in this market fall. Got that, Sudeep. Let me try and ask you the same question. Jay, of course, you've been very cautious on technicals. And again, this question doesn't apply to someone who's looking at a quick trade over the next 2-3 weeks. But is there anything in the market where the chart structure is still okay, not broken, which is showing relative strength in such a downbeat market, where perhaps from a portfolio perspective, one can look at buys?
See, one sector that's still not broken down is IT, and as long as IT index trades about 39,900, it's still positive. But my understanding of the technicals of the US markets, the tech sector in particular, that's very close to a significant top. So IT is the one sector where you can try to find hiding spots, but I'm not too confident because the leader, TCS, is very close to breaking down the January low, but the rest of the stocks are okay. And we discussed SRF last week. I tried to go deeper into the specialty chemical sector and see if the rest of the sector is doing something interesting, but no. It seems to be very specific to SRF, and SRF has broken out from a 5-year consolidation. So I would see what the stock does about 2,500 to 2,400. That will be an interesting entry point if this breakout is right to sustain, and probably the rest of the sector were to join. So these are the 2 I'm looking at from a portfolio perspective, but not too aggressively, very, very conservatively.
Got it, Jay. Just very quickly, Sudeep, you've given us 4 large cap picks. Is there any mid cap stock you want to add? Make it a 5 ka punch.
Yeah, I think, if I have to add one mid-cap stocks, I think Samvardhana Motherson is one stock. A lot of chatter around the tariff and how they will be hit and things like that. But I think with this correction which has happened, I think it's definitely worth buying. Anyway, auto ancillary is one space where I'm definitely positive, and I believe this company has a good future.
Okay. All right, gentlemen, thank you very much for joining in and giving us the perspective and advice in what has been a really difficult market. Thank you very much for being with us today. With that, we have to slip into a very quick break. As we do so, hear out some more commentary and market opinion. We also caught up with Rohit Srivastava of India Charts and also Adrian Moat to get a foreign perspective on the big sell-off that's underway in the Indian market. Back in just a bit.
I would expect that markets try to bounce back, loosen up the negative sentiment much more before you get another meaningful sell-off. However, the hard part would be to say the same thing about mid caps relative to large caps. I think that is where the next debate shifts then. But these are the Nifty levels with which we'll be working, and still looking for that it does not significantly sell off yet. You might attempt another recovery into March. There may be further weakness in mid and small caps. After each bounce, they may still keep selling harder as we are seeing today. But somewhere the large caps may find support because money in the end has to go somewhere. A lot of money is flowing into funds. They will only reallocate. They will decide, okay, let's not buy too much of mid cap. Let's buy this. They're hybrid funds that will shift back and forth. And so at some level, you end up getting buying coming back to the large caps.
So there doesn't really seem to be any sort of technical level for the market at this point in time. And if you go back to your earlier point, which is the valuation of the market, this remains a very expensive market, which is justifiable if it is generating high growth. So this is going on against a backdrop of India being a big outperformer, emerging market funds having a good exposure to India. at a time where we've got rising US interest rates, which put pressure on current account deficit countries, including India. And we've also, surprising, considering you'd think it would be the center of the trade dispute with the United States, Chinese equities doing quite well at the moment.
One show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news.
Welcome back to Market Sell-Off. Well, venture capitalists and PE fund managers, they have remained bullish on India. Manish Kejriwal of Kedara Capital anticipates the second half of 2025 to be a buyer's market, while Mukesh Mehta, the senior managing director at Blackstone, says that India has been their second best performing market over the past 5 years. They said this at the sidelines of the IVCA Conclave 2025. Let's listen to them.
Sharon, I think if you look at what was clear is the time gone by. So when I look at 24, it was definitely a seller's market. We had IPO markets which were crazy. We all got exits. I think each one of us, we had more than 4 IPOs. We still have another 3 in the... It's gotten tighter now. So when it's a seller's market, buying was very difficult last year. The public markets eventually are an indicator where the private markets are going to go. And it hasn't been the most healthy start to a year. I think prices rightly will correct. The multiples will compress. And the second half of 25 will be a buyer's market much more than a seller's market.
India is now the best performing geography for Blackstone globally for the last 5 years in a row. It's the 3rd largest geography for Blackstone globally after US and UK. That determines the importance of India. And as we speak, March 20th is when we complete 20 years. Our founder Steve will be in India to have that celebration. So we are very, very bullish on India. And you know, in this business, success breeds success. So more you deliver returns, more investors give you money to deliver more.
All right, well, there you heard it. Lots of perspective on the Indian market. Brutal fall today. Let's see, tomorrow, middle of the week, maybe we, get some good vibes coming through overnight.
Well, that's right. That's the hope, and hope is not a data point, but nothing long.
But we live on it.
Hoping. Well, on that note, we'll wrap up on the show. You stay with us. More news and updates coming up on the other side.
Business Hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour, live on YouTube at CNBC-TV18, weeknights at 7 p.m.
I'm committed to buying and owning Gaza. As far as us rebuilding it, we may give it to other states in the Middle East to build sections of it. Other people may do it through our auspices, but we're committed to owning it, taking it, and making sure that Hamas doesn't move back. There's nothing to move back into. The place is a demolition site. It'll be, the remainder will be demolished. Everything's demolished. I mean, you can't live in those buildings right now. They're very unsafe. But we'll make it into a very good site for future development by somebody.
Mr. Speaker, sir, with your permission, may I ask a slightly different question pertaining to gold? In the year 1971, Richard Nixon, who was then President of the United States of America, gave up the gold standard. After that, gold was hardly considered to be a serious financial asset. In 2006, gold constituted only 6% of the reserves of the central banks of the world. In the year 2024, it is up to 11%. China, India, Poland, Turkey are the most aggressive buyers. Even in India, there has been a surge in the domestic price of gold. My question to the Honorable Minister is that this shift away from the dollar to gold, does it indicate a renewed search for an alternative international settlement mechanism, de-horse the dollar? That's my question.
Hello and welcome to Business 360. I'm Arundhati Ramanan and these are the top headlines that we're tracking for you. Sensex and Nifty slide for the fifth straight session. Mid-caps and small caps get battered. 10 lakh crore rupees in investor wealth wiped out today. Forex dealers left puzzled as rupee makes a surprising recovery even as US tariffs on steel and aluminium kick in. RBI likely to have sold dollars in massive amounts. Sources say the move is an attempt to scare speculators. Top private equity investors are bullish on India even amidst the market correction but remain wary of valuations and some IPOs are being put on the back burner.
No one holds the key to our collective future and shared destiny other than us humans.
Prime Minister Modi pitches India's AI story in Paris, says AI is writing the code for humanity, backs for developing open source systems that enhance trust and transparency. Elon Musk and a group of investors make an unsolicited bid of over $97 billion to take control of ChatGPT maker OpenAI. Sam Altman quickly rejects the offer and mocks Elon Musk by offering less than $10 billion to buy Twitter.
If all of the hostages aren't returned by
Saturday at 12 o'clock. I think it's an appropriate time. I would say cancel it and all bets are off and let hell break out.
U.S. President Donald Trump issues an ultimatum to Hamas after it suspends the release of Israeli hostage, alleging ceasefire violations. Trump warns all hell would break loose if hostages are not released by Saturday. Adani shares rise in a downbeat market. U.S. President Trump puts on hold the law which bars U.S. companies from bribing foreign officials. Bangladesh also asks Adani to restore full power supply after 3 months of reduced sales. Prime Minister Modi virtually inaugurates the India Energy Week and reaffirms commitment to sustainability, confident of achieving 500 gigawatts in renewable energy by 2030. Karnataka hosts a global business summit to woo investors, expects investment proposals worth at least 10 lakh crore rupees. We will come to that and more in just a bit, but first to what was a turbulent Tuesday for the Indian equity markets. Sensex and Nifty slid for the fifth straight session. 45 out of 50 Nifty stocks closed in the red. 10 lakh crore rupees in investor wealth wiped out today. The mid-caps and small-caps suffered the most. Over 95% of India's top 100 mid-cap and small-cap stocks closed with cuts. Sudarshan Kumar joins us now. Sudarshan, decode that sell-off for us on Dalal Street.
So in the last few days, market has taken a big knock, both especially in the broader markets, with both mid-cap and small-cap indices are now down 20% each from record highs that both these indices had hit in late 2024 and down 6% each just in last 2 days. And one of the reasons, if you can attribute, is big FIs selling. Just in 2025, FIs have sold shares worth nearly rupees 1 lakh crore in the cash market and nearly rupees 3 lakh crore if you see from the month of October 2024. And the impact can be seen in broader markets. Nearly 30% of total mid and small cap stocks are at or near to 52-week lows, with 70% of them are down 30% or more from their recent peaks. For Sensex and Nifty, the fall is 11 to 12% from the record high, both these indices that have hit in September 2024. But look at broader markets. Mid-cap and small-cap indices are almost in correction territory. Mid-cap index is down 17%. Small-cap index has fallen 19% from record highs. Nifty Next 50, or earlier it used to be known as Nifty Junior, has fallen 22%, and Nifty Small-cap 250 is down 90%. The fall looks more severe if you look at sectoral indices. Media index is down 32%, energy 30%, PSU 28%, realty 26%, and PSU bank 26%, and metal index is down 20% from their record high. So which of the stocks are top loser? Well, not even a single stock is at a 52-week high. And amongst top losers, PSUs are at top of the table. Top losers are MRPL, Cochin Shipyard, Vodafone Idea, Hind Zinc, Oil India, and HUDCO, down somewhere in the range of 46 to 60%. And among small caps, top losers are Sterling and Wilson, Chennai Petro, Raymond, Jupiter Wagon, Titagarh Rail, and ITI, down somewhere in the range of 60 to 65%. And if there was any expectation from earnings, that too seems to have vanished, with number of companies missing estimates has been much more than the ones beating expectation. We'll have to see how the remaining calendar earnings pans out, and if any time soon FIs start buying. That's a big if, but that's what we can hope for now.
Right, Sudarshan, many thanks for those details. So stocks getting battered there on Dalal Street. But from market action to Mint Street, the rupee saw its strongest intraday rally in over 2 years. Dealers attributed the rise of the rupee to the RBI likely to have sold dollars in massive amounts. Lata Venkatesh decodes that rupee rally for us. Lata?
Well, the rupee's rally is absolutely come out of the blue, and it is an extremely sharp rally. The rupee at its sharpest dealt at 86.63, and the overnight close was 87.46. So, it's almost a 1 rupee jump or a 1 percentage point rally in the rupee. And it is surprising because the dollar index has actually strengthened. Last week, Friday night, it was at 107.70 thereabouts. Monday, it went to 108.10. Tuesday, now it's at about 108.4. So dollar is strengthening. Almost all Asian currencies are weakening. Almost all. There's a minor green on the ringgit, but that's minor. Whereas the Indian rupee is extremely strong. And the only reason why it has been strong, the only person who's offering dollars like no tomorrow is the Reserve Bank of India. There are some huge numbers floating around, but all this is market chatter. People tell us that yesterday as well that the RBI must have sold well over $3 billion. Today, in the first half itself, they must have sold an equivalent amount. So the market is only trying to guess why is the RBI standing so much against the current of the foreign exchange flow. And it's not only peculiar to India. You know, all EM currencies are falling. One guess is it wants the other side to come in and sell, the exporters. Typically, Jan, Feb, March is an export-heavy month. We do very well in exports. We sometimes have a current account surplus. So he's probably tempting the exporters to come and sell. Alternatively, they are scaring the speculators. You know, one day the rupee went from 86.50 thereabouts to 87.40. The next day it opened at 87.95, almost 88. I mean, this kind of speculative moves have to be stopped and the speculators have to be hurt. And that may be the position that the Reserve Bank is taking. But at the moment, all these are guesses.
Right, Lata. Many thanks for all those details. Now, staying with the rupee, the Chief Economic Advisor, V. Anantha Nageswaran, expects that the currency depreciation may slow down going ahead. Speaking at a summit, he added that the current weakness in the currency is on the back of a prolonged dollar strength and not due to structural issues. Take a look.
In the long run, which is 5 years or beyond, it is ultimately boils down to inflation differential. So in that sense, as long as our inflation rate is 1% or 2% above the average inflation rates of developed countries or the US, to that extent the currency will depreciate. But the point is, this currency depreciation hasn't prevented India from delivering returns to investors. If we are going to settle down at an inflation rate of around 3 to 4% rather than 5 to 6% as before, and if developed countries also end up finding that they can't bring it below 3% down, then naturally the gap between the two really shrinks a lot. And therefore, India may be able to experience a much lower rupee depreciation rate than what we have seen historically. And I don't think we should be too concerned about what is happening currently. This is an extraordinary period of dollar strength, which has lasted quite long.
Meanwhile, crude oil prices rose today amid signs of tighter Russian supply and increasing supply risks. This after reports said that Russia's January crude oil output fell below the target under the OPEC Plus supply agreement. Meanwhile, gold prices hit record highs yet again, this after US President Donald Trump's tariffs on steel and aluminium imports fueled safe haven demand. Billionaire Elon Musk and a group of investors made an unsolicited bid of nearly $100 billion to acquire ChatGPT maker OpenAI. Company CEO Sam Altman responded, saying that he will not accept the deal and mocked Musk by offering less than $10 billion to buy Twitter. Elon Musk's surprise bid to buy OpenAI is the latest episode in his ongoing feud with Sam Altman.
Elon Musk!
A consortium led by Elon Musk said on Monday it has offered $97.4 billion to buy the nonprofit that controls OpenAI. It's another attempt by the billionaire to block the artificial intelligence startup from transitioning to a for-profit firm. Musk's bid is likely to ramp up a long-standing feud with OpenAI CEO Sam Altman over the future of the ChatGPT maker. Altman on Monday posted on X, quote, "No thank you, but we will buy Twitter for $9.74 billion if you want." Musk co-founded OpenAI with Altman in 2015 as a nonprofit, but left before the company took off. He went on to found the competing AI startup xAI in 2023. OpenAI is now trying to transition from a nonprofit into a for-profit entity. It says that restructure is required to raise the funds needed to develop the best AI models. Musk's new offer is only his most recent attempt to throw a wrench in those plans. In August last year, Musk sued Altman and others, claiming they broke contract by putting profit ahead of the public good in the push to advance AI. Then, in November, he tried in court to block OpenAI from converting to a for-profit structure. The consortium led by Musk that is now trying to buy OpenAI's parent nonprofit includes xAI and several investment firms. Were a deal to go through, xAI could merge with OpenAI, according to the Wall Street Journal, which first reported Musk's offer earlier on Monday. Aside from any antitrust implications, a deal of this size would need Musk and his consortium to raise enormous amounts of funding. According to an uninvolved investment banker, in order to finance such a bid, Musk could sell part of his stake in Tesla or take a loan against his stake. He could also put up as collateral his stake in rocket company SpaceX, which is worth tens of billions of dollars.
On that note, it is time for us to head into a short break. But coming up next, Prime Minister Modi pitches India's AI story in Paris, says AI is writing the code for humanity. More on that when we come back. Stay tuned.
So the honourable member has he himself mentioned that it is not the core part of the question, but he's still asking, and I would certainly like to give my brief answer on it. India's, as he observed rightly, the demand for gold in India has not come down. On the contrary, it's going up. And I would think it is very typical of India, particularly for households or small businesses, and it is normally said women, but general households also and women also, to invest in gold because they think it's far more secure and far more liquid, and therefore as an asset class, we see that sustained interest in it by the households and small businesses as much as women of India. But beyond that, of course, the Reserve Bank also is buying gold to make sure that it has adequate reserves of gold and not just a basket of currencies. And in that, one of the currency which predominantly has been held by the Reserve Bank has been the US dollar. But we also have the reserve currencies in denominations of different denominations of other currencies as well. But the gold is also kept in the Reserve Bank, and gold is also being bought by Reserve Bank. But beyond that, as regards an international currency or potential currency, there's not much for me to comment at this stage.
Right now. So we thought this would be appropriate. Even bigger than the Super Bowl. This is a big thing. And almost everybody now has assented to that.
Attention on board. Ladies and gentlemen, if you could please direct your attention out the right side of the aircraft. Air Force One is currently in international waters, the first time in history flying over the recently renamed Gulf of America. Please enjoy the flight, and we are now about to head westbound to Super Bowl 59.
Welcome back. You're still with us on Business 360. Prime Minister Narendra Modi pitched the progress of India's artificial intelligence ecosystem in Paris, where he co-chaired the AI Action Summit alongside French President Macron. Modi is in France for the first leg of his two-nation visit. Addressing the summit, Prime Minister Modi said that nations must pull together their resources and talent and develop open-source artificial intelligence systems that enhance trust and transparency. He said that India was willing to share its experience and expertise to ensure that the future of AI belonged to everyone. US Vice President J.D. Vance also spoke at the summit. He said that excess regulation of the sector can kill the industry.
Governance is not just about managing risks and rivalries. It is also about promoting innovation and deploying it for the global good. So, we must think deeply and discuss openly about innovation and governance, about machines becoming superior in intelligence to humans, but no one holds the key to our collective future and shared destiny other than us humans.
We believe that excessive regulation of the AI sector could kill a transformative industry just as it's taking off, and we'll make every effort to encourage pro-growth AI policies. And I like to see that deregulatory flavor making its way into a lot of the conversations this conference.
US President Donald Trump has given Hamas an ultimatum after the militant group suspended the release of Israeli hostages. Trump has said that he would propose cancelling the ceasefire if all Israeli hostages are not released by Saturday noon. However, he did not clarify his administration was considering a military action.
Saturday at 12 o'clock, and after that, I would say all hell is going to break out. And I don't think they're going to do it. I think a lot of them are dead. I think a lot of the hostages are dead. I think it's a great human tragedy.
And speaking of President Trump, days ahead of US Vice President J.D. Vance's scheduled meeting with Zelensky, the US president has said that Ukraine may be Russian someday. Trump, during his interview with Fox News, pushed for ending the 3-year Russia-Ukraine war. He also said that he plans to reap the return on investment via US aid to Ukraine. He said he expects $500 billion worth of rare earth minerals from Ukraine in exchange for support and security guarantees, which the Zelensky government has agreed to. US President Donald Trump's top economic advisor, Kevin Hassett, has criticized India's tariffs. In an interview with CNBC, Hassett called India's tariff structure enormously high. He also added that these tariffs are a major issue that Prime Minister Narendra Modi will have to address during his upcoming visit to the US.
Talking specifically about tariffs, just recall that almost every trading partner has much higher tariffs than we do. In fact, the only trading partner that's about where we are, and there's Canada and Mexico who are part of the trade deal, but outside of that, the UK has about the same tariff we do. The EU it's 2 to 3% higher. Taiwan it's 10 or 11%, and India, and we're meeting Modi soon, has got a lot to talk about with the president because they have tariffs that I think the trade-weighted average is a little bit short of 20. Now I'm running it out of my head, so don't give me a Pinocchio. But they have high rates that are enormously high. They're lockout rates. And so President Trump believes that at the very least everybody should agree that if they're charging us 20, then we should charge them 20. And then if they go down, we'll go down. But that's the idea of reciprocity in the tariff space.
Shares of Adani Group companies gained today in a downbeat market. This after US President Donald Trump signed an executive order to pause the enforcement of the law used to launch a bribery investigation against the Adani Group. The order directs the Department of Justice to put the Foreign Corrupt Practices Act on hold. Remember, the act prohibits American companies and foreign firms from bribing officials of foreign governments to obtain or retain business. Shares of Adani Power also rallied in early trade. This development comes after reports suggested that the Bangladeshi government asked the company to resume supplies from its plant in India. The company had halved its supply to Bangladesh due to delay in payments in October last year. Remember, Adani Power signed the 25-year contract under former Prime Minister Sheikh Hasina in 2017. The company has been supplying power from its $2 billion plant in Jharkhand. In a relief for lottery company Future Gaming, the Supreme Court ruled that lottery distributors are not obligated to pay service tax to the centre. The Apex Court ruled that the centre's attempt to impose service tax on lottery operations was unconstitutional. The court added that only a state government had the power to levy this tax. Remember, Future Gaming is India's largest donor through electoral bonds and has donated over 1,300 crore rupees to major political parties between 2019 to 2024. Karnataka is hosting a global business summit to woo investors. The state government is expecting investment proposals worth at least 10 lakh crore rupees. And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
I do believe we're making progress. We want to stop the Ukraine-Russia war, and I want to stop it just because I hate to see all these young people being killed. The soldiers are being killed by the hundreds of thousands.
We kickstart the India Energy Week 2025.
साल 2030 तक हम 500 गीगावाट रिन्यूएबल एनर्जी कैपेसिटी ऐड करना चाहते हैं।
There has never been a shortage of energy in the world. I mean, not now. There is more than enough energy available.
It's important to understand that energy poverty exists in the world.
Make this transition to clean energy as fast as we can.
Hello and welcome to Commodity Champions. I'm Manisha Gupta and this is a special edition that we bring you from India Energy Week, the third edition, this time happening in Delhi. And we do understand that there are 70,000 people thronging in during this time. There are 700 plus more exhibitors here. There are 20 countries, ministerial ministers who are taking part into this. And we also do understand that there are 10 countries which have put out their exhibition centers here. So it only gets bigger and better. The more important thing is that India Energy Week now is the second largest conglomeration of energy experts coming together in the world. It also is the beginning of the calendar year, so even more important on where the conversation goes from here. As we talk about India and energy collaboration, energy resilience, transition in sense of energy as well, the one word that continues to reign high, of course, is AI. That is something that has led in various sectors, and AI and energy is something that we have been talking in the same breath as well for some time now. Who best to talk about on that is Mr. Atul Arya. He joins us from S&P Global Commodities. He's Chief Energy Strategist. Atul, hi, thank you so much for joining in. Let's start with AI first. And we've been talking to Minister Puri for the last week and 1 month, building up to India Energy Week. And AI clearly has been a subject that has been a lot talked about. What's your sense on where India stands vis-a-vis the world?
So, well, first of all, Manisha, it's great to be back here in Delhi and talking with you. I think AI is kind of the overarching theme everywhere in the world. You know, if you were in Davos earlier this year, you're going to our event CERAWeek in March, it's going to be AI all the time. So where does AI stand globally? And then I come to India. See, globally, the way I look at AI is in two dimensions. AI for energy and energy for AI. Energy for AI is the big sucking sound, as they say, because it needs so much energy. And that's where they're building all these data centers, mostly in the US, mostly to train the models. Where the big opportunity will be, say, for India, will be actually in using those models for energy for AI. And you know, the AI for energy, I should say. And that's where we have lots of opportunities. And I will keep it very simple and say there is optimization and there is innovation. Optimizing the current energy system and innovating for the future. And both are moving very, very fast.
Talking slightly more about India then, Atul, and as you said, a lot of energy is required when you make AI and especially those data centers. Where do you see India stand in that? And while we speak about so many deadlines and time frames, where do you see this one stand?
Yeah, so I think India, if I were to advise to the minister and to the government, I would say, focus more on the application side, because the models will get trained around the world, and the models will become available to the companies and the businesses in India. And I'll give you a couple of examples of where India has big opportunities. So, we know that India is already importing a lot of oil. Huge percentages of oil comes, imported oil.
Yes.
Can we apply AI in India to improve the recovery factors from its fields, or improve the efficiency of its operations, or reduce emissions from its operations? All of those things companies are already doing, and there is even a lot more opportunity. And the reason AI is game changer is it can process huge amounts of data and come up with solutions which we as human beings just cannot fathom how quickly that can happen.
So you talked about US, and where else do you see major investments when it comes to AI within the energy sector coming in from?
So around the world, actually, I'll give you a couple of other examples. In Europe, the biggest opportunities in Europe have been focused more on the power side, because one of the other things people are realizing is that there's all this talk of building lots of transmission lines. I think even in India, as you connect more renewables, you need more transmission. But how about what we call repowering the transmission lines which we have today? And that can be done with sophisticated modeling using AI. So you same transmission line, more electricity will go through them. So that's what Europe is doing. Europe is also doing designing of renewable system where weather is a big factor. You need to know what's going to happen to weather, so how much wind or solar electricity I'm going to produce. And that's also what they're doing as a modeling. And I think India can do all of that. And for example, not just for the power side, but also say if you're a farmer in India, you can use AI knowledge to have better farming practices. So I think the possibilities are endless. I think one other advantage India has, because India has so many talented young people who know how to do software, who know how to do applications. That's where India has a bigger opportunity, not necessarily in building big data centers, that everybody can do.
Okay. Atul, the other thing that we talk about is energy transition, and that is really theme at India Energy Week this time around as well. With the new US president now coming in, fossil fuels are back up, energy transition also continues. Do you think a balance would be created going forward?
Yeah, I think what has happened is that what I would call is we are going through a more pragmatic approach. And the term we use, which we wrote about last year, was called multi-dimensional transition, and which is what is happening now. So the key is energy for economic growth, and you will hear this more and more. We have a new Secretary of Energy, Chris Wright, coming in the U.S., and his whole focus is on energy access, energy poverty. Interesting for a U.S. administrator to say that, but the idea is, let's bring energy and help the globe grow. And even the minister today talked about it, Minister Puri, about economic growth and use of energy. So I think we're going to see that focus and more pragmatic approach. It doesn't mean climate change or transition is going to go away, but there will be a realistic approach. By the way, the other thing to keep in mind is that transition has been quite difficult. If you just look at some of the targets, for example, we have in US or in Europe or even in India, green hydrogen. Green hydrogen is really having big challenges in terms of getting the cost down, having the customer. So I think it's going to be a more balanced approach. Fossil fuels will continue to go on, but so will be the renewables.
Oh, clearly, that's the kind of statement that we've heard from various Middle East countries as well, that the fossil fuels for next foreseeable future, which is a couple of decades, is not going anywhere. But in the meantime, and as we talk about energy transition, whether it's about nuclear, which is something that is being talked about so much right now, hydrogen, as you said, and gas, and then a lot of biofuels as well. So while there's investment everywhere, and everywhere people are looking at more cost efficiency here, where do you see a better innovation technology come in?
Yeah, so I think my way I think about this, there are technologies which are what I call bankable today. And in India, there are a number of technologies which are bankable. Solar PV, onshore wind, and also many parts of biofuels value chain are all bankable, meaning you don't need a lot of subsidy or you need some incentives to get it going. But other technologies, particularly hydrogen of all kinds, carbon capture and sequestration, those are really not bankable. They require large subsidies. So in India, there are some projects particularly on CCS and also on hydrogen. I think they're going to take a longer time. And if I'm a private investor, I want something where I can get a return. And these things are, even with incentives, the returns are not very high. So I think we will see a gradual shift. Electric vehicles and storage is where I think is the next big shift happening. More EVs, I see them just being in Delhi for a day, I can see that. And I think we're going to see a lot more of that. And also we're going to see a lot more of stationary storage to help solar and wind become, more continuous for a backup power.
Atul, also the PM in his video speech did talk about on inviting investment rather on battery and storage.
Yes.
How do you look at that?
I think there is, what I think the government will have to do here is think about the entire value chain. Just take the battery value chain. There are a lot of critical minerals which are not in India, right? So India will have to build. So we heard, the Prime Minister talk about the growth in the PV manufacturing, solar PV. I think the same thing can happen with batteries, but it's going to be a bit more challenging because the raw material for solar PV is very simple. For batteries, you need a lot more minerals than just silicon. So that's where I think we will see. But again, big opportunity for India. And investors will come because it's a huge market. That's what they're looking at.
Absolutely. Atul, this is the first conversation in 2025 in sense of such a huge platform on energy and various aspects of energy. Where do you see this year go ahead from here? Because we've started this year with tariffs and sanctions and oil prices very volatile, currencies as well moving in either directions. So what is it that you would want to watch out for?
I think it's going to be a very bumpy road in my view. We normally, when we talk about the markets. And just look at the oil market. I feel it's like a calm before the storm because there is already the talk about sanctions against Iran. That would be 1 million barrels out of the market like that. Then, of course, there is more production from the U.S., drill, baby, drill. But our view is that's going to be a lot more because the U.S. is fairly well producing as much as it can. And then, of course, the OPEC Plus, which wants to increase its production. And, of course, President Trump is talking about lowering the prices. So there are all these forces. Nobody knows where they're going to go. And as you say, if there is tariffs on energy, like China just put in tariffs on energy from the U.S., that's going to have another imbalancing, really turbulent impact on the market. So it's going to be a very bumpy road. And we will all be watching what happens.
Oh, absolutely. Atul Arya, thank you as always for joining and throwing insights on all of those aspects in energy there. Thank you so much.
Thank you, Manisha, for having me.
And I expect to have many more conversations. We have to get that war ended. It's going to end, and we have to get it ended. And we have to get it ended soon. Should have never happened, would have never happened if I was president.
And at the same time, Mukesh Ambani's two sisters, Neena Ben and Deepti Ben, are present in this tour. And at the same time, Akash Ambani, his wife Shloka, and their two children, Prithvi and Veda, are also there. His younger son, Anant Ambani, and his wife Radhika Merchant are also set to take the holy dip at the Triveni Sangam. And Mukesh Ambani's mother-in-law, Anita Ambani's mother, are also present at this grand event in Prayagraj, where the Ambani family will take the holy dip at the Triveni Sangam. Arun, we've seen in the past as well that the entire Ambani family never shies away from expressing their spirituality, be it Ganpati Puja, be it Diwali. They always put their astha on the front foot, and clearly we can see the same thing happening at the Mahakumbh.
Well, that's right. And as we've been discussing about their participation in the Mahakumbh, the collaboration which they have done with the UP government, and also, of course, the religiosity which, especially the Mukesh Ambani has shown even in the past, the various religious events that he organized at his residence in Delhi, and today in Mumbai and Delhi, of course. And today we are seeing that he's in Prayagraj with his entire family, and he's going to spend some time there in Prayagraj before, of course, he takes that holy dip. And also, of course, importantly, because you have a very few days left for the ending of this Mahakumbh. So I think it's a very, very significant period at which he is there, and he's ensuring that not only his wife, but the entire family, his kids, his grandkids, they all are present there, be part of this special event, which you will not see again for next 144 years. I think this is, of course, his religiosity, another side of the top businessmen, top industrialists of the country.
Absolutely. Anita Ambani's sister, Mamta Dalal, is also present for this visit to take the holy dip at the Triveni Sangam. Arun, when it comes to the Prayagraj festival, when it comes to the Mahakumbh grand event, this has made waves across the globe. India really showcasing its soft power on the global stage. And clearly, Mukesh Ambani and the entire Ambani family's cooperation in setting that up and their presence at the holy dip also sends a message to the globe when it comes to India's soft power.
We'll see. That's right. It's a huge event, and the administration was expecting a crowd of more than 40 crore. But we still have 10 days left to end Mahakumbh, and the numbers have already gone beyond 45 crore. So you need to have such infrastructure in place there in Prayagraj. I myself been there twice. I saw that how this massive religious congregation was managed. There were ghats which were, of course, prepared, and the new routes which were actually created to facilitate such a huge crowd at Prayagraj in Mahakumbh. And I think today, when the entire Ambani family is there, they will of course be seeing the preparations on the ground, that how things have been done or managed by the administration for the success of this Mahakumbh. And that is the reason why you see the entire Ambani family is there, going in boat, and of course will be taking a holy dip in a short while at the Triveni Sangam. So I think this is going to be a very, very special moment for their children and the grandchildren also, when they are witnessing or becoming part of such a huge event.
Absolutely, and this Sangam will come only in the next 144 years. So clearly the Ambani family being part of this holy day. Mukesh Ambani, along with his children as well as his grandchildren at the Triveni Sangam. He was set to take the holy dip at the Mahakumbh festival. Thank you, Arun, for joining us on the broadcast. As we leave you with these visuals, we're going to take a quick break now. More news and updates on the other side.
Welcome back, and we bring this special show from India Energy Week, third edition in Delhi, and joining us for a conversation now is Anish Dey. He's Global Head of Energy and Natural Resources at KPMG. Anish, hi. Difficult times, I must say, because we're looking at such huge volatility and so many things happening at the same time. 2025 did start on a tough note then. I want to start with tariffs, first of all, and retaliatory tariffs and inflation concerns and trade concerns as well. How is energy as a mix treating all of this?
So on energy, you are not going to see major tariffs and retaliatory tariffs as such.
Or direct impact for that matter. Or direct
impacts, because US is a net exporter of energy, which it wasn't like 15 years ago, but now it's a net exporter of energy. And I don't see countries putting tariffs on imports from the US. It's bad politics, bad optics, and honestly, it's going to raise your domestic inflation up. So I don't think, even if you take the case of India, we are, as Minister Puri mentioned today, we are importing substantial amount of energy from the US. I don't see a risk of tariffs directly coming in over there. But I do worry about tariffs more broadly because that has economic impact, uncertainty, the bond markets are on fire, you're seeing inflation concerns being heightened, and all of those are going to have impact on the industry and on certain countries, especially the developing world, given the hardening of the dollar.
What is your sense about the currency? Because that is what you mentioned, and we've seen dollar index very volatile. Look at the Indian rupee itself. I mean, being a major importer of crude and gas, the way the currencies have been moving, and not just these couple of pairs, but major global currencies. How do you see that moving on?
So, you know, Indian currency, if in a steady state, this was a good time for the Indian currency. In fact, there were predictions that even the rupee would harden. We're seeing the opposite because these are like times of uncertainty. So you're going to see it in currency, you're going to see it in gold prices. All of them are, you know, hardening. So that's unfortunate for India because it, given our import basket being so large, it just makes it worse. And it's a cyclical effect which comes in and makes it worse. Just hoping that it corrects and or at least stalls in reasonable time. But it's just a response to the uncertainty which prevails across the world. The more the volatility, the stronger the dollar gets, even if it's because of the US, the stronger the dollar gets and everybody else gets affected.
Well, from talking about technology and data centers and AI and of course renewables, let's talk about the crude oil prices itself, because they have been very volatile, and who better to get a conversation on with Vandana Hari of Vanda Insights. Vandana, hi, thank you so much for joining us. And we've seen crude oil prices move all the way around. We've seen sanctions on Russia, conversation about sanctions on Iran as well. How are you looking at prices getting impacted by that?
Great talking to you, Manisha. Thank you for having me. Indeed, I think the oil markets have been whiplashed quite a bit in the first few weeks of the year. So the first big shock was, of course, the Jan 10th US sanctions against Russia. That was a bit unexpected, especially in the extent, the aggressiveness of the sanctions and the extensive nature of the sanctions. Those have created quite a lot of problems for refiners in China and India. Those have reduced the discount for Russian crude, so which is not a happy thing for refiners, especially when refining margins have been considerably under pressure. Now, as far as the other turmoil that we have seen, most of it has been caused by the incoming US President Donald Trump. So we've seen that in the form of tariff threats against Canada and Mexico. And while that didn't go through, I think it's worth bearing in mind that it's only been suspended for 30 days. Right. Now, you might ask, like, sitting here in Asia, how does that impact us? So it does. I mean, it will ripple out if the US were to impose those tariffs against Canada and Mexico, because they are major crude suppliers to the US. Nearly 70% of US crude imports come from those two countries. If for whatever reason they are not able to compromise in the sense of who will bear the tariff burden, and especially Mexico, Canada not so much, but if Mexico looks to send its crude elsewhere instead of sending it to the US may need to pull crude from farther afield. Asian consumers might see more of Mexican crude coming into Asia. So basically, Lot of uncertainty, Manisha. It's very hard to say which way things will go. So really my message for policymakers as well as stakeholders in the oil markets will be to remain nimble, to be prepared, to be very, very flexible, and not let sort of anything hit them between the eyes anymore, because that seems to be par for the course for this year.
Well, with that, it's a wrap on day one of India Energy Week, third edition here in Delhi. But before we put curtains down, here's this very interesting, innovative stuff that my colleague Abhimanyu Sharma got around within the exhibition areas. Let's watch that.
Ran out of cooking fuel at home or heading out camping for a few days? This AI-enabled vending machine for LPG cylinders may just come to your rescue. Jointly developed by Bharat Petroleum and Chennai-based LIFO Technologies, there's already one such LPG ATM functioning in Bengaluru, which can store up to 20 cylinders of 5 kg each at a time. It accepts only authorized and non-damaged cylinders and also enables refill of empty cylinders. Currently operated by distributors, the initiative is awaiting PESO's nod to further scale up capacity of such vending machines to make them more viable and visible across the country. The use of compressed natural gas or CNG is being encouraged across the world as a relatively cleaner fuel. Imagine producing energy out of mere transport of this fuel across the country. This is a model of free-spin inline turbo expander by the American company Sapphire Technologies, which is soon going to be used in India. This helps reduce gas pressure and capture the energy lost in pressure reduction at various stages of gas processing and distribution to allow for power generation. At full capacity, one such unit can generate up to 7 megawatts of clean energy per day and can possibly recover its cost in a period of 2.5 to 3 years from installation.
Well, hello and welcome. You're watching News Center with me, Ashmit Kumar. Now, Thales, a leading French aerospace and defense supplier, is present at Paris in France at the AI Action Summit. Now, a key supplier of critical defense systems, Thales is also looking to integrate the latest in AI for increased efficiency, and capabilities of its defense system. So what does a future with AI look like? What does a future with AI and India look like? Well, for more on this, I'm now joined by Mr. Philippe Carrier. He's the Senior Executive Vice President for Research and Technology at Thales. Mr. Carrier, thank you so much for taking our time, for speaking to us all the way from France. First question, AI is clearly the buzzword. We've all been discussing it, especially in the first couple of days, first couple of weeks of 2025. A lot of excitement there. Give us a picture for the benefit of our viewers. When we talk of integration of AI into defense system, what does that future look like from a Thales perspective?
Yes, so good afternoon, and yes, definitely AI has an immense potential, in different industries and markets. What is very interesting, though, is that we have seen an excitement around investments in AI since about a year ago and accelerating early 2025. But as a matter of fact, when you look the type of AI that Thales is dealing with in the vertical markets in which we are operating, which are really AI for critical systems, is something very different. It's not the AI of GAFAMs. It's really the AI which has to be trusted, which has to be frugal, and which has to be transparent, and which has to be cyber secured. And this is at those conditions that we can introduce AI into systems like defense systems, like aeronautics, like space, or even in cyber security.
Give us a few examples, a few use cases of integration of this AI technology with a weapon system, and especially in an Indian context, from an Indian purchase order standpoint, something an Indian arms manufacturer or the Indian Army or the armed forces would perhaps be interested in. Give us a case study, an example to demonstrate the integration of this technology and then the subsequent increase in efficiency.
Yes, so you can use AI in different elements of defense systems. This is, I would say, an optronic pod as an example. It can be a sonar in submarines, or it can be electronic warfare sensors. And what this specific AI that we may integrate inside the sensor gives the potential to augment significantly the capability of a sensor. Let me take a few examples. If you start putting AI inside a pod that you put on a jet fighter, and as a matter of fact, it means that you can really analyze images in real time rather than having to wait in order to treat them offline. And this is basically increasing the tempo of the mission by a factor 100. Another example, if you take radars for air defense, we all know that a very common threat those days is drones. And what is a drone? It's basically a very small element which is flying at a low speed and at a low altitude. And radars are not very well done to do this. We can do radars which can look really further and to also, let's say, be able to detect this type of things. But in fact, by detecting those kind of things, it looks like birds. And therefore, discriminating between birds and drones is something very, very important. And thanks to AI, we can definitely augment the capabilities of those radars. These are a few examples. I could take examples as well in classification of mines for mine warfare. These are the different elements where we are introducing AI in all our systems. And we have today in the Thales portfolio around 150 products which are introducing or in the process of introducing AI in their capabilities.
Well, we're cutting into that broadcast to cut across to Prayagraj as we speak. You can see the visuals on your screen there. That's Mukesh Ambani and his family at the Mahakumbh 2025. Again, a humongous gathering at the Mahakumbh this year, over 45 crore people. Mukesh Ambani now visiting Prayagraj, landed just this afternoon. We're given to understand at 3 p.m. He's there with the entire family. He's there with his mother, Kohila Ben Ambani, his wife, Neeta Ambani, his sons, Akash and Anant Ambani, the daughter-in-laws, his daughter. They're all there. They're taking a dip at the Sangam, Again, bear in mind, this is a hugely important moment in the spiritual life of an Indian. Of an Indian, it's important to understand that immersing oneself in these holy waters is believed to be cleansing oneself of all sins, liberating oneself as well as the ancestors from the cycle of birth, ultimately attaining moksha. An important moment this, they're landing there, they're taking that holy dip. In fact, just yesterday we had even the President, Draupadi Murmu, attending the Mahakumbh, visiting Prayagraj, taking the holy dip. Mukesh Ambani there as a testament to the spirituality, attending Prayagraj. There you have Anant Ambani taking a dip in the water. Must be cold, must be chilly. The cold is not done with the north as of yet. So taking a holy dip at Prayagraj as we speak. Bear in mind that this is again a brief window that is available to all devotees till Mahashivratri. That date ends on February 26th, so that's a brief window that is available to the devotees. Perhaps the reason why there are crores and crores of people who are looking to visit the Prayagraj. The estimates run north of 45 crores. So these are some visuals that you're seeing.
Along with entire Ambani family there in Prayagraj, and also importantly, we know the kind of role the Reliance Industries have played in the infrastructure creating there in Prayagraj for this Mahakumbh. So they have been in collaboration with the Uttar Pradesh administration. But today, of course, it's going to be a significant event for the entire Ambani family because they are there in Prayagraj. They're part of the atmosphere. They're part of that special occasion of Mahakumbh. It's very, very significant. The visuals that we can see of the entire family there in Prayagraj for this Mahakumbh.
Right, Tarun, thank you so much for getting us the latest on that front as we see the entire Ambani family there taking the holy dip at Mahakumbh. Shifting focus now to the Parliament where the Lok Sabha is in session. Finance Minister
Well, important visuals there coming out of Prayagraj. You can see the Ambani family there, led by Mukesh Ambani, landed in Prayagraj this afternoon. He's accompanied, we're given to understand, by his entire family. You can see on the visuals there, you can see, of course, his sons, Anant Ambani, Akash Ambani. He's accompanied by his mother as well, Kokila Ben Ambani, his wife, Neeta Ambani, his daughter as well, taking the holy dip again. As we said at the very outset, a very important moment in the spiritual life of an Indian to visit the Mahakumbh in 2025. Again, it's a narrow window. There are crores and crores of people who are thronging the borders, the doors of Prayagraj to take part of this auspicious occasion. We're given to understand that the figures stack up to north of 45 crores. That's the large number of people who are visiting from all across the world, the Prayagraj, the Sangam, visiting this location, this auspicious occasion. Mukesh Ambani there with his entire family. On that note, let's dive into the Finance Minister speaking at the Parliament. This is, of course, the budget session that we're seeing on our screens right here.
Sir, the Union budget for 25-26 has sought to address these immediate challenges facing the domestic economy in the global context. It also rolls out futuristic path for transforming India into Vikasit Bharat. So our main goals in this budget, our main goals in this budget are to accelerate goals, our growth, secure inclusive development, invigorate private sector investments, and uplift household sentiments. So, with a focus on Garib, youth, Annadata, and Nari, the budget likes to reveal new schemes and reforms in the following broad sectors: promotion of agriculture, MSMEs, investments and exports as growth engines and building rural prosperity and resilience. We also want to have employment-led development, spurring domestic consumption and boosting manufacturing in India, including export promotion. Continuing public capital expenditure, sir, and rekindling the animal spirits in the private sector to step up investments. And most importantly, investing in people, investing in economy, and investing for innovation. These are actually the union budget. These are actually the points on which union budget is focusing, so that we balance the national development priorities with fiscal imperatives. So, some of the budgetary outlays I want to highlight here, sir, so that it covers most of the concerns expressed by many of the members. The budget, first thing before I even utter the outlays for each of the schemes, I want to highlight one concept, if you want to say, effective capital expenditure. What is effective capital expenditure, sir, and why do we need to? I'm sure very many members of Parliament will fully be aware of it, but for the records, I'd like to describe it for a minute. Effective capital expenditure includes core capital outlays and the grants in aid for creation of capital assets. Though the grants in aid for creation of capital assets, sir, is accounted in our budget, is accounted as revenue expenditure, they go for creating capital assets in the states. So we include them when we talk about effective capital expenditure. In the budget of this year, 25-26, the effective capital expenditure is projected at 15.48 lakh crores as against 13.18 lakh crores in the RE of 24-25. So the effective capital expenditure in BE 25-26, sir, is about 4.3% of our GDP. That is only 0.1% of GDP lower than the fiscal deficit of this year, which is 4.4. This year meaning 25-26, which is 4.4% of the GDP. So the effective capital expenditure is 4.3% of GDP. Fiscal deficit, 4.4% of GDP. What does it indicate? It indicates that government is using almost the entire borrowed resources for financing effective capital expenditure. So the borrowings are not going for revenue expenditure or committed expenditure or any of those kinds. It's going only for creating capital assets. So in effect, government intends to use about 99% of borrowed resources to finance effective capital expenditure in the upcoming 25-26 year.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for...
Welcome back. You're watching News Centre. Now, Prime Minister Narendra Modi pitched the progress of India's artificial intelligence ecosystem in Paris, where he co-chaired the AI Action Summit alongside French President Macron. Now, Modi is in France for the first leg of his two-nation visit. Addressing the summit, Prime Minister Modi said that nations must pull together their resources and talent and develop open-source artificial intelligence systems that enhance trust and transparency. He said that India was willing to share its experience and expertise to ensure that future of AI belonged to everyone.
Governance is not just about managing risks and rivalries. It is also about promoting innovation and deploying it for the global good. So, we must think deeply and discuss openly about innovation and governance.
Well, to take this discussion ahead, I'm now joined by Sharad Sharma. He's the co-founder of iSpirit Foundation. Mr. Sharma, thank you so much for joining us. You're taking out time from Paris for joining us. You were there at the AI Action Summit. You were there when the speech was being read out by the Prime Minister. First question. The last edition, the previous edition of the summit was called the AI Safety Summit. This time it's called the AI Action Summit. It almost seems like it's a call to arms for a country like India and France to step up their game as far as AI tech is concerned, as far as emerging tech is concerned, especially when you see the big strides that countries such as US and China have made. Is this a call to arms?
I won't say it's a call to arms. I think maybe the next summit will be called the AI Impact Summit, because actually, what we have to really focus on is the good impact that AI can have in people's lives. And that's the direction that we need to go. And of course, as we think of impact, we have to worry about risks. And so that is, both are very important. And India's focus has been on opportunities and enablers. In fact, in the UN AI body, I co-chaired with my Japanese counterpart the opportunities and enablers group, or the subcommittee that was there. So that's an area of focus for us. We want AI to lift Indians and to help us move forward faster than would be the case otherwise.
Wonderful. Let's draw on what the Prime Minister actually said, and I'll draw on two words that he mentioned a couple of times. One was open source, the other one was cost efficiencies in developing an AI model. Post the DeepSeek disruption, is that the formula to proceed with? That we need an open source model, that's what we'll build our own LLM on, and that's the strategy that India can adopt in looking for a foundational model? Can we replicate DeepSeek here? Do we have the labs, the research capacity, the compute power to do it here?
Absolutely. So I think let's parse this a little further. To be able to build a good AI solution, first, we don't want to be consumers of other people's AIs. We want to be producers of AI. And for us to be able to do that, we need an ecosystem. In that ecosystem, he referenced talent several times. He also mentioned that, yes, we don't have GPUs, but we are working to make GPUs available at a low cost to everybody. But he also mentioned, if you remember, the reference to data, because data is the key ingredient that drives AI. And India has continental-sized data. And the question is, how can we share it in a privacy-preserving way? So if you remember in the speech, he pointed out that India is the leader in making that happen. And he referenced a way for doing that, and that is called DEPA, Data Empowerment and Protection Architecture. That was also mentioned. Now, what we are doing in India is to use public technology like DEPA with smart regulation to create what we call as techno-legal regulation. Techno-legal regulation was also mentioned in the speech several times. So this is really our new approach to AI. We are doing it for India, but the world is starting to notice. They are saying, hey, these guys have a different soch, they have a different philosophy, they have a different way of thinking about this problem, and maybe we have something to learn from them. So I am happy to make a prediction that later today, we are in the middle of the day right now, roughly about 12:30 p.m. Later in the day, you will find that the whole group of people that are assembled there would decide. I think there's a good chance they'll decide, 90% chance that they'll decide that the next AI Global Summit will take place in India. And if we have our way as India, I think we should call it the AI Impact Summit, right? Because our focus is really in making that happen. So to answer your question, India isn't a big player in AI.
Sure.
It is a rising player in AI, but the way we are rising is based on a philosophy, on a strategy. And while that strategy has not fully succeeded, it has caught the imagination of many other people in the world. And they are saying, perhaps this is the way to go forward. And they are watching India very keenly in that respect.
Right, Mr. Sharma, I'll come in with one final question. You're at this global summit, you're in France, we're seeing leaders from across the world. I just want to get a sense in as far as the Trump dynamic is concerned. Clearly, he wants to ensure that US is first, US maintains its lead. He has shown his intent by way of slapping a GPU cap of 50,000 GPUs as far as India is concerned. Is that going to be a challenge, as you mentioned, during India's rise with its AI aspirations? Is that going to be something that India will have to contend with?
Look, our cryogenic engines in the space program happened despite everybody preventing us from doing that. Our nuclear technology is an answer to that. And I think our DPI, digital public infrastructure, is a resisted rise, or whether it is been Aadhaar or MOSIP, or whether it's been UPI or even DEPA, the powerful forces of the world don't want India to do this. I think India is now in a world of a resisted rise. We have to we have to accept that idea that our journey from here, while people may pay lip service to say, hey, it's good you're doing that, but they fear it. They don't want India to do this. And therefore, we'll have to find a way to do this in spite of all these restrictions. We have done that in the past, and I'm very, very confident that we'll do it again. It actually galvanizes people in India to do the best possible.
Sure.
It is not going to slow us down. Right. It will help us move forward with clearer ambition and clearer thinking and clearer strategy.
Right, Mr. Sharma, thank you so much for taking our time, for joining us from all the way in Paris and giving us that insight as far as the road ahead in 2025 is concerned for India. But that's all the time that we have. It's a wrap on this edition of News Center. For more news and updates, continue right here. Keep watching CNBC-TV18.
Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
While there is a lot of global turbulence, the levers for growth are completely internal. So there will be some impact. As we have estimated, if there are reciprocal tariffs, and this was done before the headline rates were cut in the budget, if US was to impose the same rates as India imposes on US imports, you would see an impact of about $7 to $8 billion. But I think that number is going to be a lot lower because India, as you must have seen in the budget, has actually cut those numbers. There is, I think, significant global uncertainty. I think there is uncertainty, the more the uncertainty on investment. And therefore, it makes sense to be a bit cautious on external demand.
As long as we have the domestic flows which are robust, and there the key indicator to watch out for is the SIP flows. I think as long as the SIP flows are adequate or in line with what we are seeing, we have no reason to be worried or concerned about. In 23, we saw total activity of around $15 to $18 billion. In 24, we saw around circa $40 billion. In 25, we could see as high as $50 to $55 billion of sale through various corners. So that's the supply that is going to hit the market.
Great to be here, back again at the IBCA annual summit to talk about what investing and the investment climate looks like. We've got a great bunch of people here. I'm going to time them appropriately so that we can get more of a conversation going. We are going to link the macros with the micros as well and talk about each of their businesses individually, as well as the kind of dry powder that they're sitting on and what they intend to do. Why are we talking about buyouts? Because buyouts have been part of the investment strategy for men like we have here on the panel over the last several years. In fact, over the past decade or so, we've seen an increase in the number of buyouts. And, 2022 was a record year, and we've started to see an improvement after a little bit of a lull. We've started to see an improvement in 2024. The sectors that we are seeing controlled deals or buyouts happening in: IT, ITES, healthcare, manufacturing, retail. There's a whole bunch of them. But the outlook continues to look strong at this point in time. So without further ado, Manish Kejriwal, I'm going to get you to start with the macros. As we look at 2025, let's first talk about the global trends that could shape investment strategies in India. Your time starts now.
Thanks, Sharon. Great to be here. Good seeing you again. I think a month ago when we were all in the Alps, the two themes or two topics people talk about was Trump and AI. And I'm just saying that because I think while that's not an investing theme, what the two of those things happen will really influence a lot of the global investors going forward. I think going back to global trends, if you look at it from the perspective of GPs, it's been an interesting year, 23 and 24. I think the biggest takeaway, if we went back to the Investor Council that we had a month ago, was a real lack of DPI and money going. So there was a significant shortage of liquidity, money being returned by GPs to their LPs, which is not good news, given the state of the markets. And because of that, a lesser degree of investment by global LPs into the asset class because there was a lack of liquidity. I think India is in a very different place. I think we're in a secular uptrend, barring the early stage VC when there was a slowdown given what happened 2 years ago. I think we'll see that come back, but if you see this as a representation of the dry powder, even all of us, despite being price disciplined, are stepping up and paying and acquiring assets where we have a high degree of conviction. But the bar is that much higher. And what's helping us is the DPI story out of India, which was a disaster 15 years ago, is today the one thing which is most appealing, not only vis-a-vis the rest of Asia, but as far as the rest of the world. Because we have, exactly, booming IPO markets, which has been actually the exit from the majority of all our positions. But in addition to that, a significant amount of dry capital, as we said earlier, for sponsors, and India being globally relevant, whether it's China plus one, given what's happening to the Ukraine and the Middle East, it seems like even the strategics are refocusing on India. So exits, IPOs, of course, but in addition to that, the financial sponsors, because of all the dry powder we have and because we believe in India, and in addition to that, the strategic. So as a promoter or a GP which controls an asset, our exit options for the first time are multiple and very attractive.
Multiple and very attractive. And I think that has been the change as far as the story is concerned. And we've seen that accelerate, especially in the last few years. Vivek, let me come to you to draw the macros and the micros. And let me start by asking you about the global outlook first before we talk about India specifically. To take forward what we heard there from Manish, what will be the trends that could potentially shape investment decisions and investment strategies globally, which could have an impact and a bearing on India?
What happens in the US matters for what happens in India, right? And I think there are probably three things I'd highlight. Number one, if you just look at where buyouts have gone in India, there's been increasing concentration from about 55% to 75% into three sectors: financial services, IT, BPO, and healthcare. And we suspect that will actually only continue to increase for very important reasons. These are often family-owned. They're often available for sale. You're effectively buying out other people's equity and capital. They often don't require cash, as much cash for growth, other than M&A and platform opportunities. So that's one trend that we definitely see persisting, is companies who produce great cash, whose balance sheet can be well managed, and whose equity stakes are available for sale. Those three sectors offer a lot. The second is, we actually do believe that the risk-reward returns for buyouts, and all the LPs do understand this, risk-reward has really favored buyouts over the last cycle. What you'll find is, if you look at large growth, large buyout, small buyout, pipes, and other forms of, effectively what you'll find is that on a risk-adjusted basis, buyouts are outperforming. And it's fundamentally, our belief is because buyouts help you reduce beta in many specific ways, not just how you allocate, not just governance and how you allocate capital, but it also allows you to control exit timing. The third trend, and this is where the US, by the way, people are nervous in the US about this, and in India, hopefully the party will continue, is if you look at buyout specifically and the MOICs, right, on exit, buyout, just other sales to sponsors for buyout companies delivered about a 2.8 MOIC. Sale to public markets at the time of IPO, 5.1. And sale to public markets a year following, 4.8. In other words, a huge amount of the outperformance of buyouts has been route to exit, and that is dependent on how buoyant the capital markets stay. And that's something actually in the US, which has actually been a little more muted.
Yeah.
So as long as the IPO market stays open, we should continue to see great exits.
Deepak, let me understand from you, your plans on how you see the global environment and what that could potentially mean in India. I know that you believe that you've only just gotten started in India. This is a landscape that is ripe with opportunities and possibilities. Take me through what the India story to you means today.
So let's start with the global allocation, right? So broadly, global allocation, there would be a bias towards US. There would continue to be a bias towards US. There is a lot of volatility associated with US, but that's a market that would continue to outperform. Focusing on India, I mean, this is our core market in Asia. We have a multi-asset class view here: infrastructure, private equity, late-stage growth. And I think infrastructure has started to mature for us a little bit. Private equity and late-stage growth have only just started. I mean, a lot of people, when they look at us, they look at broad pool of capital, but what they don't understand is a really large GP. Almost 80% of our assets are managed in-house, especially in India. Last 9 transactions that we have done have all been direct. That doesn't mean we don't partner with our partners like Kedara. We continue to do that, and that creates a right to win. But continuing on across the 3 sectors: IT services, financial services, healthcare. Healthcare, the journey is only started, right? Like he's talking about like being a second largest chain, but the reality is in India, corporate chains are still 12%. So corporate and regional chains like Sahyadri, which we own, are only 12% of overall hospital beds. So it's a multi-decade consolidation journey, and there are several such multi-decadal journeys that are existing in India that we'd continue to focus on, drive, and move forward.
But Sumit, let me come to you now and talk about your journey here, specifically from a buyout perspective. How do you see India? What's the outlook for 2025? Do you expect 2025 to be a significant accelerator over the previous year? What's driving the needle today?
Yes, so I think as a firm, we focus on mid-market buyouts, buying businesses which are usually $5 to $30 million in EBITDA and less than $300 million in enterprise value. I would say over a 10-year period, the supply of businesses that are available for sale has exponentially increased for multiple factors.
Right.
Being succession planning, spin-offs, global firms looking at partnerships in India. And also, there are 2 key themes I think that we have worked on. One is the global partnership model. I think a lot of Fortune 500 companies, to succeed in India, sometimes appreciate having a local partner, and we have done it 3 times over with Iron Mountain, Yum Brands, and Amazon. And the other theme, which is a very proven playbook in US and Europe, is consolidation of fragmented industries, where industries are fragmented, but each player makes money because the industry structure is very disciplined. And there with scale, I think margin improvement to growth to upgrading management and eventually multiple expansion all plays out. So we have done that 8 times over. So I think that theme of lot of industries in India are still fragmented. I think that consolidation play opportunity will continue. And with public markets getting little subdued compared to 24, I think there is a pool of businesses and shareholders which are looking for liquidity. So deal flow, I think in the next 12-18 months should accelerate if public markets stay the way they are as of now.
I'm committed to buying and owning Gaza. As far as us rebuilding it, we may give it to other states in the Middle East to build sections of it. Other people may do it through our auspices. But we're committed to owning it, taking it, and making sure that Hamas doesn't move back. There's nothing to move back into. The place is a demolition site. It'll be, the remainder will be demolished, everything's demolished. I mean, you can't live in those buildings right now. They're very unsafe. But we'll make it into a very good site for future development by somebody.
Mr. Speaker, sir, with your permission, may I ask a slightly different question pertaining to gold? In the year 1971, Richard Nixon, who was then President of the United States of America, gave up the gold standard. After that, gold was hardly considered to be a serious financial asset. In 2006, gold constituted only 6% of the reserves of the central banks of the world. In the year 2024, it is up to 11%. China, India, Poland, Turkey are the most aggressive buyers. Even in India, there has been a surge in the domestic price of gold. My question to the Honorable Minister is that this shift away from the dollar to gold, does it indicate
the themes that I'm picking up from each one of you in your initial comments? One, of course, is family-owned businesses looking at ways of exiting at this point in time. The next generation perhaps doesn't want to be, doesn't necessarily want to get their hands dirty, wants a way out. Consolidation and, fragmented sectors being put together. That's another theme that seems to be playing out. Global companies looking at India from a local strategic perspective. That's the other theme that's playing out at this point in time. If I would ask you about valuations, because that oftentimes is the impediment, is this a buyer's market today? I mean, you've been cautious about this. Are we looking at deal flows from a buyer's market perspective?
Sharon, I think if you look at what was clear is the time gone by. So when I look at 24, it was definitely a seller's market. We had IPO markets which were crazy. We all got exits. I think each one of us, we had more than 4 IPOs. We still have another 3 in the... It's gotten tighter now. So when it's a seller's market, buying was very difficult last year. So, of course, each of us has teams that are motivated by making new investments and exits, but the focus was on driving exits, cash, and DPI. Of course, our teams, I mean, deals don't happen overnight, as you know. It takes years to get a deal done. I would say we did do 2 or 3 deals last year. We normally would do 5 or 6. So the rate of deployment slowed down.
Do you believe that it's likely to slow down further or pick up?
Yeah, so my sense going in the past was, despite that, we did stuff, you had huge conviction. So you pay a higher price, the amount of margin for error goes to 0 or close to 0. So your level of conviction, you spend a bit more time. I think going forward, what this has done is, and I would say definitely for us, I would guess Mukesh and of course OTPP and our other friends with Sumit, our pipelines are extremely strong, right? So we have 20 things in the hopper, which we've been working for more than a year. I do think the public markets eventually are an indicator where the private markets are going to go. And it hasn't been the most healthy start to a year. I think prices rightly will correct, the multiples will compress, and the second half of 25 will be a buyer's market much more than a seller's market.
Okay, so Mukesh, let me understand from you, how are valuations looking at this point in time? Are you also holding back or sitting on the fence, waiting for things to turn as far as valuations are concerned?
I think if you look at India's valuation, on the large cap side, in fact, we are below long-term averages. So on large cap side, it's fine, but I think the frenzy which happened in the mid cap and small cap, primarily driven by large domestic inflows, our biggest competition actually for deals was public markets. It was not other PE firms, because we do only buyouts, and when we see the founders having a valuation which is 2x of what we are offering in the IPO market, it was very difficult to convince them. But off late, I think what is going to happen is supply is going to outstrip demand. And the supply of capital also in form of number of IPOs which are coming, and with this correction, I think I agree with Manish that second half is when, a lot of people who are looking, I know some of the IPOs have been pulled back. So it will not be as easy to do an IPO as it was earlier, and that was when...
pulled back on account of the volatility that we're seeing?
Volatility and I think the valuation what they had in mind.
The expectations, the mismatch in expectations between what the founders expect and what the market's willing to offer at this point in time.
Yes.
Sumit, are you seeing that as well? Do you expect things to pick up in 25? And do you also believe that this mismatch of valuation expectations is perhaps going to see more IPOs fall or being a casualty to this misalignment on expectations?
So I think if you see globally, as investors sitting globally, still India is, I think, on the expensive side on a relative basis, what they are seeing. So I think the markets will be subdued. And I think to each seller, if people like, even in our business, if a business needs to be sold and we need liquidity, and we're getting 10% lower than what we want, we would go ahead and do it. And I see the same behavior from, other motivated sellers and buyers respectively. But I think it will be a little subdued environment seeking liquidity.
Vivek?
India's pricey. We know India's pricey. I think there are three lessons we've taken from it, just observing outside it, right? One is India's equity risk premiums is now getting back to a high, thanks to currency depreciation, thanks to other risks associated with it. And as a result of that, it's actually quite difficult to, even with buyouts, you need a 2 in front of your returns. You need a 2 in front of your returns, and anyone going out there raising capital who says otherwise is probably, is tricking themselves. LPs will tell you, you need a 2 in front of your returns to justify the prices at which you're buying. So that's one. The second is, look, we went from a regime of, paying 4 to 6 times, 8 to 10 times. Now we're paying 12 to 14 times, guys.
Yeah.
We know what we're buying at, and therefore, what has happened as a result of that is people are moving to quality. You're better off buying a platform of higher quality at a slightly few more turns multiple that can use the thesis that Sumit talked about or Mukesh talked about as a platform to acquire other businesses, as Care Hospital has, or some of the other examples, versus buying a fixer-upper at a great price. So this is not a market where you really want to end up buying a fixer-upper.
What does the pipeline look like? And I'll get each one of you. Do we have more fixer-uppers at this point in time, or do we have the high-valued quality bets? Mukesh, you want to come in on that?
For us, what we thrive is, what we state to our LPs also, we look for deal complexity with great businesses. That's what
deal
we thrive.
Complexity with great businesses, okay.
Where there's a motivated seller, where there's a cross-border transaction. We bought VFS when there was COVID. We bought Care Hospital where there was a minus frivolous case going on. IGI where Fosun was the seller. So I think in those situations, as Sumit also rightly said, there's no option but you have to exit, right? And that's where we come in and move at speed and certainty to get this business in our favor. So, and if we see that we can create value, whether you pay, any deal, if you pay 10-15% higher, but if you have the conviction to create value, I think if you have to go wrong, you will go wrong even with the 10% lower value. So I think what we thrive for is deal complexity, and when we see that, we move at speed.
But let's address that value question and the value issue then. I mean, what are we talking about in terms of the kind of value that you hope to create, say, over the next 5 to 7 years? You know, the returns that Vivek was talking about, that Sumit was talking about. I mean, what should we realistically expect now in terms of value creation as well as return generation from an Indian asset?
I think our value creation journey will remain the same. Like Emphasis was declining 20 quarters in a row. If I would have bought Emphasis even 10-15% higher or 20% higher, we would have made the, what returns we have made. And I think we got, in terms of IT services alone, we have got more than 50 clients from Blackstone portfolio. So I think whether that will stop, no, that will continue going forward. In Care Hospital, to Sumit's point, what you've done in insurance brokerage, we've done in hospitals. Again, you've created a platform. If you buy 10-15% higher, but the other platforms which you're, adding on to it, I think that will continue. And to Manish's point, after some point where you see the margin of error is too low for all right bets to go right, that's where you put a pause and say, let's wait and watch.
So it's not a pause for you at this point in time?
Not a pause for us. So I think personally, as I stated, IPO is a good way to start, but that's, it's not a good way to exit, right, finally. And especially for promoters of Indian companies, for markets have become quite matured enough for PE firms to exit completely in public market. But for founders, if they have to sell a controlling stake, it becomes very difficult to exit in public market. So at right point, I think this will move again towards private market. And for us, certainly, we see opportunities going forward.
So this is a man with a listed company with lots of money to deploy. So all families in this room should be coming to him, and Mukesh is the man of the hour.
Let me get closing comments from each one of you, because I think we're pretty much at the end of our time. As we look at the India story, and I think everybody's talked about the opportunities that present themselves, how exciting it's looking, what it means in terms of a return perspective, etc. What does the India premium today look like? Mukesh, let me start by asking you.
I go to LPs, and every time they say India is trading at it's trading at 100% premium to UK market. It trades at 20 times P, UK market trades at 10, and they give example of China, and they give examples of Korea, etc., which all trade at 10 times P. And my answer is, if you look at returns of India for the last 30 years, 20 years, 10 years, globally, all the markets, just take the returns of all the markets for 30 years, 20 years, 10 years. India, there are only two markets who have delivered double-digit returns globally, US and India. And all the other markets are low single digits. So even if you correct India by 15%, 20%, it will still outperform all the peers. So I think one great thing about India is the reason why the multiple is also high is the growth which this country exhibits, and the stability of the government, and the spirit of Indian entrepreneurs to even work in difficult environments and create value. Obviously in mid-cap and small-cap there has been a huge spike and there has been a correction, but I think the growth will continue, and India will continue to trade at premium to other global markets given the growth it has.
Manish?
I think Mukesh has answered it well. My point is, when someone talks about the India premium, we should always, as we do with the LPs, remind them of the India growth. I mean, when you talk about a 6 or 7% terminal value in your models, people are shocked. I mean, how do you do that? So it needs a higher. I think the more important aspect is not everybody has made money in India, right? So at the end of the day, to Mukesh's point, I think you've got to trust the GP that you're deploying capital behind. It's not about riding the beta, it's how do you drive the alpha. Whether, as Vivek said, it's driven by operating partners, there's an angle which has to be related. At the end of the day, this is a people business. You've got to get a bunch of guys who know you can differentiate, because otherwise everybody should be giving supernatural returns. So what I'm saying is, in a market like India, which is not cheap, there's a reason at the macro level why it's not cheap. But in order to really make money at a consistent level is very difficult. And I think one of the core aspects, which I think is bimodal, is what Deepak said earlier about the governance. So the only thing, we may or may not have made a lot of money, we luckily have. The one issue I take pride in is we haven't called a promoter wrong. We've never had a situation of theft or we've been that I think is critical. And I think given where markets are, people are also realizing it's better to show the extra $10 on your P&L rather than taking out somewhere.
No, I think the governance premium, that point is well taken, Sumit. The India premium.
So I think on a normalized basis, I'm not taking a static view of a particular quarter. On a normalized basis, I think it has sustained over the last 20, 30 years. I think on fundamental NPV Excel sheet basis, I think it is justified. Second, I think it's the same Fidelity Wellington investor sitting in, overseas buying Suzuki stock in Japan and Maruti Suzuki in India. So it's the same buyer who's pricing it differently. So I think it is justified.
The thing that gives you the most confidence about India and the one risk that you would be most mindful of?
The one blip I'd be a little concerned about is, you talk to LPs around the world and they'll say, I love India, I want to be there, there's just not enough investable opportunity. So it is actually interesting, the industry has become a bit of a barbell. You've got some people on the panel here who are actually out there raising capital, and you have a huge long tail that can't raise any from institutional investors. So that's one thing. In other words, you could end up with India with a highly concentrated manager base that actually represents 60-70%. It could be a market where you have 6 or 7 managers represent 70% of the market. That's one. I don't call that as a risk. But frankly, it does, it creates a concentration that I think for some managers or some LPs will say, look, I love India, but I can't write big enough checks to enough people. The stuff we love about India, obviously, is, I'd say, on a more lighter note, is the optimism.
I hope we continue to surprise the optimists as we move forward. But many, many thanks, gentlemen, for joining us here today. And thank you very much for your insights and your time. Thank you very much, ladies and gentlemen, for joining us this morning.
Renewed search for an alternative international settlement mechanism de-horse the dollar. That's my question to the Minister.
So the honourable member has he himself mentioned that it is not the core part of the question, but he's still asking, and I would certainly like to give my brief answer on it. India's, as he observed rightly, the demand for gold in India has not come down. On the contrary, it's going up. And I would think it is very typical of India, particularly for households or small businesses, and it is normally said women, but general households also and women also, to invest in gold because they think it's far more secure and far more liquid, and therefore as an asset class, we see that sustained interest in it by the households and small businesses as much as women of India. But beyond that, of course, the Reserve Bank also is buying gold to make sure that it has adequate reserves of gold and not just a basket of currencies. And in that, one of the currency which predominantly has been held by the Reserve Bank has been the US dollar. But we also have the reserve currencies in denominations of different denominations of other currencies as well. But the gold is also kept in the Reserve Bank, and gold is also being bought by Reserve Bank. But beyond that, as regards an international currency or potential currency, there's not much for me to comment at this stage.
cover it right now. So we thought this would be appropriate. Even bigger than the Super Bowl. This is a big thing. And almost everybody now has assented to that.
Attention on board. Ladies and gentlemen, if you could please direct your attention out the right side of the aircraft. Air Force One is currently in international waters, for the first time in history, flying over the recently renamed Gulf of America. Please enjoy the flight, and we are now about to head westbound to Super Bowl 59.
Hello and welcome to Business 360. I'm Arundhati Ramanan and these are the top headlines that we're tracking for you. Sensex and Nifty slide for the fifth straight session. Mid-caps and small caps get battered. 10 lakh crore rupees in investor wealth wiped out today. Forex dealers left puzzled as rupee makes a surprising recovery even as US tariffs on steel and aluminium kick in. RBI likely to have sold dollars in massive amounts. Sources say the move is an attempt to scare speculators. Top private equity investors are bullish on India even amidst the market correction but remain wary of valuations and some IPOs are being put on the back burner.
No one holds the key to our collective future and shared destiny other than us humans.
Prime Minister Modi pitches India's AI story in Paris, says AI is writing the code for humanity, backs for developing open source systems that enhance trust and transparency. Elon Musk and a group of investors make an unsolicited bid of over $97 billion to take control of ChatGPT maker OpenAI. Sam Altman quickly rejects the offer and mocks Elon Musk by offering less than $10 billion to buy Twitter.
If all of the hostages aren't returned by Saturday at 12 o'clock, I think it's an appropriate time. I would say cancel it and all bets are off and let hell break out.
U.S. President Donald Trump issues an ultimatum to Hamas after it suspends the release of Israeli hostage, alleging ceasefire violations. Trump warns all hell would break loose if hostages are not released by Saturday. Adani shares rise in a downbeat market. U.S. President Trump puts on hold the law which bars U.S. companies from bribing foreign officials. Bangladesh also asks Adani to restore full power supply after 3 months of reduced sales. Prime Minister Modi virtually inaugurates the India Energy Week and reaffirms commitment to sustainability, confident of achieving 500 gigawatts in renewable energy by 2030. Karnataka hosts a global business summit to woo investors, expects investment proposals worth at least 10 lakh crore rupees. We will come to that and more in just a bit, but first to what was a turbulent Tuesday for the Indian equity markets. Sensex and Nifty slid for the fifth straight session. 45 out of 50 Nifty stocks closed in the red. 10 lakh crore rupees in investor wealth wiped out today. The mid-caps and small caps suffered the most. Over 95% of India's top 100 mid-cap and small cap stocks closed with cuts. Sudarshan Kumar joins us now. Sudarshan, decode that sell-off for us on Dalal Street.
So in the last few days, market has taken a big knock, both especially in the broader markets, with both mid-cap and small-cap indices are now down 20% each from record highs that both these indices had hit in late 2024 and down 6% each just in last 2 days. And one of the reasons, if you can attribute, is big FIs selling. Just in 2025, FIs have sold shares worth nearly rupees 1 lakh crore in the cash market and nearly rupees 3 lakh crore if you see from the month of October 2024. And the impact can be seen in broader markets. Nearly 30% of total mid and small cap stocks are at or near to 52-week lows, with 70% of them are down 30% or more from their recent peaks. For Sensex and Nifty, the fall is 11 to 12% from the record high, both these indices that have hit in September 2024. But look at broader markets. Mid-cap and small-cap indices are almost in correction territory. Mid-cap index is down 17%. Small-cap index has fallen 19% from record highs. Nifty Next 50, or earlier it used to be known as Nifty Junior, has fallen 22%. And Nifty Small-cap 250 is down 90%. The fall looks more severe if you look at sectoral indices. Media index is down 32%, energy 30%, PSU 28%, realty 26%, and PSU bank 26%, and metal index is down 20% from their record high. So which of the stocks are top loser? Well, not even a single stock is at a 52-week high. And amongst top losers, PSUs are at top of the table. Top losers are MRPL, Cochin Shipyard, Vodafone Idea, Hind Zinc, Oil India, and HUDCO, down somewhere in the range of 46 to 60%. And among small caps, top losers are Sterling and Wilson, Chennai Petro, Raymond, Jupiter Wagon, Titagarh Rail, and ITI, down somewhere in the range of 60 to 65%. And if there was any expectation from earnings, that too seems to have vanished, with number of companies missing estimates has been much more than the ones beating expectation. We'll have to see how the remaining calendar earnings pans out, and if any time soon FIs start buying. That's a big if, but that's what we can hope for now.
Right, Sudarshan, many thanks for those details. So stocks getting battered there on Dalal Street. But from market action to Mint Street, the rupee saw its strongest intraday rally in over 2 years. Dealers attributed the rise of the rupee to the RBI likely to have sold dollars in massive amounts. Lata Venkatesh decodes that rupee rally for us. Lata?
Well, the rupee's rally is absolutely come out of the blue, and it is an extremely sharp rally. The rupee at its sharpest dealt at 86.63, and the overnight close was 87.46. So, you know, it's almost a 1 rupee jump or a 1 percentage point rally in the rupee. And it is surprising because the dollar index has actually strengthened. Last week, Friday night, it was at 107.70 thereabouts. Monday, it went to 108.10. Tuesday, now it's at about 108.4. So dollar is strengthening. Almost all Asian currencies are weakening. Almost all. There's a minor green on the ringgit, but that's minor. Whereas the Indian rupee is extremely strong. And the only reason why it has been strong, the only person who's offering dollars like no tomorrow is the Reserve Bank of India. There are some huge numbers floating around, but all this is market chatter. People tell us that yesterday as well that the RBI must have sold well over $3 billion. Today, in the first half itself, they must have sold an equivalent amount. So the market is only trying to guess why is the RBI standing so much against the current of the foreign exchange flow. And it's not only peculiar to India. You know, all EM currencies are falling. One guess is it wants the other side to come in and sell, the exporters. Typically, Jan, Feb, March is an export-heavy month. We do very well in exports. We sometimes have a current account surplus. So he's probably tempting the exporters to come and sell. Alternatively, they are scaring the speculators. You know, one day the rupee went from 86.50 thereabouts to 87.40. The next day it opened at 87.95, almost 88. I mean, this kind of speculative moves have to be stopped and the speculators have to be hurt. And that may be the position that the Reserve Bank is taking. But at the moment, all these are guesses.
Right, Lata, many thanks for those details. Now, staying with the rupee, the Chief Economic Advisor, V. Anantha Nageswaran, expects that the currency depreciation may slow down going ahead. Speaking at a summit, he added that the current weakness in the currency is on the back of a prolonged dollar strength and not due to structural issues. Take a look.
In the long run, which is 5 years or beyond, it is ultimately boils down to inflation differential. So in that sense, as long as our inflation rate is 1% or 2% above the average inflation rates of developed countries or the US, to that extent the currency will depreciate. But the point is, this currency depreciation hasn't prevented India from delivering returns to investors. If we are going to settle down at an inflation rate of around 3 to 4% rather than 5 to 6% as before, and if developed countries also end up finding that they can't bring it below 3% down, then naturally the gap between the two really shrinks a lot. And therefore, India may be able to experience a much lower rupee depreciation rate than what we have seen historically. And I don't think we should be too concerned about what is happening currently. This is an extraordinary period of dollar strength, which has lasted quite long.
Meanwhile, crude oil prices rose today amid signs of tighter Russian supply and increasing supply risks. This after reports said that Russia's January crude oil output fell below the target under the OPEC Plus supply agreement. Meanwhile, gold prices hit record highs yet again, this after US President Donald Trump's tariffs on steel and aluminium imports fueled safe haven demand. Billionaire Elon Musk and a group of investors made an unsolicited bid of nearly $100 billion to acquire ChatGPT maker OpenAI. Company CEO Sam Altman responded, saying that he will not accept the deal and mocked Musk by offering less than $10 billion to buy Twitter. Elon Musk's surprise bid to buy OpenAI is the latest episode in his ongoing feud with Sam Altman.
Elon Musk!
A consortium led by Elon Musk said on Monday it has offered $97.4 billion to buy the nonprofit that controls OpenAI. It's another attempt by the billionaire to block the artificial intelligence startup from transitioning to a for-profit firm. Musk's bid is likely to ramp up a long-standing feud with OpenAI CEO Sam Altman over the future of the ChatGPT maker. Altman on Monday posted on X, quote, "No thank you, but we will buy Twitter for $9.74 billion if you want." Musk co-founded OpenAI with Altman in 2015 as a nonprofit, but left before the company took off. He went on to found the competing AI startup xAI in 2023. OpenAI is now trying to transition from a nonprofit into a for-profit entity. It says that restructure is required to raise the funds needed to develop the best AI models. Musk's new offer is only his most recent attempt to throw a wrench in those plans. In August last year, Musk sued Altman and others, claiming they broke contract by putting profit ahead of the public good in the push to advance AI. Then, in November, he tried in court to block OpenAI from converting to a for-profit structure. The consortium led by Musk that is now trying to buy OpenAI's parent nonprofit includes xAI and several investment firms. Were a deal to go through, xAI could merge with OpenAI, according to the Wall Street Journal, which first reported Musk's offer earlier on Monday. Aside from any antitrust implications, a deal of this size would need Musk and his consortium to raise enormous amounts of funding. According to an uninvolved investment banker, in order to finance such a bid, Musk could sell part of his stake in Tesla or take a loan against his stake. He could also put up as collateral his stake in rocket company SpaceX, which is worth tens of billions of dollars.
On that note, it is time for us to head into a short break. But coming up next, Prime Minister Modi pitches India's AI story in Paris, says AI is writing the code for humanity. More on that when we come back. Stay tuned. Welcome back. It's with us on Business 360. Prime Minister Narendra Modi pitched the progress of India's artificial intelligence ecosystem in Paris, where he co-chaired the AI Action Summit alongside French President Macron. Modi is in France for the first leg of his two-nation visit. Addressing the summit, Prime Minister Modi said that nations must pull together their resources and talent and develop open-source artificial intelligence systems that enhance trust and transparency. He said that India was willing to share its experience and expertise to ensure that the future of AI belonged to everyone. US Vice President J.D. Vance also spoke at the summit. He said that excess regulation of the sector can kill the industry.
Governance is not just about managing risks and rivalries. It is also about promoting innovation and deploying it for the global good. So, we must think deeply and discuss openly about innovation and governance, about machines becoming superior in intelligence to humans, but no one holds the key to our collective future and shared destiny other than us humans.
We believe that excessive regulation of the AI sector could kill a transformative industry just as it's taking off, and we'll make every effort to encourage pro-growth AI policies. And I like to see that deregulatory flavor making its way into a lot of the conversations this conference.
US President Donald Trump has given Hamas an ultimatum after the militant group suspended the release of Israeli hostages. Trump has said that he would propose cancelling the ceasefire if all Israeli hostages are not released by Saturday noon. However, he did not clarify his administration was considering a military action.
Saturday at 12 o'clock, and after that, I would say all hell is going to break out. And I don't think they're going to do it. I think a lot of them are dead. I think a lot of the hostages are dead. I think it's a great human tragedy.
And speaking of President Trump, days ahead of U.S. Vice President J.D. Vance's scheduled meeting with Zelensky, the U.S. president has said that Ukraine may be Russian someday. Trump, during his interview with Fox News, pushed for ending the 3-year Russia-Ukraine war. He also said that he plans to reap the return on investment via U.S. aid to Ukraine. He said he expects $500 billion worth of rare earth minerals from Ukraine in exchange for support and security guarantees, which the Zelensky government has agreed to. U.S. President Donald Trump's top economic advisor, Kevin Hassett, has criticized India's tariffs. In an interview with CNBC, Hassett called India's tariff structure enormously high. He also added that these tariffs are a major issue that Prime Minister Narendra Modi will have to address during his upcoming visit to the U.S.
Talking specifically about tariffs, just recall that almost every trading partner has much higher tariffs than we do. In fact, the only trading partner that's about where we are, and there's Canada and Mexico who are part of the trade deal, but outside of that, the UK has about the same tariff we do. The EU it's 2 to 3% higher. Taiwan it's 10 or 11%, and India, and we're meeting Modi soon, has got a lot to talk about with the president because they have tariffs that I think the trade-weighted average is a little bit short of 20. Now I'm running it out of my head, so don't give me a Pinocchio. But they have high rates that are enormously high. They're lockout rates, and so President Trump believes that at the very least, everybody should agree that if they're charging us 20, then we should charge them 20. And then if they go down, we'll go down. But that's the idea of reciprocity in the tariff space.
Shares of Adani Group companies gained today in a downbeat market. This after US President Donald Trump signed an executive order to pause the enforcement of the law used to launch a bribery investigation against the Adani Group. The order directs the Department of Justice to put the Foreign Corrupt Practices Act on hold. Remember, the act prohibits American companies and foreign firms from bribing officials of foreign governments to obtain or retain business. Shares of Adani Power also rallied in early trade. This development comes after reports suggested that the Bangladeshi government asked the company to resume supplies from its plant in India. The company had halved its supply to Bangladesh due to delay in payments in October last year. Remember, Adani Power signed the 25-year contract under former Prime Minister Sheikh Hasina in 2017. The company has been supplying power from its $2 billion plant in Jharkhand. In a relief for lottery company Future Gaming, the Supreme Court ruled that lottery distributors are not obligated to pay service tax to the centre. The Apex Court ruled that the centre's attempt to impose service tax on lottery operations was unconstitutional. The court added that only a state government had the power to levy this tax. Remember, Future Gaming is India's largest donor through electoral bonds and has donated over 1,300 crore rupees to major political parties between 2019 to 2024. Karnataka is hosting a global business summit to woo investors. The state government is expecting investment proposals worth at least 10 lakh crore rupees. And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
I do believe we're making progress. We want to stop the Ukraine-Russia war, and I want to stop it just because I hate to see all these young people being killed. The soldiers are being killed by the hundreds of thousands. And I expect to have many more conversations. We have to get that war ended. It's going to end, and we have to get it ended. And we have to get it ended soon. Should have never happened, would have never happened if I was president.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always, Shruti Mishra. These are the top headlines from the startup world. Banking software provider Zeta gets $50 million from American healthcare company Optum. The SoftBank-backed startup will be valued at $2 billion after this investment, up from $1.45 billion when it last raised capital in 2021.
IXP, a life sciences VC backed by JV Ventures, announces the launch of its first fund to invest in early-stage companies. Fund aims to build portfolio of B2B companies ranging from pre-seed to Series A stages. The IXP Life Sciences Catalyst Fund is targeting a corpus of 200 crore rupees with a green shoe option of 100 crore rupees. Fund plans to create a portfolio of 20 to 25 companies.
Mobility startup Rapido announces its first ever ESOP liquidation program for current and former employees. The startup says that this program is generating 5 times growth while providing wealth creation opportunities.
No one holds the key to our collective future and shared destiny other than us humans.
Prime Minister Modi pitches India's AI story in Paris, says AI is writing the code for humanity, bats for developing open source systems that enhance trust and transparency.
Top private equity investors are bullish on India even amidst the market correction, but remain wary of valuations, and some IPOs are being put on the back burner.
Two senior partners are leaving P15. Managing partner Shailesh Lakhani, a 17-year veteran of the investment firm, and Abhik Anand, who co-led investments in Southeast Asia, decided to step down. Lakhani confirmed his departure from the venture capital firm through a post on microblogging platform X.
Elon Musk and a group of investors make an unsolicited bid of over $97 billion to take control of ChatGPT maker OpenAI. Sam Altman quickly rejects the offer and mocks Elon Musk by offering less than $10 billion to buy Twitter.
Well, those were the headlines we've been tracking for you this evening on What's Brewing. New age cross-border workforce mobility platform Border Plus has raised $7 million in funding round led by Owl Ventures and participation from prominent entrepreneurs including Binny Bansal, Mithun Sacheti, Ritesh Agarwal, Akash Chaudhary and Apurva Patni. Now, this marks Border Plus's first institutional or external funding round, and to tell us how the fresh funds will empower Border Plus's mission to streamline international career opportunities for skilled Indian workers. Joining me now is its co-founder Mayank Kumar. Mayank, welcome back to Startup Street. First, tell us the pain point that you're solving with Border Plus. What is the big mission? And you've moved from Upgrad, which is EdTech, to now global talent mobility with Border Plus. What made you bet big on this space?
So, Shruti, first of all, thank you for having me here. See, the thesis was very simple. I think at Upgrad, we do a lot of work in the context of white-collar skilling and helping people get the right job in India and globally. But I always felt that there was a massive space in the blue and gray collar opportunity and sort of folks who are in the blue or gray collar sort of space. And what can one do to help them earn more? So whether they are looking at higher income, higher salary, and what better than placing them internationally, because there's a huge lack of talent or lack of sort of skilled talent internationally, and India has got enough talent pool available. They just need to be fine-tuned, finished, and then deployed internationally. So I think that's the macro thesis that all of us are chasing at Border Plus right now.
Okay, so Mayank, tell us how Border Plus streamlines international career opportunities for skilled Indian workers. What is the model? And I believe you're starting with healthcare professionals and nurses. So what are the offerings for them?
So what we're doing, Shruti, there is we are helping these Indian skilled workers, let's say nurses in this sort of case, and we are providing them with a finishing school, which is anywhere between 7 to 8, 9 months long in duration. So a skilled nurse will join into the program, go through the finishing school, and then get trained, and then get the visa and the job opportunity to get deployed internationally. So that's the journey that currently sort of we are taking at Border Plus. So 7 to 9 month program for these workers, but All of them, Shruti, interestingly, will be linked to a job. So they would have a job on the other side, either in Germany, UK, US, etc. That's the entire sort of play that we are currently doing right now.
All right, so that brings me to my next question. Throw some light on your technology. How are you connecting global employers with skilled talent while ensuring that professionals are equipped for success in their new environments? And what are the checks in place so that it's a win-win for both parties?
It's a very good question, because people usually think that this industry does not have any kind of technology requirement, no technology backbone, etc. But the very fact, Shruti, here is that it's a very, I would say, a lifestyle business for most people. So there's absolutely no technology getting used today. And I think if you look at the ecosystem, you know for a fact that many Indians are going abroad and getting placed and getting deployed internationally. But the usage of technology, the usage of any kind of platform is almost negligible or not there. So I think for us, we are focusing on three broad aspects of technology. The first one is purely how the workflow of the candidate and the recruiters end up getting streamlined for them to find the right candidate and for the candidates to find the right job. We are creating and sort of working on opening up ATS, which is the application tracking system, which will connect the two meaningfully, and you can get matched with the right background in the back data set. And the final one, which we're doing interestingly, which is the place where we are most excited about, is training somebody language and cultural skills require a lot of human intervention. And that's why we are working on creating AI agents and AI bots to provide the right training opportunities without getting constrained by the faculty out there in the market who can train somebody something in German. So I think this bot will create environments, create systems, and help people learn the language in a much faster and the right cost structure.
Absolutely. Mayank, as I mentioned earlier, this fundraise marks Border Plus's first external funding round. How do you plan to allocate the $7 million raised?
No, I think for us, the focus is going to be, so we are breaking down into two pools of capital within the 7 million. I think one pool of capital, about 60 to 70% of the overall pool, will be kept for operational and operating expenses. So for building the technology team, for building the platform, for creating the right network in both the places. The entire operating part will take about 60 to 70% of this capital pool. The remaining 30%, Shruti, we are keeping it allocated for potential M&As, whether in the destination markets like Germany, UK, US, etc., or in the source market like India, Philippines, Brazil, and Africa. So we'll look at allocating capital for M&A within that 7 million as well. So that's a broad use case for coming in.
So how soon will we hear of an M&A?
So the M&A will, there's still some time that we are talking actively, folks. I think in the next month or two, we should be able to announce the close of a couple of M&As. So I guess this is the first time it's coming on CNBC-TV18.
Yes.
This is something that hopefully another month or two is what it will take us.
All right, we'll surely keep a track of that. Mayank, but what is the revenue model? How do you plan to make money and gradually turn profitable? Also, if there are some revenue targets and expansion targets that you can share.
Yeah, so the revenue model is very simple. The candidate pays us something, but the key revenue does not come from the candidate payout. Our approach here, Shruti, is that whatever the candidate pays us for going through the language training and the finishing school, we will pay it back. We'll sort of return the money back to the candidate, because we don't want to build a business where we are charging the candidate in the long run. Our broader revenue model is to be, we charge the recruiter or the healthcare institutions who are recruiting candidates from us. So we get the commission from those recruiters directly, and that's what covers the entire cost and the revenue model for us. Outside of that, our cost structure includes the cost of training, the cost of identifying the candidate, and cost of business development in these markets. So we believe that every candidate is going to be profitable. It is about how do we work with those candidates in the long run, and even beyond recruitment, how do we keep them on our payroll, create a large, long-term recurring revenue model.
All right. You know, Mayank, with a strong government push to promote skilled worker mobility and the global healthcare sector, like you mentioned, facing acute workforce shortages, clearly there is massive opportunity for Border Plus, and we wish you the very best for that. Thank you so much for your time on Startup Street.
Thanks.
All right, moving on, a marketplace for home loans. Ambak secured an investment of $7 million in a funding round led by Peak 15 Partners. The fintech expects the recent fundraise to enable it to expand their operations across 35 cities and serve 1 lakh customers. That's not all. It also aims to cross the $1 billion in disbursement mark in FY26. This one-year-old company has managed to serve 15,000 plus home buyers and will serve an additional 35,000 plus customers. Joining me now to discuss the future course of action for the company is co-founder and CEO Raghuveer Malik. Raghuveer, thank you so much for taking time out and being here with us, on Startup Street. Like I mentioned, you started Ambak only a year ago. If you could sort of take us through what made you embark on this journey of starting Ambak and what was the gap that you saw in the market?
Sure. First of all, thank you so much for having me on your show. Look, we're a bunch of people who have worked in financial services businesses and attacked problems related to digital distribution as well as digitization of processes from multiple angles. So my co-founder was the CTO at FreeCharge before this. My other co-founder was the head of offline business for Zest Money. I built a couple of businesses at PB Fintech before this. We embarked upon Ambak because of a simple reason. We knew that affordability of home loans is the key element stopping ownership when it comes to expansion of the mortgage industry in India. And we felt like there is a right time right now to build processes, digital processes, by integrating with the lenders on one side and by working with digital public infrastructure, both on the financial services and real estate elements on the other side, to be able to provide a customer experience which is differentiated and beneficial to the lenders that we work with. So we had started Ambak with this simple goal in mind, to simplify home loans for each and every year.
Absolutely. So all of you coming with like a rich experience in the, fintech space. So as you pointed out, Ambak is streamlining the home loan process. So if you could sort of take us through what you have on offer, more importantly, the efficiencies you're bringing into this process. What's the kind of impact you hope to create?
Sure. So I think the biggest issue in lending today is the connection between 150 plus lenders on one end and customers who have different types of properties and income on the other end. What Ambak is trying to do is form the bridge in the middle. So essentially what we do is we understand the rule engines of the lenders. We have API integrations into several lenders in the country that we work with. On the other hand, what we also understand is how to integrate with fintech players as well as digital public infrastructure to be able to assess an income as well as property fundamentals of a customer to provide the right lending option to that customer. So by doing this, what we essentially impact, ma'am, is the conversion ratio. And by impacting the conversion ratio, on one hand, you impact customer experience. I don't need to go to 5 places to get one loan. And on the other hand, you impact the operating margins of a lender that, I don't need to process 5 cases to approve one loan. That's broadly what Ambak does sitting as a market.
Right. And, in just 12 months, you've served about 15,000 plus home buyers and signed an official partnership with the Delhi Development Authority, right? If you could take us through how you plan to grow this further and, is your model dependent on partnerships like the one you have with the Delhi Development Authority?
So I would not say it's dependent on any one particular authority, but I would say that end of the day, nobody goes to buy a home loan. People go to buy a home. People go to invest in a property. So the builder or the authority or the broker are the primary people associated with the customer trying to purchase the core asset. So to answer the second part of your question more easily, ma'am, we intend to ensure that we expand such partnerships across the country. The first part of the question in terms of how do we plan to grow this? So look, there are 3 elements to our growth strategy right now. Number 1 is providing the option at the customer's footstep. So essentially what Ambak plans to do in the next 1 to 2 years is to expand operations across 35 plus cities. The second element to our growth comes from remaining customer obsessed. What allowed us to get till here is what will allow us to get to the next step, which is ensuring that our loan comparison tools, regional languages, AI bots are improving, day by day. And the third element is to co-create products with the lenders to ensure that we are in a position to provide products that customers demand at the right time, at the right place. So that's broadly how we plan to expand from here.
So that's how you get to the next stage of growth. And I'm assuming that's also how you're going to spend the $7 million that you've raised at this point, right?
Absolutely. I think look, this the way that we look at this industry is that unsecured lending, insurance, and these are sectors that we've been associated with as founders and leadership team for a decade plus, have seen a revolution when it comes to customer experience and banking operating margins, right? The same has not happened in secured loans. So Ambak intends to invest a lot of money on its AI bots, on its AI agents, right? On building regional languages tools, on ensuring end-to-end processing engines in alliance with the lenders that we work with. So yes, we do plan to invest money in geographical expansion and technology build-ups.
Right, absolutely. And if you could just in 10 seconds tell us what are the revenue targets you have for this year?
So we intend to disburse about $1 billion plus of home loans. I think the way that we look at it, our revenue model is to make a commission from the lenders, right? Based on the number of customers that we bring them. What is more important for us, ma'am, though, is to ensure that our customer NPS remains at phenomenal levels. And we are able to ensure a conversion ratio, which is better than what the lender can get if they were working with a traditional distributor in the market. And these are the two goals that we aspire for over the next year to 2 years.
Right. All right, Raghuveer, thank you so much for joining us on the show today. We're completely out of time, but we wish you all the best going forward.
Thank you very much for having me.
On that note, it is time for us to head into a short break. But coming up next, property title search engine platform Landdeed backs $5 million in a Series X round led by 10X Founders Fund. We put its co-founder and CEO on the hot seat to know more about the company's growth plans. Stay tuned.
Welcome back to Startup Street. Property title search engine platform Landdeed has raised $5 million in a Series X funding round led by 10X Founders Fund. Other notable participants in the round include Oliver Young, Paradigm Shift, Pioneer Fund, Jeffrey Epstein, founder of Onboard, and Aaron King, founder of SnapDocs, among many others. Now, this funding is in continuation of Landdeed's seed round in 2023. And to talk to us about the future roadmap at Landdeed, joining us now is its co-founder and CEO, Sanjay Mandava. Also with me, my colleague Arundhati. Sanjay, welcome to Startup Street. First, tell us what this unconventional X round of funding means. Also, this and your earlier seed round were both oversubscribed with existing investors, along with new investors coming on board. What does this mean for you, and what is the current valuation of the company?
Yeah, I appreciate you having me. So Series X was kind of a tongue-in-cheek to say that we don't want to keep on raising forever. I think the best outcome for all stakeholders is if we are able to go public as soon as possible. So at the end of our alphabets, there's a Z. So there's only X, Y, Z. It's kind of like a ticking time clock for my team to show them how far we are away from going public or IPOing. In which case, that's the best outcome for everyone involved, but also somewhat of thinking about how companies today are raising $100 million seed rounds and $200 million pre-seed rounds. So we just thought it was not a Series A, not exactly a seed. It was an investment in optionality, which is AI ML, which didn't have the same traction when we first started the company. So it's a free option to multiply our growth, hence the name Series X.
All right. Hi, Sanjay. Arundhati here. So how close are you to that IPO point?
We're quite some ways away, but we've grown quite fast. So that gives us a lot of optimism. So much of a startup's value is built into the future and not in the past. So it's important to have the right directionality and mindset towards what we're doing. I would say that we internally tell our team that the max we want to do is 3 to 5 years from now as IPO target.
Okay, max 3 to 5 years from now. If you could, sort of quickly tell us about Landdeed. What is the pain point that the company solves for, and what are the offerings, and who is your target audience?
Yeah, that's a great question. So when we speak internally about the problem we're trying to solve, we talk about cutting the red tape, meaning cutting the bureaucracy and navigating that, which is particularly a big roadblocker when it comes to real estate, right? And when we think about how we want to solve it for real estate, we say, look, just like you have a blue tick mark next to your social media profile, we want the same blue tick mark next to properties in India to indicate that they're safe and their title is clean and they're ready for transaction. So our customers include property owners, agents, real estate developers, and legal professionals. So that means helping lawyers get the documents necessary to do a legal opinion, helping banks check the titles of a property so they can lend or give mortgages, helping NBFCs look at the property documentation for dispersals of, let's say, loan against property, and even just agents and brokers to help them pay property electricity bills.
Yeah. Sanjay, let's talk about the fundraise. This new funding lays the foundation for the development of Landdeed Labs, a division dedicated to advancing the company's AI and ML learning capabilities. Elaborate on this and tell us what's in the works, any new offerings that are in the pipeline?
Yeah, absolutely. So when we first started this business, there was 2 ways to quickly verify titles and say that they're safe globally. One is state-backed titles, which is commonly referred to as conclusive titling. So in places like Australia, Singapore, the government verifies that the seller is actually the owner of the property prior to the purchase. So there's a single title deed. And in places like United States of America or UK, there's something called title insurance, where there's a third-party provider that says this title is clean and therefore a bank can lend. The AI ML aspect of it is very interesting. It now provides a third avenue to quickly verifying titles. So for instance, we launched what we call AI TSR, which means title search reports. So within a few minutes to a seconds, you quickly upload property documentation and it can tell you whether that property is clean or not in terms of title. So this helps you get to that blue tick mark faster and theoretically answer the question, why is it possible that you can buy a property today morning in New York City and sell it tomorrow evening, but it's not possible in India? So AI is a very important, tool and in our toolbox, and something that we think can speed up the diligence processing and therefore allow more people to participate in real estate, whether that's buying, selling, lending, whatever that may be.
Right. Absolutely. And, if you could quickly tell us, we're running out of time, you're also looking to hire STEM and technical talent in the country. Is this hiring across multiple levels in the organization and across geographies as well?
Yeah, so we have our office in San Francisco, Hyderabad, and Bangalore. So we typically recruit for the Hyderabad office for the core positions. And yes, we only hire STEM majors for most of our positions. So typically we will not have a BBA or an MBA for our product positions even. The reason for that is we tend to think that there's better connect with our engineering team inside the company. And we have a very strong engineering culture here, and that's what we take pride in. So we hire wherever the best talent comes from. So we have people from the US, we have people from Singapore. I'll hire and I'll go wherever the best talent is and bring them to India to solve the problems for us.
All right, on that note, we'll have to wrap up our conversation. But Sanjay, many thanks for joining us on Startup Street today, and wish you the very best with all your growth plans.
Thank you. Appreciate it. You guys have a good day.
And with that, it's a wrap on this edition of Startup Street. Stay tuned as more news and updates continue right here on CNBC TV18.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions. on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about
we kickstart the India Energy Week 2025.
साल 2030 तक हम 500 गीगावाट रिन्यूएबल एनर्जी कैपेसिटी ऐड करना चाहते हैं।
There has never been a shortage of energy in the world. I mean, not now. There is more than enough energy available.
It's important to understand that energy poverty exists in the world.
Make this transition to clean energy as fast as we can.
Hello and welcome to Commodity Champions. I'm Manisha Gupta and this is a special edition that we bring you from India Energy Week, the third edition, this time happening in Delhi. And we do understand that there are 70,000 people thronging in during this time. There are 700 plus more exhibitors here. There are 20 countries, ministerial ministers who are taking part into this. And we also do understand that there are 10 countries which have put out their exhibition centers here. So it only gets bigger and better. The more important thing is that India Energy Week now is the second largest conglomeration of energy experts coming together in the world. It also is the beginning of the calendar year, so even more important, conversation goes from here. As we talk about India and energy collaboration, energy resilience, transition in sense of energy as well, the one word that continues to reign high, of course, is AI. That is something that has led in various sectors, and AI and energy is something that we have been talking in the same breath as well for some time now. Who best to talk about on that is Mr. Atul Arya. He joins us from S&P Global Commodities. He's Chief Energy Strategist. Atul, hi, thank you so much for joining in. Let's start with AI first. And we've been talking to Minister Puri for the last week and 1 month, building up to India Energy Week. And AI clearly has been a subject that has been a lot talked about. What's your sense on where India stands vis-a-vis the world?
So, well, first of all, Manisha, it's great to be back here in Delhi and talking with you. I think AI is kind of the overarching theme everywhere in the world. You know, if you were in Davos earlier this year, you're going to our event CERAWeek in March, it's going to be AI all the time. So where does AI stand globally? And then I come to India. See, globally, the way I look at AI is in two dimensions. AI for energy and energy for AI. Energy for AI is the big sucking sound, as they say, because it needs so much energy. And that's where they're building all these data centers, mostly in the US, mostly to train the models. Where the big opportunity will be, say, for India, will be actually in using those models for energy for AI. And you know, the AI for energy, I should say. And that's where we have lots of opportunities. And I will keep it very simple and say there is optimization and there is innovation. Optimizing the current energy system and innovating for the future. And both are moving very, very fast.
Talking slightly more about India then, Atul, and as you said, a lot of energy is required when you make AI and especially those data centers. Where do you see India stand in that? And while we speak about so many deadlines and time frames, where do you see this one stand?
Yeah, so I think India, if I were to advise to the minister and to the government, I would say focus more on the application side, because the models will get trained around the world and the models will become available to the companies and the businesses in India. And I'll give you a couple of examples of where India has big opportunities. So, you know, we know that India is already importing a lot of oil. Huge percentage of oil comes, imported oil.
Yes.
Can we apply AI in India to improve the recovery factors from its fields, or improve the efficiency of its operations, or reduce emissions from its operations? All of those things companies are already doing, and there is even a lot more opportunity. And the reason AI is game changer is it can process huge amounts of data and come up with solutions which we as human beings just cannot fathom how quickly that can happen.
So you talked about US, and where else do you see major investments when it comes to AI within the energy sector coming in from?
So around the world, actually, I'll give you a couple of other examples. In Europe, the biggest opportunities in Europe have been focused more on the power side, because one of the other things people are realizing is that, there's all this talk of building lots of transmission lines. I think even in India, as you connect more renewables, you need more transmission. But how about what we call repowering the transmission lines which we have today? And that can be done with sophisticated modeling using AI. So you same transmission line, more electricity will go through them. So that's what Europe is doing. Europe is also doing designing of renewable system where weather is a big factor. You need to know what's going to happen to weather, so how much wind or solar electricity I'm going to produce. And that's also what they're doing as a modeling. And I think India can do all of that. And, for example, not just for the power side, but also say if you're a farmer in India, you can use AI knowledge to have better farming practices. So I think the possibilities are endless. I think one other advantage India has, because India has so many talented young people who know how to do software, who know how to do applications. That's where India has a bigger opportunity, not necessarily in building big data centers, that everybody can do.
Okay. Atul, the other thing that we talk about is energy transition, and that is really theme at India Energy Week this time around as well. With the new US president now coming in, fossil fuels are back up, energy transition also continues. Do you think a balance would be created going forward?
Yeah, I think what has happened is that what I would call is we are going through a more pragmatic approach. And the term we use, which we wrote about last year, was called multi-dimensional transition, and which is what is happening now. So the key is energy for economic growth, and you will hear this more and more. We have a new Secretary of Energy, Chris Wright, coming in the U.S., and his whole focus is on energy access, energy poverty. Interesting for a U.S. Administrator to say that, but the idea is, let's bring energy and help the globe grow. And even the minister today talked about it, Minister Puri, about economic growth and use of energy. So I think we're going to see that focus and more pragmatic approach. It doesn't mean climate change or transition is going to go away, but there will be a realistic approach. By the way, the other thing to keep in mind is that transition has been quite difficult. If you just look at some of the targets, for example, we have in US or in Europe or even in India, green hydrogen. Green hydrogen is really having big challenges in terms of getting the cost down, having the customer. So I think it's going to be a more balanced approach. Fossil fuels will continue to go on, but so will be the renewables.
Oh, clearly, that's the kind of statement that we've heard from various Middle East countries as well, that the fossil fuels for next foreseeable future, which is a couple of decades, is not going anywhere. But in the meantime, and as we talk about energy transition, whether it's about nuclear, which is something that is being talked about so much right now, hydrogen, as you said, and gas, and then a lot of biofuels as well. So while there's investment everywhere, and everywhere people are looking at more cost efficiency here, where do you see a better innovation technology come in?
Yeah, so I think my way I think about this, there are technologies which are what I call bankable today. And in India, there are a number of technologies which are bankable. Solar PV, onshore wind, and also many parts of biofuels value chain are all bankable, meaning you don't need a lot of subsidy or you need some incentives to get it going. But other technologies, particularly hydrogen of all kinds, carbon capture and sequestration, those are really not bankable. They require large subsidies. So in India, there are some projects particularly on CCS and also on hydrogen. I think they're going to take a longer time. And if I'm a private investor, I want something where I can get a return. And these things are, even with incentives, the returns are not very high. So I think we will see a gradual shift. Electric vehicles and storage is where I think is the next big shift happening. More EVs, I see them just being in Delhi for a day, I can see that. And I think we're going to see a lot more of that. And also we're going to see a lot more of stationary storage to help solar and wind become, more continuous for a backup power.
Atul, also the PM in his video speech did talk about on inviting investment rather on battery and storage. Yes. How do you look at that?
I think there is, what I think the government will have to do here is think about the entire value chain. Just take the battery value chain. There are a lot of critical minerals which are not in India, right? So India will have to build the relationships perhaps with countries in Africa or in Latin America to have those minerals come in, and then India can become the processing hub. India has such a huge demand for them. So we heard, the Prime Minister talk about the growth in the PV manufacturing, solar PV. I think the same thing can happen with batteries, but it's going to be a bit more challenging because the raw material for solar PV is very simple. For batteries, you need a lot more minerals than just silicon. So that's where I think we will see. But again, big opportunity for India. And investors will come because it's a huge market. That's what they're looking at.
Absolutely. Ados, this is the first conversation in 2025 in sense of such a huge platform on energy and various aspects of energy. Where do you see this year go ahead from here? Because we've started this year with tariffs and sanctions, and oil price is very volatile. Currencies as well moving in either directions. So what is it that you would want to watch out for?
I think it's going to be a very bumpy road in my view. I mean, we normally, when we talk about the markets. And just look at the oil market. I feel it's like a calm before the storm because there is already the talk about sanctions against Iran. That would be 1 million barrels out of the market like that. Then, of course, there is more production from the U.S., drill, baby, drill. But our view is that's going to be a lot more because the U.S. is fairly well producing as much as it can. And then, of course, the OPEC Plus, which wants to increase its production. And, of course, President Trump is talking about lowering the prices. So there are all these forces. Nobody knows where they're going to go. And as you say, if there is tariffs on energy, like China just put in tariffs on energy from the U.S., that's going to have another imbalancing, really turbulent impact on the market. So it's going to be a very bumpy road. And we will all be watching what happens.
Oh, absolutely. Atul Arya, thank you as always for joining and throwing insights on all of those aspects in energy there. Thank you so much.
Thank you, Manisha, for having me.
Trading day profitable with strategies from the market masters, macro pundits and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
While there is a lot of global turbulence, the levers for growth are completely internal. So there will be some impact. As we have estimated, if there are reciprocal tariffs, and this was done before the headline rates were cut in the budget, if US was to impose the same rates as India imposes on US imports, you would see an impact of about $7 to $8 billion. But I think that number is going to be a lot lower because India, as you must have seen in the budget, has actually cut those numbers. There is, I think, significant global uncertainty. I think there is, the more the uncertainty on investment. And therefore, it makes sense to be a bit cautious on external demand.
As long as we have the domestic flows which are robust, and there the key indicator to watch out for is the SIP flows. I think as long as the SIP flows are adequate or in line with what we are seeing, we have no reason to be worried or concerned about. In 23, we saw total activity of around 15 to 18 billion dollar. In 24, we saw around circa 40 billion dollar. In 25, we could see as high as 50 to 55 billion dollar of sale through various corners. So that's the supply that is going to hit the market.
I'm committed to buying and owning Gaza. As far as us rebuilding it, we may give it to other states in the Middle East to build sections of it. Other people may do it through our auspices, but we're committed to owning it, taking it, and making sure that Hamas doesn't move back. There's nothing to move back into. The place is a demolition site. It'll be, the remainder will be demolished. Everything's demolished. I mean, you can't live in those buildings right now. They're very unsafe.
Welcome back, and we bring this special show from India Energy Week, 3rd edition in Delhi, and joining us for a conversation now is Anish Dey. He's Global Head of Energy and Natural Resources at KPMG. Anish, hi. Difficult times, I must say, because we're looking at such huge volatility and so many things happening at the same time. 2025 did start on a tough note then. I want to start with tariffs, first of all, and retaliatory tariffs and inflation concerns and trade concerns as well. How is energy as a mix treating all of this?
So on energy, you are not going to see major tariffs and retaliatory tariffs as such.
Or direct impact for that
direct
matter.
impacts, because US is a net exporter of energy, which it wasn't like 15 years ago, but now it's a net exporter of energy. And I don't see countries putting tariffs on imports from the US. It's bad politics, bad optics, and honestly, it's going to raise your domestic inflation up. So I don't think, even if you take the case of India, we are, as Minister Puri mentioned today, we are importing substantial amount of energy from the US. I don't see a risk of tariffs directly coming in over there. But I do worry about tariffs more broadly because that has economic impact, uncertainty, the bond markets are on fire, you're seeing inflation concerns being heightened, and all of those are going to have impact on the industry and on certain countries, especially the developing world, given the hardening of the dollar.
What is your sense about the currency? Because that is what you mentioned, and we've seen dollar index very volatile. Look at the Indian rupee itself. I mean, being a major importer of crude and gas, the way the currencies have been moving, and not just these couple of pairs, but major global currencies. How do you see that moving on?
So, you know, Indian currency, if in a steady state, this was a good time for the Indian currency. In fact, there were predictions that even the rupee would harden. We're seeing the opposite because these are like times of uncertainty. So you're going to see it in currency, you're going to see it in gold prices. All of them are, you know, hardening. So that's unfortunate for India because it, given our import basket being so large, it just makes it worse. And it's a cyclical effect which comes in and makes it worse. Just hoping that it corrects and or at least stalls in reasonable time. But it's just a response to the uncertainty which prevails across the world. The more the volatility, the stronger the dollar gets, even if it's because of the US, the stronger the dollar gets and everybody else gets affected.
Well, from talking about technology and data centers and AI and of course renewables, let's talk about the crude oil prices itself because they have been very volatile, and who better to get a conversation on with Vandana Hari of Vanda Insights. Vandana, hi, thank you so much for joining us. And we've seen crude oil prices move all the way around. We've seen sanctions on Russia, conversation about sanctions on Iran as well. How are you looking at prices getting impacted by that?
Great talking to you, Manisha. Thank you for having me. Indeed, I think the oil markets have been whiplashed quite a bit in the first few weeks of the year. So the first big shock was, of course, the Jan 10th US sanctions against Russia. That was a bit unexpected, especially in the extent, the aggressiveness of the sanctions and the extensive nature of the sanctions. Those have created quite a lot of problems for refiners in China and India. Those have reduced the discount for Russian crude, so which is not a happy thing for refiners, especially when refining refining margins have been considerably under pressure. Now, as far as the other turmoil that we have seen, most of it has been caused by the incoming US President Donald Trump. So we've seen that in the form of tariff threats against Canada and Mexico. And while that didn't go through, I think it's worth bearing in mind that it's only been suspended for 30 days.
Right.
Now, you might ask, like, sitting here in Asia, how does that impact us? So it does. I mean, it will ripple out if the US were to impose those tariffs against Canada and Mexico, because they are major crude suppliers to the US. Nearly 70% of US crude imports come from those two countries. If for whatever reason they are not able to compromise in the sense of who will bear the tariff burden, and especially Mexico, Canada not so much, but if Mexico looks to send its crude elsewhere instead of sending it to the US may need to pull crude from farther afield. Asian consumers might see more of Mexican crude coming into Asia. So basically, a lot of uncertainty, Manisha. It's very hard to say which way things will go. So really, my message for policymakers as well as stakeholders in the oil markets will be to remain nimble, to be prepared, to be very, very flexible, and not let sort of anything hit them between the eyes anymore, because that seems to be par for the course for this year.
Well, with that, it's a wrap on day one of India Energy Week, third edition here in Delhi. But before we put curtains down, here's this very interesting, innovative stuff that my colleague Abhimanyu Sharma got around within the exhibition areas. Let's watch that.
Ran out of cooking fuel at home or heading out camping for a few days? This AI-enabled vending machine for LPG cylinders may just come to your rescue. Jointly developed by Bharat Petroleum and Chennai-based LIFO Technologies, there's already one such LPG ATM functioning in Bengaluru, which can store up to 20 cylinders of 5 kg each at a time. It accepts only authorized and non-damaged cylinders and also enables refill of empty cylinders. Currently operated by distributors, the initiative is awaiting PESO's nod to further scale up capacity of such vending machines to make them more viable and visible across the country. The use of compressed natural gas or CNG is being encouraged across the world as a relatively cleaner fuel. Imagine producing energy out of mere transport of this fuel across the country. This is a model of free-spin inline turbo expander by the American company Sapphire Technologies, which is soon going to be used in India. This helps reduce gas pressure and capture the energy lost in pressure reduction at various stages of gas processing and distribution to allow for power generation. At full capacity, one such unit can generate up to 7 megawatts of clean energy per day and can possibly recover its cost in a period of 2.5 to 3 years from installation.
We'll make it into a very good site for future development by somebody.
Mr. Speaker, sir, with your permission, may I ask a slightly different question pertaining to gold? In the year 1971, Richard Nixon, who was then President of the United States of America, gave up the gold standard. After that, gold was hardly considered to be a serious financial asset. In 2006, gold constituted only 6% of the reserves of the central banks of the world. In the year 2024, it is up to 11%. China, India, Poland, Turkey are the most aggressive buyers. Even in India, there has been a surge in the domestic price of gold. My question to the Honorable Minister is that this shift away from the dollar to gold, does it indicate a renewed search for an alternative international settlement mechanism, de-horse the dollar? That's my question to the Minister.
So the Honourable Member, has he himself mentioned that it is not the core part of the question, but he's still asking, and I would certainly like to give my brief answer on it. India's, as he observed rightly, the demand for gold in India has not come down. On the contrary, it's going up. And I would think it is very typical of India, particularly for households or small businesses, and it is normally said women, but general households also and women also, to invest in gold because they think it's far more